a tube. So we have it set in place. All right. Thanks, Oprah Brandon, again for reminding me, because I think I looked down in the chat real quick too, because I was that information was moving across my head really fast. All right, so yeah, we're ready to rock. We're ready to rock. All right. So again, just kind of doubling back on what I was just saying, and in essence to how the markets have been able to feed at the trough of the Feds for quite some time now. Again, we're going back to February of last year. More importantly, we'll say March, when they really began to really open up, right? We had that bazooka moment when they, dumped that $1 trillion in one day in the market, right? On the March COVID lows, right? It's like March 23rd, right? I always keep saying I never forget that day, because the first time I ever seen something like that in my, tenure in the markets, where $1 trillion went into the market, literally doing pre-market, not doing intraday. It went up. They dumped the $1 trillion during the pre-market on that date, where SP 500 had hit 218. It was steady dumping. It was the bottom was going to fall out of it that day too, and they had to do something, right? It's either that or let it unravel, right? And they was not willing to allow that to happen in this, to try to save face in front of China and Europe and Russia and all these other places like that. And again, in came that that big bazooka, the helicopter money, where they pumped the $1 trillion, right? And it basically went from 218 up to like 220 plus in literally like one candle, right? And it was just one big long green bullish engulfing candle in the markets. Like, okay, we're back. And hedge funds and people who who are privy to knowing exactly how these things work, because they've been in the game long enough to realize that, they instantly just start buying hand over fist, right? A lot of them they jump right at the growth stocks first, because these are the ones who have bigger moats. We talked about that. Companies who have big balance sheets, cash flow in hand. Of course, they're always going to be looked at as a more safer place, because they're providing, what the average investor sees as a level of security, right? They got name brand recognition, got product value, they got money on the books, and they have still the potential of growth right ahead of them. So the growth stocks became, the catalyst for keeping the markets, up and excited for most people to stay invested, right? Beyond the other stuff, we eventually began to see how they was playing the markets from a defensive perspective by buying a lot of the consumer staples, right? Consumer discretionary items here and there, but consumer staples really was the backbone. And some people say utilities as well, but people had to have the toilet paper, right? Paper towels, right? Toothpaste, all that stuff, right? All that stuff was coming strictly out of the consumer staple side of the house, right? Because that's what everybody was running in the store to get, right? Shelves were empty a lot from bleach wipes, shorts, the shelves were empty from Lysol and all that stuff. But all those things that you could get, like soap, toothpaste, all that stuff, that stuff was flying off the shelves. All right. So Costco, of course, y'all remember Costco just went through the moon, right? Through the moon, not on the moon, but through the moon. And it was just running, right? And a lot of other stocks like Procter and Gamble, Unilever here and there, and many others, right? Food ones like that go some of the grocery stores, whatever, Walmart here and there, Target. But in saying all that, of course, again, that's how markets work, right? When volatility, and that was during a volatile time too, because the volatility index itself had began to creep up, of course, right? Because the market was dumping, right? So that was their best chance to kind of quell that volatility, right? To subdue it, because if it got, left unchecked, volatility will wreak havoc in markets, right? It's kind of like how we kind of looking at the virus, right? For what it's worth, right? Left unchecked, of course, it can wreak havoc. Well, it's the same, mentality when it comes to volatility. Volatility is not necessarily even a bad thing, right? To a lot of people, it's bad. Why? Because they don't have the certainty of, allowing their position to move freely unchecked, right? Whether or not the algos are respected to that particular company over another, right? In terms of PE, right? Price to equity ratios, if they're high, 4Ps are really expanded and already maxed out for a particular, incoming year. So they're getting paid up front, essentially, when we say that. When you afford PE, they're giving these companies the opportunity to get paid up front of a valuation that they're going to grow into. Well, we had that coming out of 2019. See, that's what a lot of people fail to realize too, because we were still dealing with what? Tariffs, right? And so the Fed started cutting rates, right? Cutting rates, right? In 2018, 2019. And that kind of spurred the idea that we were going to be protected, right? In some cases, at least from, the juggernaut of what the tariffs could, eventually end up being if they just kind of went back and forth, which they were doing, right? Trump and President Xi of China were going back and forth, whatever. And, it was causing a lot of stocks that were, subjected to China because they get most of their product from China, again, like Nike, Apple, right? Some of those stocks like that, some of these chip companies, they were just in trouble. A lot of retail companies were in trouble. Macy's, because a lot of their products were coming from overseas, right? So that's what happens when you outsource, right? So expose a lot of them companies for what, for who they were and what they were. But yet and still, again, markets try to even that playing field by even trying to throw them a life preserver, right? And it's weird how that works, right? Like, again, the whole operative of investing period is what? Sink or swim, right? You have to learn how to sink or you're going to, learn how to swim or you're going to sink, right? But that's not the case for corporate America, right? They don't play by that rule somewhat, right? They are more than able to be bailed out than, allowed to just sink. Again, this is bad management. This is bad fiduciary responsibilities. This all that and then some, but they still have the right to kind of play into, being able to be bailed out if it gets really bad, right? Taxpayers without their consent. Again, last time I checked, neither one of us has ever gone to a poll or vote. They never sent none out on the census saying that, in the event we have any kind of economic collapse, GDP recession or whatever, do you opt in being able to pay it for your future taxes to bail out the, companies in American stock market? I've yet to see that on the census. I've yet to see that on, a polling vote, paperwork coming to mail for your state. Until that happens, then please somebody, convince me how Congress making that decision for your money, right? Your future debt is going to be, again, exacerbated by the idea that it's going to keep interest rates somewhat, working against you in most cases, because again, if doing boom cycles, they lower interest rate and you already kind of gutted because we had a bad economic collapse, then you can't even really borrow a lot of money at that point, unless you're just going to, add on more debt, right? Because if your income is dried up, how can you balance that out in terms of your debt to equity ratio? You cannot, right? Unless you have multiple streams of income, of course, that's what we talk about here, it's importance of that. But that's how it gets sticky, right? So tonight's topic, of course, we've talked about it several times, planning for growth, right? Planning for growth. Well, if the corporations can do it, at a point where they're just constantly saying, you know what, void of all this other stuff that, a lot of people worry about as far as markets, we're just going to stay, invested in the opportunity of, people feel like there's no other alternative out there, Tina, right? There is no other alternative. And so therefore, we're going to keep our foot, on the pedal. Now, of course, markets can be an amusement of musical chairs at point, where, the chair gets pulled from underneath some people, depends on what stocks they are in, because they just rode the gravy train for a little too long, right? Now, that's a good thing for a lot of ways, because again, we're talking about stocks that are up 70, 80%, 200%, 300%, 400% since the COVID lows. These are companies that were basically maybe at a 10 or 12 PE when the average standard of the best one in that sector or industry was sitting at like a 27. So they were kind of already treading water, but now they just got a life preserver, again, to just really take all this low, cheap cash that's pumped into the markets and go R&D with it, right? Which a lot of them wasn't anyway. They were just using it for, to keep, at least employees paid and, which reflected the value of them having a better EPS, because, that was money that they didn't really plan for in terms of growth. Innovative values that should be. All right. So planning for growth and as an investor, as a trader, because there's both, right? Because some people, well, how can you plan for growth as a trader? Well, obviously you can, right? Because you're still taking day-to-day action for what it's worth, and you're being able to plug, and play where you see the best setups that works for you as far as market weakness and also market strength, right? Case in point, looking at my screen right here, we have DocuSign up, right? DocuSign had earnings tonight, right? Clearly, everybody see what's going on here, right? It was at $230 yesterday or today, right? Right? And now it's at 164. right? 164 and potentially going lower. Now, one would say, what caused that, right? What caused that drop, right? Like woo, 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 right? Clearly we have, Houston, there's a problem, right? Well, nine times out of 10, when we have drops like that, it's a binary event, right? It's an on or off switch reality. Something caused that. Something triggered that. And DocuSign's perspective, they had earnings tonight, right? This was their Q3 earnings report. Now, just asking you guys that's on the panel here, of course, anybody on the back side YouTube want to follow on, you guys can. Of course, we're in the training session side of things. But, if one look at this drop here, this level of expansion here, this obvious aspect of volatility, right? One would surmise that what happened with the earnings report, was it a good earnings report or a bad earnings report? And what would you guys say? Was this a good earnings report or a bad earnings report that caused this drop? Anybody? You say bad, everyone?
Yeah.
You say bad, right? So how can a good report cause this, right? But it happens, right? We've seen that happen a lot, where companies do good numbers and the stock still what? Stock still drops, right? So that's another part of volatility that a lot of people, sometimes they forget to look that deep into the ideal of why, right? And a lot of it can be just like I was talking about earlier, how I kind of prefaced this conversation, that these companies are very highly liquid in terms of future forward valuations, and they're very rich. Right? They have a very rich premium already attached to them, right? Going into these particular earnings. And at a point where you just say, okay, it may be time to take some profit. Again, we're talking about stocks that went from, literally peanut prices to, peanut brittle prices, right? Right? When you add all the sugar and the caramel, all the other stuff that go into a peanut brittle, right? That's the markets, right? So again, just putting that in the context. Look at this right here. Right? Let's do this right here. Let's go to, let's do that. Let's go that route, right? Let's go, how crazy this stuff is. Let's go 2020. So, and then let's go February, right? Let's go on and make it like the COVID lows, the kind of the marquee perspective, right? Now when you do it that way, it draws, it brings perspective, right? So this is the COVID lows, March lows. This asset was $68. From that idea that it was a stay-at-home economy-driven, environment that we were all subjected to because quarantine, everybody locked in. This stock saw exponential growth because of that. Not so much that it was just the Fed backstopping a lot of stocks for, low interest rate that they could borrow money against. They needed it. This stock was somewhat tailored towards being able to accommodate business models to work from home, right? DocuSign, right? Of course, we know what's going on with DocuSign. We know what DocuSign does. Anybody doesn't know what DocuSign do by any chance, before we go deep into this a little bit? Anybody unsure what DocuSign do? Anybody? Everybody know what DocuSign does, right? At least have an understanding of what their business model is, right?
Right.
Right. So everybody's solid there. So, of course, this is a stay-at-home stock. This is a stay-at-home, as they call, stay-at-home stock, like a Zoom, Peloton, all those ones that went crazy. DocuSign was one of the ones, right? Because this is the way you get basically what authentication of documents signed online, protected, secured, and all that, where you can still conduct high levels of business, from your home, your living room.
Right. It's real big because of the PPP, EIDL, and all that government money. Easy way to get people to sign.
Exactly. Right. And you obviously being a participant within that space, understanding how the grant world work, and even more so when they start to pass out those loans, and the grants, whatever, that authentication process, kind of like how if you're trading crypto, it'd be the KYC, right? Know your client, right? Verification, all that stuff, but also documentation, right? So yeah, they were like, the court, the county clerk, court, excuse me, at your local neighborhood that was handling everything online. You had to go in and see the clerk this time. They had to do it all online, right? Sign your paperwork. But anyway, they were very big beneficiaries of what? A stay-at-home economy. And the stock is reflecting of that. Again, $68 and ran all the way up to like 300 and change, right? Up near $320 almost. Keep in mind, guys, that happened in a matter of what? 1 year, right? 1 year. And then what? 7, 8 months. The stock went up over what? Near 500%, right? Close to 500% in a year and 8 months. Make that make sense, guys. That's the part of when people plan for growth and they're trading into opportunity, right? No matter what, the ultimate, timeline or white paper or perspective valuation of how this company feel they're going to grow into the future, right? This was, they got pretty much all their bells and whistles up front as a kind of, new company. Now, DocuSign haven't been in business all that long too, right? They just IPO'd I want to say 2019, if I'm not mistaken, right? So they're fairly new, right, to this whole market reality. And they came in at a time when it was just like, what? Like, this was like the best time ever. Like, this is the best thing ever. That kind of mentality, right? And the stock basically went from $68. Well, again, if we go back further than that, then you'll see, right? Just case in point, let's just do it this way, just for the sake of understanding it. When we talk about growth, what growth looks like, right? 2018, the asset was at about 30 some odd dollars, right? And again, now let's say 3 years later, right? If we want to say that, 3 years later, it went up and hit a high of what? $300, right? Now, all this time when the stock was just kind of going sideways, stuck with this little trend here, $40, $60, $50, back and forth, that little $20 channel before it broke out. Literally, it was on a $20 channel, give or take, before it broke out. Because of COVID, of course, the whole issue with that, the virus, the stock was just, a long-term investor's, dream, right? In a lot of ways, right? Of course, it had growth potential in it because even without COVID, there's a need for what? Online documentation, right? Authentication, obviously, right? Because we do collect a lot of business online now. We do, right? Homes and again, people are purchasing houses and stuff that even when you rent and stuff, that stuff makes it online. They got portals that's designed just for that, where they, authentication, stuff like that. DocuSign is one of those companies that, benefits from that, phenomenally, right? And then came COVID. So, wow, everybody had a need for them, right? Everybody had a need for them. And the stock just went, through the moon. So this pullback you're getting right now because of the earnings report is not so much that the number was just bad, but more so the fact that the stay-at-home reality of a lot of these stocks that just got highly, highly overbought, highly, highly overvalued. Well, algos and those hedge funds are starting to ring the register. Why? Because we're also coming up at the end of the year. This is the time of year where you also have that influx of people starting to do what? Realize what? Gains, right? It's starting to realize gains, or affectionately known as, or technically known as, I should say, tax loss harvesting. Now, in this case, coming from down here to up here, that's not necessarily what? Registering a loss, right? That's just ringing the register. But nonetheless, they're willing to pay those capital gain taxes, right? And lock in some of that profit, ahead of, the fiscal calendar kind of running out on this perspective of the tax side. And they're fine with that. And those who, I don't know, let's say if you bought, just recently here in June, right? June, July at 300, yeah, you might be tax loss harvesting, right? Because as of today, of course, the stock plummeted, right? From 230 down to 164. But even if they was holding the bag still up there, thinking, we'll get a bounce at some point. All right, this new, Omicron virus might cause a problem here. Yeah, we might need to sit, be back, in full swing business again, like, hyper business because of everybody running back home. But a lot of these nations came out basically and said, guess what? We're not, if anything, we're going to do our best not to lock down, right? Now, we may lock our borders down, but we're not going to shut down our economy, is what I'm saying, right? Some of them out there doing it, but it's not at the level where it's going to affect everybody at this point, right? So again, that's why these stocks are coming down. That's why they're starting to, backpedal a little bit, right? To the average investor that got in up here at the top, yeah, they feeling that right now, especially today, right? That's a, that's a doozy, right? That's $164 off your entry point if you bought anywhere in at $300, right? That hurts, right? That hurts, especially after tonight's, of course, the earnings release that caused this pullback, right? But from a chart perspective, you came late to this, you started to say, okay, well, hey, all right, I see what's going on here. This might be, an opportunity, if people show up like they want, like they want to do something here, I may can catch me a nice little buy, right? But I would say this in the same breath. It's a reason why it's down, right? It's a reason why it's coming back down. And I'm just using just this before I even go to trading view, but the VWAP on this thing on the weekly sits at around about $142 odd dollars, $46. So apparently market makers, hedge funds, whatever, whomever, they're potentially trying to take it there, right? At this point, you this close, right? You this close, right? You this close. Chances are that you may hit that, right? You coming down to that VWAP. Now on the 200-day moving average, we can see what that looks like in perspective to that and see whether or not, of course, we probably already lost it. The 200 at this point on the daily, I would be more than, before I even really go deep into that and look, I'm already, right? So let me click over here real quick here. Bear with me, guys. Again, thank y'all for tuning in to as well. Everybody, that was able to, find time to get in for tonight's session. Appreciate you all, of course. I know we're still trying to bounce ourselves from the holiday, right? I know everybody don't celebrate it, but it's like anything, your body and your mind just kind of goes at ease during these moments because we've been kind of programmed for them. But definitely appreciate you all for tuning in. All right, so right here, you see clearly what's going on here, right? It was already obviously in a downtrend because the broader market itself was in a downtrend, spiral, that stuff. A lot of these, again, stay-at-home stocks were getting, taken to the woodshed, right? They were starting to peak essentially, right? And it was pulling back. So here you was already at the bottom of the linear regression band here going into, coming into today. And then you had like a small little pop, they tried to, play the bottom of it today, right? Some people trying to get out, maybe hedge funds kind of knew what was up, right? And then they just let the bottom fall out of it, right? So you kind of played within this daily candle, opening up around about 230. You hit a high around about 235. 236 basically, they'll say about 5-6 points. And then, after that, well, after hours, of course, lights out, all right? We way down here with this little blue line, say, post market down here, this blue line, right? We all the way back down there. So we playing support points, or we hitting support points in around this area right here as of now, right? So the next candle will be to take out this big bullish engulfing candle right here. Let me blow that up so you guys can see clearly here what I'm doing here, right? Take out this candle right here, this big bullish engulfing candle right here. That puts it around about 153, right? And then you're going to kind of meander around this level of support here around that so-called VWAP that we saw on the weekly, around about 145, 146, right? So again, a small little gap there. You got a wick there, but a small gap there. That gap there still can be filled. So yeah, there's opportunity still left in this thing to probably kind of correct itself a little bit more, right? A little bit more. Right. And here, way down here, that's just really saying, okay, yeah, we back to kind of like, square one, right? I think, based upon their price to book, price to sales, whatever, if I go look at their, a little bit of the fundamental side of thing, they probably still richly priced, but Wall Street will make a case that they probably worth at least $90 to $100, of course, right now it's at 300. It was at 300. Now it's back down to 160 now after hours, but yeah, that's just how this stuff works, right? That's how markets work. They always going to try to, pay it forward, right? Ain't that something? Imagine they give y'all that kind of privilege on your job. They're like, hey, Sister Shanika, we're going to go and pay you, 10 years in advance for work that you done just only a week ago, right? So yeah, you may be working, worth 100,000, but we're going to go ahead and pay you, $1 million, this pay fiscal calendar, right? You be like, oh, that's nice, right? This is nice. I love, give me that $1 million up front, right? Right? You don't know if you're gonna plan to quit it. No, they cut that check. Check already cut at that point, right? But that's essentially how these companies operate. They're getting that kind of flush, flush of cash up front in terms of their valuation, right? That's what makes publicly traded companies, right? Or people go public under the auspice that they realize that, it's just an unlimited tap of, crowdfunding for people who believe in their business model that says that they may have a growth potential within them. So when we look to assess growth as as an investor, right? Well, that's what we're looking for too, right? What's the potential value that this company may go out there and make things happen, right? Right? Over a period, let's say if you got a 2-year window, a 5-year window, a 10-year window. Again, DocuSign got all that and then some in under a year and 8 months. For $40, well, if you go back at $40, like 3 years, but just the COVID lows in March or February 2020 at 60 some odd dollars a share, all the way up to 300. That's about 400-500%. I mean, as soon as you heard that we was going to be getting locked down, right, because of COVID, instantly light bulb goes off. Yeah, this company going to be very valuable. Like who's not going to be able to, who's going to not need them? Like everybody going to need them, right? For documents, right? To get signed, all this stuff, right? See, that's how Wall Street thinks. That's how hedge funds think. That's how we need to start thinking. We move right, just like everybody else move, under the understanding that these potential, scenarios bring about growth. Chaotic moments always bring about growth, right? That's how markets work. It's nothing personal. It's nothing, ethical to that level about it, because you say to yourself, well, I mean, this is a DocuSign company. It's not like it's a company selling guns or something like that, pistols, but y'all get my point. You're not going to tell yourself, okay, well, oh man, our stock is going up, man, because everybody want to utilize our services, but we're just a little too rich right now, right? Rarely do people say that when they're making money. Rarely. Now you may know it in the back of your head, like this is just too much, because I can assure you, when this move right here began to happen, see right here, basically during that time frame when that stock started stretching out from this point here, right? Again, we're talking about the COVID lows, right? March lows here, hit 67. And then after that, you had almost a beeline straight up. So for March, literally March, end of March to July, from March to July, that's what, 3 months? This stock went from $67 all the way up to like $220. That part, right? That part. And then after that, it just consolidated again, right? You had this long chop, consolidation, accumulation, right? Presenting itself, kind of, finding support up at around those points, right? Coming down no lower than 180, right? And then rocketed on higher and then picked up another 100 points. And now we're kind of just starting to kind of pull back a little bit, right? After this latest drop in earnings. Now look at this blue line again. This is where we're at now, post-market, because of earnings. Now we're back down to a point where we're just kind of taking out all this right here, extra little, gravy on top, so to speak, right? From this last, pull, them pulling the market forward through, the need to have companies like this, providing a service during a stay-at-home environment, like which we were dealing with. Again, Peloton, y'all know the name of those companies that were killing it. Zoom, right? Teladoc, right? They were killing it, right? They were killing it because there was a need for their services at a heightened level because of that. Now that seems to be somewhat, being subdued a little bit because, there's, of course, the shots or the jab, if you're getting that, right? There's the pills coming out now for the help against these viruses. So people are trying to say, we must rather, fight to get back to normalcy than to play, back into the, to the ground game of being locked down and then just waiting things out. No, people want to get out and about. So they'd rather go do business face to face if they can, or, just enjoy life. So anyway, that puts pressure on these kind of companies like this here. Right. So this is what we're talking about when we're talking about planning for growth, right? When certain stocks have their moment, because there's a very relevant use case, then guess what? We mash the gas pedal. I can assure you, we talked about DocuSign, right? We talked about a lot of stocks back then during that time. I'm almost certain we did, right? We got audio and video to prove that. When we talked about these kind of stay-at-home stocks, the stocks that may benefit from a stay-at-home environment, DocuSign was one of them. It's weird when you look back in hindsight and you say, man, we covered this. And, the first thing you say to yourself, well, I wonder how many people, took advantage of this opportunity, right? Because hindsight is 2020, but again, that's why you forward think opportunity into place or into practice based upon being able to connect the dots, right? That's a part of what? Planning for growth. Not rocket science, guys. Again, you can't convince me that you guys are not competent, capable to be able to do just that. Regardless if you play the market day to day or if you just kind of in passing, but you're picking up a lot of what? Useful information and intel to kind of see how markets work, right? And, Wall Street is greedy for a reason. These people greedy. They greedy, especially after what this witness after this past, wealth heist or wealth transfer from the feds, right? That has caused all the other problems that we're dealing with now today, which we talked about before too, right? This is the backdrop of being what? Extra greedy, over greedy, right? Inflation kicking everybody in the teeth now, right? But it's only really hurting people who are already kind of what, kind of check, kind of really balancing their books, and living a more frugal life. It's hurting them. But the people who benefit from the stock market, you think they crying about to pay an extra couple dollars at the gallon, at the tank, for gallons of gas, 80 some extra cent for, for a slab of bacon, dollar plus for, extra gallon of milk. You think they're really crying about that? I mean, unless they just greedy like that, Scrooge McDuck style. I mean, I don't even want to pay that. They sitting on billions of dollars. Again, I'm going to get you sucker, right? You go into the shop, let me get one order of ribs. One order of ribs. No, I mean one rib. One rib, right? Dude, like one rib. You want one rib? No, not an order rib. You want one rib. Yeah, I want one rib. Well, one rib will cost you about $1. $1. He lost his mind because he's gonna charge him $1 for one rib, not even a slab. This is, that's how greed thinks sometimes too, though, right? But they're not concerned about it, is my point, to that level where inflation is really making their lives, a little bit more challenging, like it is for a lot of people on Main Street, because they attacked growth with the understanding that these are opportunities that come around, they come around far and few between, but when they do, they're ready. Why? Because they witnessed them in the past. You see how that worked? History repeats itself in markets. I repeat, history repeats itself in markets. Stop, I would tell you, don't convince yourself otherwise. That's how this game works. Markets love chaotic moments. They call it what? Climbing the wall of what? Y'all know how the saying goes, right? Somebody finish that off. Climbing the wall of what?
Worry.
The wall of worry. Wall Street loves worry. It's a reason for them to buy. It's something about them trying to show everybody that, oh, we bigger than, we bad, we ain't gonna fail. It's that kind of mentality, that entitlement mindset. It makes no sense fundamentally in some cases, of course, but the market is such, disconnected from reality, and we just really trading on a whole lot of, bravado more so than brain power right now, that they're gonna buy the dip most of anything, regardless of all the peak, instruments that are telling things overbought, we overheating, over accessorizing, we over this, hyper this. They care less. Why? Because if they have enough people to play, in this case, let's run over to the SP 500, just kind of use the backdrop here. If they got people still feeling like they're willing to pay to play for these high evaluations, despite a cooling of the economy going forward, because we are going to hit a cooling point next year. Mark my words, right? Book it, Dano, as they say. We're going to hit a cooling point next year. Not so much. Well, we already know that the Feds are already making that known, right? They finna start slowing down the taper. They finna double up on their taper to kind of wind it down faster, because inflation is getting away from them more than they probably even planned for. Even though they probably was okay with it anyway, because they feel like, hey, the money that we pumped into the stock market has served what? Wealthy corporations, investment, gainfully employed people very well. We backstop most people 401ks. That's the least we could do in terms of protecting America during a pandemic outbreak. Now notice that they speaking specific to people who are at what? Asset ownership. What about the other people out there? The let's say what is it? How many people they say invested in the market for Main Street basis? I think it's around about 11 to 12% people. Let that marinate. Only 11 to 12% of American population is invested in the stock market, meaning on the retail side. Everything else is institutional money. And out of that 11%, how many of y'all think y'all family members, friends, cousins, peers also invested in the markets? Probably none. Y'all probably the only ones, right? Because they're looking at you like, man, give me some investment advice, right? Well, let that marinate. So all that money that was being made, that was made, that money went to what? Wealthy people, rich people. And then some of us, because we partake in this opportunity or partake in the opportunity. Whether we seen this coming or not, right? Whether we were, new to this or not, this is history repeating itself, because the last scenario was the subprime lending crash, 2008, right? 2009, when the market crashed, and then guess what happened? They backed the truck up, the brink truck that is, and dumped cash all into Wall Street. And who benefited from it then? Those who understood the previous crash before that this is the buying opportunity. Because the Feds came out pretty much and told everybody, yeah, we finna backstop market. We finna do a lot of quantitative easing. Basically means when you do quantitative easing, that means they're doing what? Repo operations, reverse repo operations. They're dumping money in the market by backstopping bonds, by taking bonds from banks. That's what you do when they do a reverse. They take their bonds, exchange it for cash. Banks, hedge funds, fund managers take that cash and go do what with it? Give out loans? Well, how about they go buy the market? Right? They go by the market with that money for the most part, enriching themselves even more. So this is the game of America, and when it comes to economics, this is the game that they play. So in essence, for us to play ball thoroughly, we have to start learning how to plan for growth the same way. Now, this is not, again, this or that, or this is all you got. No, that's not how this stuff works, right? This is not how this stuff works, right? You could do many things, a multiplicity of things in terms of being able to acquire wealth or riches or money or income streams, whatever, right? But for the most part, you want to make sure that you're in the driver's seat much as possible and not have, too many hands in the pot, right? Because that can really mess up opportunity in business and growth, right? That's why a lot of people love the stock market. Why? Because it's just you against the market. There's no middleman in the way of you being able to hit your thing, right? You have to wait on somebody to wake up in the morning, to come in, to start strategizing how to figure out how y'all can get this money. You wake up, 4 a.m. in the morning, cut on your cell phone, laptop, computer, whatever, and you can get to making money right then and there. Find these, opportunities, stocks that may be running for whatever reason, news, continuation from the day before. Get you a nice little bag, of course, under the rules of engagement, knowing what you're doing. Roll back over, go to bed, by 5 a.m., 6 a.m., and then you done, literally, for the day. You wake up 11, 12, like, hey, what we're doing right now, right? You're not moving, like everybody else is on a robotic clock and calendar. See, that's just a part of, what makes this also engaging, right? Because you say to yourself, well, I can wake up today and make me, $1,000, right? And I could do that within maybe an hour legally. And you're done for the day, literally. You can do whatever you want, right? Everybody else still trying to work, watch hour for hour on the time clock to get, $50, $60, $100 an hour, whatever they make, $200 an hour. That's a mental mind sweep like none other. Like, you don't walk away from that if you're in a position to be successful at that, right? Meaning you given the time to learn that. You don't walk away from that just to say, I'm going to go punch somebody clock just for the heck of it. Rarely, right? Rarely do that happen. Right? Again, but that's also another understanding of how you can plan for growth through using markets, moments like these to help you hit those kind of moments, or hit those kind of levels of opportunity. Because right now we're dealing with a whole lot of volatility, right? What do volatility do to markets, right? That's a question I'm posing to everybody right now. What does volatility do to markets? Anybody? What does volatility do to markets? Anybody, scream, right? What does volatility do to markets?
Creates opportunities.
It creates opportunities, right? What kind of opportunities, if you don't mind me asking, Oba?
Opportunity for individuals to You get a bag or lose a bag.
Right. And the reason why, you know, we put it in that perspective, right? Because see, volatility basically means what? We're going to destabilize a lot of converging trades that are maybe tied to, you know, certain indices, you know, exchanges, whatever. And now those who cannot hold their weight, right? They're going to be picked off. If they're overbought scenario, they're going to get hit hard. Some of the stocks that may be oversold, they may get a chance to get a bounce, or they might go down further, right? Now it's a game of, right, you know, what your, you know, your back door look like, what your house look like, right? You know, when you're young, you got company coming over, right? Your mom like, don't have nobody in my house ain't clean, right? You can get everybody sprayed with a belt or a switch, right? You come in the house like, my house, you got people in my house, what? Everybody finna run up out of there, right? This is the reality of that, right? If they house ain't together, they're gonna get hit, right? They're gonna get hit first too. Why? Because that's what algos are doing. They're seeking out these weaklings, right? Or they seek out the strong too. They go to the diametric opposite in both spectrum. They're gonna go for the extremely strong, and they're gonna look for the extremely weak first. They're not gonna play the middle, right? Because the middle game or the neutral game is what they call the low beta game. That's the trading methodically and creeping up to the, you know, up to the upside without a whole lot of volatility, up and down whipsaw action, right? That's a good trade, 45-degree angle. When volatility kicks in, well, it's a search and seizure kind of marketplace. It's going after stocks that are overbought, typically are frothy, that are already high premiums, right? Because these are places where people gonna say, you know what, it's time for me to ring the register right now, because the volatility ideal of, you know, of markets starting to kind of wake up, where people might be, you know, emotionally compromised, because that's what causes people to sell. They become emotionally compromised and they sell, you know, because they had a chance to really evaluate their risk, and they just sell, or they stop loss to get triggered. That may cause a domino effect. Or the same way, if you're shorting and the stock is getting ready to break out because it's been oversold for quite a while, and the volatility market value where they're looking for now value stocks as opposed to growth, guess what happens? Those short sales have to have to hurry up and cover their short sale and get out of there quick, or they're gonna get short squeezed. See how that works? It can go both ways, right? The devil's in the detail of understanding where to find these opportunities, though, right? Which stocks will give you just that, right? And so the dollar, right, you know, the DXY course, right, is also an extension of the volatility, right? They kind of work hand in hand to a degree. If the VIX is running up, the dollar gonna be moving upward too, in most cases. The dollar has been on a tear, right? Ever since we hit the $89 low point. I think I was telling Sister Camille that, Sister Drummett, she was like, I think we're gonna crack, we're gonna blow below that 89, brother OBE. We're gonna go lower. I said, I don't know, Eve, I think we're gonna bounce around 89. I don't think they're gonna let the dollar go any more lower than that, right? I think they make their case with, you know, with how they were just pumping a lot of money, you know, from the feds and all that. But at some point, you still got to stabilize your currency too, right? Because the exchange value in terms of how it will undercut a lot of American businesses by having a too cheap a dollar can be problematic for your GDP and your growth too, right? True story, right? So, you know, right off that pivot point, you know, it bounced, and, you know, of course, the dollar haven't looked back. It played up the 200-day moving average like a boss here, as you see, tested here. After that, it rolled out. And now we're back to a point where we're finna get ready to take out or bump up against some more notable resistance that used to be old support at around this $97 area, right? Because as you see there, that's a big chop zone area there at around that $97 area. Look at that line right there, right? If we to do a line through there, right? Let's put it round about right, and we'll do it right here. That's a big old chop zone in the dollar, right? The DXY, right? So all my Forex traders, you guys seeing this stuff, y'all know exactly what's going on here, right? If the dollar gets to breaking out and get strong, what that's going to do with some of the other currency pairs, right? They're going to be in trouble. Look what the Turkish lira doing right now. Turkish lira is getting killed, right? Their economy is pretty much tanking, right? The Turkish lira is getting killed, right? Let me stress that all the way out, right? They're getting, I mean, it's getting decimated, right? Couldn't make this stuff up, right? Right? It's getting decimated, right? And then you look at this pattern here, all you see is one big old what kind of pattern is that right there, guys? In terms of the dollar. What do y'all see right there as far as a pattern with the dollar right now on the daily chart?
Cup.
What is over?
Cup and handle.
There it is, right? There it is. Big old fry pan bottom, big old cup pattern, big old, round the bottoms, right? Round the bottoms, right? Y'all know what it is, right? That's a big one there, but that's a sister right there. That definitely ain't no big. That's a sister there. That's a big one there. Right? That thing been consolidated for a minute. But I think been in the oven for a minute, right? So the breakout here obviously is very superlative to what? More upside potential. Why? Because what's the one thing that's going to keep the dollar obviously pushing higher at this point, knowing that it has been given some kind of fundamental use case for the dollar to kind of resurge itself back up to the upside is what? What's the fundamental driver behind the dollar moving back up right now? Anybody? What kind of piece of economic data, any kind of news, anything that makes the dollar get richer? What are y'all hearing out there that makes y'all start to see or realize the dollar's finna go back up a little bit? Anybody?
Is it the tapering?
All right, so right out the back, right? What about the tapering in essence over?
They increase, or they're going to start increasing the tapering much sooner and a little bit more than last time.
Increasing or decreasing?
Increasing.
Increasing taper, meaning they're going to taper more.
Right. They're going to.
So go ahead. I'm sorry.
No. I was going to say they was going to increase the amount of tapering because they had like a set amount that they was going to do
per month, right? Which is what? I don't know if y'all remember. I know it's a hard. It ain't hard, but y'all know I like quizzing y'all. I like to kind of take y'all there because this is good. This is how we plan for growth. We're trying to keep our mind wrapped around all this data. How much are they increasing every month? Well, at this point, how much are they taking away at this point? Per month? How much?
20 billion.
Close.
Oh, brother, don't say close, man.
Was it 15?
15, there it is. So 15 billion, right? They're taking away 10 billion from the bonds and 5 billion from the mortgage-backed security, right? That's after the first, mandate that they put out. So 15 billion tapering, of course, and now they're thinking about what? Increasing because of what? Inflation, right? If y'all saw the, congressional grilling that Jerome Powell and Janet Yellen got yesterday and the day before, man, it wasn't pretty, right? It was, but it was blood all on the floor in there, boy. There was woo, right? And that's only because, again, like I said before, mainstream America is mad at politicians because they let these people get away with this stuff a little too long. They just kept being hard-headed and greedy to the point where they exacerbated all the main streets savings by allowing inflation to get run out of control. They just kept pumping money into the markets and not necessarily pumping money into Main Street. And people sat back and watched all that stuff happen. But again, those who are gainfully employed in the markets, did we miss a meal? Be honest. We didn't miss no meals. Let's keep it 100. We didn't miss any meals. Again, we just looked at stocks like DocuSign, right? We can pull up Moderna. We could pull up many stocks like that where we were all in them stocks like I think Monica, you was in Moderna at what, 50? I was in at what, 58, 59, 62? Many of you guys were in around that same price. I was day trading Moderna at 30 something. Go ahead.
I got in at like 28.
28, over Chris at 28. Like I said, we're day trading Moderna around, in the 30s, 20s and 30s. Day trading it. And, and imagine and we kind of knew that this was the use case because y'all know, again, I keep saying that was one of the ones that I was beating the drum on really hard. I said, guys, out of all of them, I like Moderna the best, right? Because they have the best mRNA, scientific, approach to dealing with any kind of virus. Even though they hadn't put out a product since they've been in business, but that's how biotech work, right? They still had the best, setup for an opportunity of dealing with something like this, a pandemic and a virus. Given the setup that we had in terms of all the players that were in play, they just stood out and they got rewarded. Now they getting taken to the woodshed a little bit now, right? And Pfizer has leapfrogged them in terms of the darling stock that everybody's starting to kind of really favor because we know that that's a political move, right? We know Pfizer is a political puppet, obviously, right? Because of who, right? Because of what? Those political players that are invested in Pfizer, right? The FDA chair is Scott Gottlieb. Yeah, like you couldn't make this stuff up, right? Could not make this stuff up, right? So that's what's crazy about it, right? But again, by value of the science, right? Moderna, outside of the myocarditis scenario they have with the heart scenario, it's still the strongest vaccine out there on the planet, right? Right? It's the strongest one, right? So, but Pfizer again, it's been given the political what? The go ahead. It's been given the political go ahead, to be the most safest of the choices, right? So hold on one second. Okay, yeah, all right. I'm gonna mess. Okay, yeah. So it was the safest of the ones, right? So now it got FDA approval first, right? And it got booster shot approval first, right? And they got the first what? Child vaccine mandate approval first. All that stuff came in the Pfizer, right? I know we kind of off topic a little bit with this, but we're coming back to. But I'm making a point here, right? We're making a point. Is that we're talking about growth. Now that was a value play. Right? Pfizer was an old school legacy kind of value play, because most biotech stocks like that or pharmaceutical based companies like that, they really don't have higher. They don't really do well in terms of high ATRs, a lot of volatility. They stay within a certain controlled environment where they just pay out a good dividend and they kind of inch themselves through. Right? Pfizer got a new lease on life because of the pandemic. Moderna was just waiting on a moment like this. So it was already like, okay, we're ready. We're ready. But some of the other ones didn't fare too well. Like Johnson & Johnson, they didn't fare well. They was already under a lot of pressure from other scenarios, right? Lawsuits from they talcum powder, right, causing cancer. I mean, the whole thing with the opioid crisis, they got hit twice, the talcum powder and the opioid, right? So Johnson & Johnson has been backpedaling ever since, right? Janssen, of course, that's the company they have within the portfolio that makes the vaccine, the company called Janssen. That's who produced the Johnson & Johnson vaccine at what? It was like, what, 56% efficacy, something like that, right? Like, yeah. All right, no shots fired for anybody that took the Johnson & Johnson vaccine, because that's what we're talking about here. We're using it as a case study, right? This is all for, education, entertainment purposes, just put that out there. But this is what we're talking about, as far as which stocks were able to kind of benefit while others did not. So again, going back to the dollar, this is why the dollar is starting to break out, right? Because a lot of the cheap money started to be what? Rescinded. Right? They're going to start pulling that cheap money off the field, meaning the Feds, all that pumping, right? That's been going to the stock market is going to start to get quelled a little bit, which is going to cause the dollar to get strong, because when they pumping money like that, it's subduing what? It subdues your currency. You diluting your dollar by pumping too much money into the system, and you don't have another production to kind of bounce it out. That's a catastrophe. That's a catastrophe of all outdoors that's waiting to happen. And it happened because we talked about this stuff literally last year, that it could definitely lead to inflation. And if left unchecked, it can turn into stagflation, right? That's essentially what we're all dealing with right now. They'll never admit it outright. Rarely do they admit things out right now. I think America has gotten so far away from ethics, at least on some baseline stuff, to the point where these people will never tell the truth ever again. I mean, look at the politician arena right now. Like, good luck with that. Like, it's a whole new joke out there now. Like, there's no ethics in running for office, going for it ever again. They just let the cat out the bag. People just really double down on, on some whole new other stuff right now. So, the only way you're gonna be able to get, proper information, truth, you have to be very good at being an autodidact. You have to learn how to research yourself now. You have to put your big boy pants on, big girl pants on, and learn how to pull up this data for yourself now, because good luck trying to depend on them people to do it. And this is going to be affecting your money. That's why it's important that you learn this stuff, because it does affect your what? It affects your your personal economy. You have an economy inside your household. You have to balance it. You have to find a way to grow it. Yes, you do. If you have a spouse, you got kids, you got to figure out how to keep everybody, opportunistically employed for us, being able to accrue interest or wealth accruing assets or whatever. and, be fine with that, void of any kind of government shutdown, a pandemic, a job loss. No, we still got ways to what? Feed ourselves. That's what this stuff is all about. It's an open market for a reason. That's why they call it the open market or the global free market, even though we know it's a Keynesian marketplace, but y'all get it. So again, this is the ideal of why we're dealing with the dollar now starting to break out. I mean, another thing, because, inflation, price of commodities are going up. Well, guess what? Guess what the dollar is? Is the dollar not a commodity? It is, right? Hate to break the news to you, wait for me with that or not. The dollar is a commodity. It surely is, right? So we understand that, we know that, then yeah, it's being bought up too right now. But guess who some of the biggest buyers of USD dollar or the DXY? Foreign people, foreign constituents of people buying the most of our dollars than most people in America are. Hedge funds, BlackRock, JP Morgan, people, they too busy buying, Apple and all that kind of stuff like that. Some emerging markets here and there, but look, most people who buy our dollar are people from overseas, because their currency might be under pressure. So again, that's why you got the dollar starting to break out again. On top of that, inflation going out through the roof, bonds finna start to get tapered. Anything else, guys? Anybody got anything else, in essence, to why the dollar starting to break out? Any other fundamental reason? Any other technical reason? Anything? What do you guys got? Definitely tapering is one of the the main ones, right? And in essence to that, you can kind of two-part off that, to kind of take it full circle. Also, the idea that what? Interest rates are starting to what? Creep up, right? Interest rates are going up now. I'm just gonna put an arrow up. All right, it's starting to creep up now. Even though they keep trying to beat them back down, right? Every time the 10-year yield gets ready to break out, they finally try to beat it back down. But again, it's just trying to it's making basically what? Higher lows at this point. Stepping its way back up. And the more they taper bonds, the more they're not going to be able to subdue that what? Them interest rates. That 10-year yield, right? The 20, right? And then the 30, right? Now, we already know what's going on with the 2 and all that stuff, right? But definitely these, right? We always tell people, keep your eyes on the 10-year yield. That's the most notable one that everybody watches. Everybody watches the 10-year yield, right? TNX is the ticker symbol, TNX. That's one that's always good to keep your eye on, because that's most connected to the what? To a lot of these bonds that are being bought, through the auctions and all that the Feds are doing. Right? They buy a lot, but definitely the 10-year has a lot to do with a lot of these more, tangible, interest rates and yields and things of that nature. So that's another scenario. Interest rates are starting to creep back up. And they talk about what? Raising rates again by what? Next year. The Feds came out today, Bostic and also Daly, 2 Fed governors, right? One of them out of Atlanta. I think Bostic's out of Atlanta and Daly's out of where he's the Fed governor of, goodness, where Daly's at? He's not Minnesota's cash card. I forgot where Daly's from. I think it's Texas. But either way, they're already starting to sound the alarm that they're starting to get the pushback now that they wasn't getting last year or early this year. That, hey, you guys, y'all did well, backstopping the economy, great. We made a lot of money, as politicians, we happy. But guess what? These people banging on our doors. They coming at our doors with pitchforks saying, hey, what are y'all doing? Why is the inflation through the roof? And everybody knows that it's the Fed, right? The Feds keep lying saying that it's COVID. It's not COVID. It's the Feds. Like, everybody knows that, right? But the average American have no clue, right? They're just going to eat what the press feeds them and say, oh, it's COVID that's causing inflation. It's not. It's not the ideal. Supply chains are more disruptive for the fact that the currency is out of whack and the price of goods and services have gone up. So if you already got low production, then and you ain't been able to kind of move units or move goods, it's a supply and demand issue. Of course, that's going to cause inflation, because now if you can't move your warehouse full of stuff that you manufactured to go out to the market that was ready to go, that people were ready to buy because they didn't have this issue before, you got to raise the price on them goods because it's holding up what? Your ability to what? To revamp your what? Your surplus. That causes inflation. And it causes also supply chains to be stagnated, because if the receiving company ain't got a whole lot of money because they ain't able to move units too, because they ain't nobody working as well to buy the goods and services, they got to hold up too. They can't buy as much as they would before. They can't wholesale as much as they would before. This stuff is simple. So who's causing it? It got to be what? All this dilution of money. that's coming into the systems, and nobody's there to kind of be able to take control of all that. It's clearly the Fed's causing it. And so that's why they're under fire now, because they just kept their foot on the gas pedal for a little too long, just buying the market, buying the market, buying the market, buying the bonds, buying the market. And then they just overheated all the stuff. And then all these companies got rich valuation. And then the Main Street America people are sitting around like, bro, what happened with all this money that was supposed to be, handed down to us? All these programs that were supposed to be handed down to us, where's that stuff at? Yeah, they lied to you again. Once again, they lied to you again. Right? So yeah, this is why, things are starting to kind of unfold the way they are. So again, we just talk about growth, right? Planning for growth. This is another opportunity for you to plan for growth, because when interest rates are starting to go back up, bonds are beginning to be tapered. What are some of the stocks that are going to benefit from what? Higher yields and, higher interest rates particularly. Right? Obviously, what we talked about before. Of course, we got some energy stocks, some utilities, consumer staples, right? Things of that nature are more defensive towards that. They start to get a new lease on life again, and some value plays. The sector that gets beat up the most when interest rates are running higher, right? The bonds are being, being dumped or whatever. What sectors get beats up the most? Clearly, it's tech, because they're the most richly priced premium companies living on the planet. They got forward PEs of 300. Some of them got forward PEs of what? 60, 80, 100. Couldn't make this stuff up. They like richly priced. Like Tesla's price to book is maybe like what, about $30, somewhere around there, and the stock trading at over 1,000. Couldn't make this stuff up. Right? Let's go see real quick. Right, wrote a song about like here you go. Right, let's go see real quick, just on GP. Right. Let me hold on. Let's back out here. Let's go to FinBiz, right? Let's go look that up just really quick on GP. All right. It's just crazy, right? Yeah, I was close. Hold up. Oh, it's not sharing. Y'all see my screen? Can you guys see my screen? Is it showing? Oh, it is showing. Okay. All right, let's make sure it's showing. Look at here. It's at $27. 27. Look at the PE. 351 price to earn. Look at 4P is 132. Price to sales $22. Price to book $40. Price that's price to cash. I would say hold on. Price to cash $64. Price to future cash flow, that piece FCF, that future cash flow, $105. Future cash flow, $105. Tesla sitting at what? They ain't $1,100 a share. And we know what's driving Tesla, right? Because I'm a shareholder of it, right? Of course, just keep it 100. Yeah, you don't complain when you start making money, but everybody know in the back of their head that this stock is so overpriced that it makes no sense. Why? Because again, that's not necessarily a problem of our own as the investor. It's actually more Wall Street fault than it is our fault. Why? Because they haven't figured out how to price, value Tesla. You can't value it as like a car company because they're not. They're not a standalone pure play car manufacturer. They got other stuff. Kind of like how Amazon was, right? Coming from out of the retail space, getting into the what? Data cloud, with AWS, and now they're doing other stuff too, right? People buying out their logistical, model. Man, look. So yeah, they're more of a technology company, right? The software that Tesla has, the chips that they're going to make for themselves, the batteries that they're going to be able to produce at some point. Yeah, that's a technology company. So that's why, a lot of people on the street still haven't figured out how to price, value Tesla. And the retail traders, you and me and many others, hedge funds and so forth on, they're now coming around to that. Of course, they were late, but we were already on top of it. They started to say, you know what, you're right. When before they used to just crap on Tesla, right? For a lot of right reasons, right? Because Elon was acting a fool, acting a donkey, right? Now people starting to see that. So that's why Tesla has a very, very rich premium. And even though a lot of stuff sells off, it's still sticking up there. It's just holding on. It refused to dump. Kind of like how Apple is right now. Growth stock. But they're in trouble. in some cases, because guess what? The more tapering that happens, the more yields going to go up. That's going to put pressure on tech. Hate, like, love it or indifferent to it. That's going to put pressure on tech, right? Because the QQQs cannot, play at that risk evaluation when the dollar's going up. Bond yields are being dumped, going up. Yields are going up, but bonds are being dumped in that perspective. Right, that puts pressure on cheap money that's being used by tech companies to the outfit their scenario, especially on the COVID, that gave them such rich valuations. That was cheap money buying those tech stocks is my point. That same cheap money gonna obviously have margin calls at some point. Starts coming down. They're gonna start taking profit. That's gonna cause a domino effect. They're gonna start dumping for some of them, not all of them, right? And that's gonna cause them the valuation to come back down to earth a little bit. Not all, but some. And they're gonna look for other stocks that they can get into. Some of that were, a lot of these stocks that were oversold, left for dead. They start looking for some of these value plays to start shopping for again until things kind of normalize itself, right? So that's why I say next year gonna be, man, look, a lot of people, it ain't gonna be what we had 2020, 2021. You're gonna have to get out there and hunt a little bit. You're gonna have to get out there and fish a little bit next year. Mark these words, right? That's why we're talking about that today, planning for growth, right? It's not always going to be a tech stock going to be, under the idea that this is a growth value stock that, or opportunity to be into. You have to go out there and find some of the other ones that may give you a better opportunity because, that's how markets are kind of shaping themselves up for next year. Under the tapering increases, interest rates are starting to go up, dollar starting to break out, right? Supply chain issues are going to be well into next year. Another problem with that. Right, goods and services are going to be kind of still slowed down a little bit, at least for the first quarter, if nothing else. So, companies that we know that depend on stuff coming from overseas, yeah, they're going to feel it a little bit. They're going to feel the pain a little bit. We started to see that with a lot of these retail companies, right? It ain't stopped, right? Look what happened to Ollie tonight, right? Like, who shops at Ollie, right? Some people do, right? It's at one not too far from where I stay. Like, this stock got, it's getting crushed, right? We saw what happened last week with, Nordstrom, right? I crushed Nordstrom. Right, man, them Nordstrom puts paid out so good, and many others. Right, some of the retail was just hit and miss. Going into a shopping spree in terms of Black Friday and Christmas, and them stocks was still getting hit. Could make this stuff up, right? So yeah, the markets are out of whack. Because again, we know why. Right, we know why. Right, so that's why this stuff is important. So yeah, so moving on. So that's why the dollar's starting to break out, right? So again, that puts pressure on the SPY. It puts pressure on, the QQQs, right? Tech, NASDAQ. It's putting pressure on the Dow, right? Now the Dow obviously is a whole different breed in itself, but yeah, it's still following them same mandates. So that's why, it needs to kind of have, a value of, some of its major players, of course, like, Boeing trying. Good luck with that. Apple, 3M, like, commodity-based stocks like that. Home Depot, John Deere, Caterpillar, 3M, that kind of stuff that sits in the Dow, right? The US 30, right? Those stocks are, they kind of hit and miss, right? For the fact that with another commodities still going up, that's going to benefit stocks that are in that industry, right? Materials, right? XLB, what's the other ones? Lumber. I mean, all that stuff that deals with that. If they, metal, right? Steel, stuff like that. A lot of oil-based companies, right? Oil has obviously been on the tear, and then started to pull back finally, right? A little bit, right? Right? Because there's a war going on with that now. Like, are y'all gonna, not print, or excuse me, pump more barrels of oil, or y'all gonna keep this thing in the contracted state, and just get rich, off all this other chaotic stuff that we're dealing with, right? So they're like, man, look, hey, that's on y'all, right? That's what OPEC pretty much saying, to America. That's why they're looking at Joe Biden like, bruh, we don't know you like that. Like, we're not finna pump extra barrels of oil just because you said something, right? So that's why America had to dip into our reserves, quote unquote, to kind of help balance out the prices. And then, lo and behold, right when they came out that statement that they're gonna start going to the reserves, in came the idea of a new virus. Could make this stuff up. And instantly, right after that, oil plummeted. Like, how long did they probably know about that Omicron virus? They probably knew about it more than just last week. Pretty sure of it, right? Call it strategic, call it just a one-off event, whatever, right? Whatever. But that's why oil again, in itself is being, been taken to the woodshed, right? As you see here, oil, obviously off the COVID lows, right, was just, staggeringly, rampant to the upside recently, because even more so because, idea that people going back into society because, vaccines, whatever, or just went rampant, running. And now that, somewhat, balloon been popped a little bit, right? Off the top here around about, because we got up here near what, over 100, right? On the US, the UCO, right? WTI, of course, got up to around about 86, 89, somewhere around there, right? UCO obviously is a bigger, pro shares or ETF, but WTI is the one that we typically watch, right? But yeah, that shows you oil been running because of, people getting back to work, going back. And now the idea of another virus, or that puts pressure on what? This stock, or, this industry, I should say, this industry. So you got to be careful with that, right? Until they figure out that, this virus stuff is, able to be contained, if it can, however, the level of the, going to deal with it, or, it's going to be a little bit, under pressure until they figure that out. So yeah, you look at this, okay, is oil stocks a growth play right now? Potentially it might be pulling back because it was just overbought, which it was. Obviously, look at the RSI here. Now you're back down to oversold, but that's on a short-term basis on the daily chart. The weekly will show something different, right? The weekly chart will show something different. And then obviously the monthly will, right? So when you start to put all that stuff in, again, in the perspective, right? Then you start to see, okay, well, just maybe, right? All right, oil might be back to around, hovering around $60 to $70 a barrel, right? Under Trump, it was around about $50 a barrel. And he said he was not going to have oil no more than about $55 a barrel. Right. Biden let it get away because inflation started kicking him in the teeth, right? He took over the reins at a time where all that stuff that Trump them were doing is starting to come back to the market and hunt them. So yeah, he got to fight all that stuff, inflation, oil prices, and man, yeah. That's how this stuff works, right? But anyway, so yeah, looking for growth stocks. Yeah, you want to start looking a little bit deeper than just some of the kind of the old school ones and find those off the beaten path plays, right? But again, you best believe, just like people needed the idea of a vaccine company like a Moderna, in the event that you have other viruses starting to pop up that may be worse than what their now serum is able to deal with. It's the same for oil. If they find something to work, work against the virus, and it's not necessarily something that's astronomical that's going to slow a lot of the world economy back down, well, guess what? If that happens, oil becomes bullish again, right? Just make sure y'all note that, right? If they get a handle on this new Omicron, well, guess what? That's going to make oil stocks bullish again. You heard it here, right? Y'all already know this, but yeah, right? Because right now the cat's out the bag, and they're going to keep, the foot on the gas pedal, or even with them trying to do these new EV, part of the infrastructure bill, all that stuff. Yeah, that's fine and dandy, but the old school oil barons, they going for broke right now. They're going all in because they know this might be only a few more chances they get to kind of ride the oil prices up before it really starts to be a problem with oil companies making money because of the level of what EVs that's going to be on the market. So yeah, they're making a last grandiose run, these old school oil barons. People got them old $100 bill, them skinny one. They still got that kind of money in the oil market. They trying to get their last little pump into the sunset. They got a gap to fill up here at 222 on the UCO. Right, they got a small gap, at around that point there, around about 98. That's why it hit resistance there. It hit that top of that point there, backed off of it. And then, it came the news about the virus. Couldn't make this stuff up, right? So yeah, anyway, moving on. So that's why those things are important, guys. Again, we talk about planning for growth. Again, look at the what? Look at the cues. Look at the tech sector. It don't even seem like it's pulling back. Right now, this is on the weekly chart. That's why I look that way. But we go to the daily. It's going, it's looking somewhat like it, not a whole lot. But this is a very, rich ETF. Right? This is what carried the market all during COVID. The tech sector. The ETF is just a combination of all those big flyers, Amazon, Google, Netflix, Microsoft, Apple, Tesla, NVIDIA, all that stuff wrapped into one, Netflix, all wrapped into one. That's why it looks like it could do no wrong. It can't fail. It's just bulldozing to the upside. Because people use this as their growth portfolio builder during the whole time dealing with COVID. Again, if yields start to creep up, the dollar starts to go up, right? That's going to start putting pressure on the Qs. Now, it's still richly priced, even down to a point where you can say, well, when you hit a point of, kind of chop around about 311, I mean, that's still a long ways down to even get down there. Even if you play this latest surge off this little support here at 352, that's still a long ways down. That's still a long ways down on the Qs, right? Because the Qs always moves very methodical. They move more, structured to the upside than they do to the downside. It has to be something that's really, really causing market degradation for the Qs to kind of sell off or pull back. Right? I mean, you look at these little micro pullbacks. Right? It's the kind of stuff that happens in the Q. That's greed. That's Wall Street greed. They're not going to let the thing come down too much. They just got away from it just recently because of this whole idea of the Omicron stuff. And the VIX start popping. That's why the yield, the QQ start kind of pulling back. That's the only reason. That's why we talk about volatility. Volatility, equals what? Expansion. Volatility equals expansion. One way or the other, you're going to get some expansion when volatility is creeping into your marketplace. Meaning things going to start selling or what? It's going to start being bought. Either way, you're going to get some expansion in some of these stocks. They're not going to be going sideways, very slow and creeping like that. When the volatility hits, it goes from, if I draw this, it goes from like trading like this here and when volatility hits, it gets like this here, right? It starts to get a little bigger. That's volatility. That's expansion. That's a whole new different range you finna trade in as opposed to, something that's just very controlled, low beta or a controlled level of buying because Fed's got their hands on it, hedge fund got their hands on it. Right? Look at that channel there in comparison, this channel right here. This is how traders make money. Meaning the retail trader makes money when the volatility kicks in. Because you could buy a contract literally for 35 cents, right? And that contract could be worth what? $200-$300 easy on what? Expansion of markets because of what? Volatility, uncertainty, emotion, all the stuff kicking in. Them contract premiums go through the roof. $5 can turn into like 160, 150. I mean, you see that stuff all over the market right now. And I love it because it's good to see retail traders, walk into some of those opportunities. If they're trading the market thoroughly right and finding those kind of weaklings and knowing how to move in towards, into the kill zones and some of these stocks, kill boxes and figure out, if this stock going to benefit or not. I love it. $10 turning into $90, stuff like that. Couldn't make this stuff up. So yeah, volatility is not a bad thing, right? It has its moment. It's a cyclical moment in markets where you get a chance to what? Do some real serious what? Shopping. Not for just buying whole, but shopping for what? Intraday action. Look at the swings we've been getting in the market of late. Like intraday, the S&P 500, forget about it, right? Forget about it. Like jokers, I ain't finna trade that. That's like playing double dutch with razor wire. That's lit on fire, right? You got to be about that light to go to jump into that double dutch, session, right? I don't think women that can do that probably some of them the sisters, right? Them sisters can handle it, right? But that's the markets right now under volatility, with the idea that the Feds may be trying to increase their tapering, so that's putting more pressure on that. And you got a new variant of the so-called, virus moving about. So volatility equals expansion. We're not running from it. We run to it. Not everybody can build for it. Of course, I say stay within your lane, trade what you can muster, or you're willing to potentially lose in the event something don't go the way you plan. At least you're comfortable in knowing what you can handle. But in knowing so, you're learning how markets move during these moments. So this is you doing what they call, you're recording this. This is a recordation of how markets react in these moments. This is what they call experience building. Even if you're not trading money with active money, you can paper trade it, or you could just naturally observe it and take notes. Oh, I see what happened today. I see what caused this. I see how people was kind of very, unnerved about, this that caused them to be very, timid or tepid about buying the markets at this point, right? Typically they would buy the market at this dip. They're not right? Or they would buy the market, you know, sell the market at this rip and they didn't, right? That's what volatility brings. It brings about a whole new different mindset, right? So we don't run from volatility, guys. We run to it, right? We were fireborn into this because this is where the little guys get to make money, right? This is when the little guys get to make good money. Again, 10 in the 70, 10 in the 300, $35 in the $200 to $400, right? This is what is made of volatility. And that's speaking strictly to the traders, of course. But the long-term investor sees some of this stuff in opportunity and value too, because again, if they get a chance to dollar cost average in on pullbacks, again, 20% or bigger, right? Some people wait on 15%. Yeah, those are discount moments to a lot of traders. They're not sitting there riding the idea that, oh, I need to see it go down a lot further. They say, oh, this is the moment where I can add dry powder to the market. I kind of just dollar cost average or principle-based investing in these major pullbacks, because they're still thinking, look, long-term growth. So yeah, you might need some of these richly premium stocks that's sitting up here trading at, 300 PEs and all that stuff, 100 PEs to come down 5 and 10 and 20 and 15%. So you can maybe average into it a little bit, or you can wait for it to come a little lower if you think it's gonna go lower. But these are discount moments. That's courtesy of what? Volatility, courtesy of volatility. That's why we're not, we love volatility. Because now you can get some of these richly priced stocks for a little bit more cheaper price. Right? It's not that the sky's falling, it's that, this is a replenishment of what? The land, because it's been, barren and dry. It's starting to rain finally. Yeah, we go outside in the rain, right? That's how you plan for this. So it's just, so what we see right now with the Qs is just an extension of that. It's just richly priced. And, you kind of play in, at a point of resistance here, right? You kind of double topping at that point there. And it's kind of rolling back over a little bit. Now, you got a little room back to the downside of the linear regression band. If you use this as a marquee point, yeah, it could easily end up, potentially, all right? Got to say that, around 370 something, 376, 375, whatever. Because right now you're below the 20-day moving average on the daily, but the Qs are so diabolical and greedy. People that trade tech, they'll make that whole move back up in what? In one day. Like tomorrow, if it was something crazy happening, they'll smash this thing up way above that 20-day moving average just to kind of spite the bearish traders, right? These people have no chill. But we're realizing that they're going to do that for so long because, again, economic data has to stand for something, meaning organic data points have to stand for something. They can't keep just, relying on these stocks to carry their portfolios any longer. They have to start searching elsewhere. That's what we're trying to profess here this evening, that when you start searching for growth stocks beyond that of what we're dealing with now, or new opportunities or old ones that you kind of left on the back burner, now you can pick them up. Yeah, it's a good time to probably revamp, some of those old plays and dust them off the shelf a little bit and start looking at them. Give them a good once over, right? Check their, their situation, right? Their financials, check their growth scenario, right? What are they dealing with as far as any headwinds? Are they having any supply chain issues? Are they kind of, reeling, because of commodity issues, because of inflation, right? Commodity prices, is that hurting the business? So it's not, you start searching, find those little diamonds in the rough, because they could do quite well going into 2022, void of all the other issues that other stocks are going to have to deal with that has been richly priced, I should say. Right? So yeah, so something to keep in mind, right? So, and these are some of the indices we always tell people to keep by their person anyway when they're trading. Like Qs, of course, the Dow, if you want to look at some of those, really big industrial-based companies. Of course, the SP 500 always, of course, the UVXY, right? Another extension of the VIX, basically, right? A lot of people trade that a lot. It's been breaking out recently, right? Look at that round at bottom, right? It's breaking out of its little, slumber, quote unquote. And you can tell easily by the size of the candles. Look at these little tap, 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 tap candles, right? And then look at these. Yeah. Look at these big old candles. Clearly, you see what's going on here. That's volatility. That's expansion. Look at this. $17 all the way up to what? Way up here, $20+ in one day. That was literally yesterday, of course. But you basically went from $17.27 all the way up to like 22. That's a lot of money for the UVXY in one day. That's a lot of money. That's a lot of volume too. Look at the volume, right? Volume through the roof. Same reality, right? Same reality, right? So that's why this stuff, hey, gotta love this stuff, right? Gotta love this stuff, right? Gotta love this stuff. Because when you see it from this perspective, you can move on it and act on it better. So your options trading will reflect a lot of what you're seeing in terms of some of the companies who were in excess, waiting to kind of get that next little, divergent moment in markets, or of course, an expansion moment in markets where they're starting to beef up a little bit, or they're starting to break down for some of the other ones. Right. So yeah, it's like playing, whack-a-mole or whack-a-golf or whatever in some cases, but for the most part, if you're depending on what your strategy is or your portfolio goals, yeah, this is a good time to kind of play into some of the weakness or play into some of the strength, right? In a way where you can kind of take the top off the market, play it back down a little bit. Either way, premium is going to pay very well, right? Selling, calls and puts pretty much do well when markets are low beta, right? You can get away with that, but when markets start expanding like this in volatility, the premium buyers outright, that's who pretty much walk away with the bigger bags, because again, you have unlimited gain potential, unlike when you sell, a put or call. Again, you could take $5, $10, $30, and that could turn into $200, $300, $400, $500, 30 some odd dollars. Come make this up, right? In some of these contracts. It is crazy, right? Like, man, that's crazy, right? But that's how markets work. All right, so we don't run away from it, we run to it, is my point, right? So yeah, so just putting that in, into thought when you guys are looking at the markets now, and you're doing your deep scrubs and saying, okay, well, let's see what's some of the best stocks to be in, that are reflective of the economy that we're finna walk into, especially going into the next year, right? Under all that we know now, right? In terms of the things that are on the table, where is your money most suited to be in? If you're gonna kind of re-diversify, move a little bit of money around, do other opportunities, you have to look for those opportunities. So we know the one sector above all things that's still catching up, somewhat of a bid a little bit is energy-based stock, because that infrastructure bill still has a lingering effect in terms of markets trying to price all that in. Now, granted, it can go either way, but that's just the extent of how this stuff is, starting to play out. Right. And let me see what the market doing right now. Oh yeah, I thought I saw something like that happening. So yeah, I was like, why is it post-market? The UVX is up when it was down literally about an hour ago. It's up a whole $1 dang near. Like, the SPY must be getting wrecked, right? So yeah, case in point, yeah, it is. So something must have just came out. Some news must have just came out. If you guys got anything on that, please share it. But something came out, right? We were sitting up here around about 458 and change, and all this happened after hours here, guys. So something got the market spooked here after hours a little bit. Something we came all the way down to 455. Wow. Yeah, something got the market spooked. Something. Now we know that tonight is supposed to be the deadline for the what? Anybody? What's tonight's deadline? I got to throw that out there. I love quizzing the family. What are we up against the clock again tonight for, guys? Anybody? A major piece of what news need to come out tonight?
Government shutdown.
My man, right? We dealing with the government shutdown. Tonight is that night for them to come out and extend it or whatever, right? They got to come out and do something. So essentially, that's what actually was carrying the market today. On the back end of the day, after we got through all the economic data that came out today, all that stuff, and the COVID, found out that there's 2 cases of the Omni variant, right? One in Minnesota, one in California, and there's 2 of them in Minnesota now, and some in New York now all of a sudden, right? We got through most of that, but the only thing that kept the market up today was the fact that that government shutdown that's looming seems all but averted, right? Because when has the government ever shut down, though? Anybody? They threaten, they play the little, playground games, but at the end of the day, they always what? You know, avert a shutdown in this perspective, right? In this perspective, I should say. So 9 times out of 10, they're going to come up with something. So that was a bullish catalyst to kind of run the market, you know, and then all it did is went back to a lower high. We talked about this the other day a little bit, you know, under the Urban Economic Empowerment Show. The market's just in what? It's still trading in what? A lower high stance, right? It's still in a lower high stance, no matter how you look at it, right? Clearly here, right? I mean, you can look at it just from that perspective. If I go to a more detailed chart, what do you see right here, right? Clearly, lower high, lower high, lower high, right? Clearly, you see that there. That's not rocket science. And it's still in the downtrend until that changes. Meaning they have to overtake this 20-day moving average on the daily, definitely 464.95. They had to overtake that because that's a gap right there. And then you can start saying, okay, maybe you can get a chance to try for that what? Back and towards the 470 all-time high. But until that happens, the market is what? It's weak. It's in a downtrend. It's strong still from a longer perspective, right? But it's still what? It's still weak, right? And so that's what you got right here. You got this kind of what? You know, this kind of pattern here where it's kind of falling, a falling wedge to a degree, but yet still the weakness of this thing can easily downtrend a lot more because there's still a lot of gaps in the market, air pockets in the market that could be what? Get filled, right? Gaps there, gaps here, big old gap down here. Those air pockets eventually going to get weak with the weight of the market coming down. That's going to put more pressure on those gaps to get filled. So yeah, that's why they're trying to pump exorbitantly. They're trying to find reason to kind of keep the market up. Again, that's Wall Street, of course. But the market's saying, "Oh, I'm trying to what? I'm a little tired right now. I've been working all day. Right? Y'all gonna have to go in there and boil you some hot dogs, right? Old school style. The market tired a little bit, but yeah, it can run more. Definitely, don't get it twisted, right? Because there's already planning for the market to hit 500 on the S&P 500 before the end of the year. It's not far-fetched. Even though the market's pulling back, guys, it's not far-fetched. These people crazy. If y'all saw the daily candles that happened in the market today, y'all be like, yep, it could easily happen. Again, and it's the first of the month. All right, they got beat up yesterday on the very first day of the month, which is typically almost a bullish day in most cases, especially in December, historically. The first day of the month in December of 2021, the market got what? Pummeled. Wall Street did not like that. They did not, right? They did not, right? And that's just an extension of what we talked about, what we're talking about here, volatility, right? These people trying to save face, they're trying to trade into what they figure to be, they're right to kind of what, move markets how they want to move markets. Again, greed. This was yesterday. That's on the first. The market moved from a high of 464 all the way down to 450. Are y'all seeing that? 464 to 450. That's what? How many points? That 16, 14 points? Somewhere around there? Crazy numbers. And then today it got, ran up a whole what? 1.8? Wait, what about 1.8% at the peak to trough today? Straight snapback candles. That's volatility, guys. That don't necessarily mean the market's back and it's bullish. That means that what? There are definitely big bull runs inside of what? Bear markets. You guys got to know that. There are also big bull runs that come on the backside of what? Bearish, bearish trending markets. And that's a good thing because this is how you get a chance to play both, right? If you're more built for this, meaning, if you can handle the volatility. But when that happens, it's game on. You play that big, ugly pullback, you're going to have some kind of bounce the next day, almost but guaranteed you're going to have some kind of retrace or recoil the next day. Now, if it lasts, that's up to the market to prove that, but you're just playing for that, the initial pop back up to get some of those gains back, like any kind of bounce, like the markets would do, any kind of aspect of physics, when something falls really hard to the ground, eventually going to have a little recoil or bounce when it hits whatever it's going to hit, that flat surface, right? We're using physics here, clearly that, no more, no less. That's what the markets are doing when in some of those moments. It did it yesterday. Look, it bounced hard, came down, the next day, obviously it opened up red because it closed lower, but it bounced low and then ran back up again, all the way back up here. The candles are telling you what's happening. They're still trying to buy these little retrace moments. Today was no different. And yet it's still after hours here after making a big run today off, off the lows, literally of 450. The thing went all the way to like 459 today at the high. Committed, so that's 9 whole points. If you bought anywhere at the beginning of the market day around about 450 and you bought calls there, are you kidding me? That was easy $800-900. Easy $800-900 today. We're around 800 and change, somewhere around, give or take. Buying, in the money at that point. Easy money. And it's the same thing, far as tomorrow. You had that big bounce today. Going into tomorrow, the market's gonna have to bring it. Why? Because it's going into the weekend. People are already timid and nervous about the market. So you best believe there's gonna be some profit taking. The after hour move so far right now could be indicative of that. And on top of that, we got some news that came out earlier today. Anybody else got something on what happened as far as news today that was very damning for the markets to a degree? Anybody catch that news today that came out? International news at that. Hint, hint, wink, wink. What was some of the international news that also brought the market, weaker today? Anybody? I know I ain't no one watching the news, right? You might be, Brother Avaport. You don't want to follow stuff like that, right? Did y'all get the news coming out of Europe area? Anybody? Joker like, I missed that one, bro. I missed that one. All right. Let me go to the two. I'm just going to write up here. Starts with an R, ends with an A. All right. Let me go and just pull in Russia and Ukraine about to what? About to be about their life. It's heating up. It's heating up. They're saying by weekend, it could be potentially shots fired, potentially by this weekend. America ain't ready for that. Russia then put an additional 90,000 troops at the border of Ukraine. That happened and came out today. That news came out today. 90,000 additional troops at the border of Ukraine. So yeah, it could easily be shots fired over the weekend. Markets ain't ready for that. On top of Omicron, right? On top of inflation, right? On top of the idea that supply chain issues are still kicking everybody in the teeth, right? On top of what? Don't, insert your scenario, right? So that could be also another reason why the market's kind of pulling back after out, on top of the fact that it just had a massive, rocket bounce today, which is typical in markets. Again, when markets are downtrending, there's recoil in almost every scenario like that. That's volatility. So anybody that bought puts right at the bell that wasn't shaking by all that kind of spazzing up to the upside, just ripping all that there, get what? I would say this, 7 out of 10 times, they're going to probably get paid tomorrow. And that's also with the government shutdown looming, right? The idea of the government shutdown, obviously it's a bullish caliber, but it might have been priced in today already. Could be, right? Could have already been got priced in today. That's 9 points that the market moved up today on top of all that mountain of bad news that came out around that. Even though we had good employment numbers, right? We had good employment numbers, but still all the other stuff is starting to foreshadow that a little bit because people might be worried about this virus more so than anything. And what that can do in terms of a trickle down effect, it can affect inflation even more, which also can affect what? More prices, more weakness on what supply chain issues as it is. Domino effect, essentially, that's what it could be, a domino effect, right? So yeah, so that's the big news headline that came out today that got a lot of people at Wall Street right now. They're trying to figure out how they're gonna price this in or not, or they probably can't because this can get out of control like really fast, right? War, y'all know how war is, right? It can destabilize stuff really quickly. It can escalate really quickly. And that's not even considering the fact that we still got to keep our eyes open for what? The other one that's potentially getting ready to break off. China versus what? Taiwan. Y'all know that right there. They tensions are up right now too, right? They close to fisticuffs. China, Taiwan is definitely close to fisticuffs. And then Japan is in the middle trying to play the mediator. and they might get drawn into it. Obviously, Taiwan is, Japan is standing with Taiwan, obviously. But yeah, that's a problem because guess what? China, look, if they, revert some of that into look, that whole area where they can get real tested. That's bad for markets if it kicked off. So there's a lot of things out there that you need to be concerned about. Rather, not that you personally be concerned, but we talk about for market value. This is how you can trade in around it. You just need to know all that's happening so you can be better prepared. So you won't get caught out there, right? You're not overly exposed, right? You might want to pare back some of your exposure. That's why a lot of people run into cash position that's supposed to be in the margin. They've already benefited from a great margin boost expansion. Man, look, all of 2021 just banging. I mean, look at it. They couldn't make this stuff up, man. And look, market has been banging, right? It's been banging, right? And ifs or buts about it. You talk about 2021 alone. Look, you couldn't make this stuff up, man. Look at this. Look at this. Seriously? Way down here, 360, 65, somewhere around the 360s in the SP 500. And it's sitting way up here. What? It was up here at 470 before this latest pullback. Like seriously? Like seriously? Yeah, seriously. So yeah, 446 is a major play, right? We can start looking at that potentially. Right? It's all fair game. When the volatility kicks in, it's all fair game. Right? Some of you guys been, watching the market. Y'all been doing y'all thing. Y'all been seeing me post a little bit, my little scenario. Y'all know I ain't trading with a whole lot. I trade with a fair, decent amount, but I trade very small for a reason. Why? Because my whole thing is I want to be able to show, you guys, us, our family, how we can do a little some string with a little piece of chain, and we can trade it methodically with strategy. We're not out here guessing. We're showing you guys, hey, this is what we're looking at. And these are some of the things that we're getting at these levels of prices. And we're, parlaying them into what? 700%, 800%, 500%. And we're doing it consistently. So it's not like, okay, these are just one-off events. No, we're doing it consistently. $100 into 900, $100 into 800, $100 into 1,000. And this is all in the matter of what? A swing trade. Some of it is intraday day trade, but a lot of these are just, swinging trades and getting paid. $35 into 300, into 200. And we're showing, just exactly a lot of these opportunities because the markets are starting to reel back some of that, euphoria a little bit, right? We went from extreme greed, right? To now we kind of dealing with a little bit of fear, right? Notably so, right? Notably so, right? We went from extreme greed. Now we're kind of playing back into the fear column, right? Right? Which also can bring about capitulation and things of that nature. Stop losses being rated, right? People making an emotional decision that causes volatility to go spike even harder, right? That's why Wall Street hates volatility. They hate it because they can't manipulate markets up and to the right easily as they normally would do in a controlled setting. With the Fed having their back, all that, but all that stuff getting ready to come to end a little bit, especially with the Fed, because they finna start tapering more. So yeah, people gonna have to figure out how to trade again, right? I hate to say it that way, but a lot of people that's been depending on the Feds and the Feds alone, right? We all done well because of that. Too, a lot of our portfolio loan investment stocks did well, but if you're still trying to find money, in odd places, then yeah, you're gonna have to dust off some of that old knowledge and go back out there and do a little searching, right? Fish around a little bit in the markets. You're gonna have to kind of move around a little bit, and that's a good thing because again, you need to keep your skills sharp. You need to dust off, the notes every now and then and revamp, resurface some of that old, those old, basic, points of reference that we need to kind of always keep close to us as traders and investors, period. Right? That's just you assessing your economy. That's all you're doing. And then all the risks that may be in or around it. It was a good time to sit on your hands when it's time to probably get off your hands and go out there and make a little, a little extra cash. Right? Because this is the time you make the most money when volatility is kicking in. That's when you get paid. It ain't hard to see people making, $3,000 days, $18,000 days, $50,000, $60,000 days. That's volatility, 100,000 plus. Right? One of the guys today hit like over 100,000. in black box. That kind of money is crazy, right? That kind of money is crazy.
I can't wait till I get to sit down and play with the new features that Black Box got. Because now I can use it on my watch. They got the app now and everything. Ooh,
and we just finally got to the NAS. You know, we finally got on the major exchange, right? They went from the OTC market, now they publicly traded on I think it's NASDAQ. I want to say NASDAQ, but yeah, they upgrading the platform. I don't know if y'all knew that or not, but they publicly traded now in terms of not being OTC stock now.
You got some stock?
I haven't bought none yet because it opened up around about 5 something. I said, I'm gonna wait. You know, like anything, you get that debut, you know, they're gonna go at it first. You know, and the market already kind of weak. It came in to that with already with a weak market. So you know how that stuff go.
Okay, about $3 now. Man, I did not know this.
Yep. You can see when it first came because it's going to show you that. So it's kind of reeling back a little bit, and that's a good thing. Of course, you know how that stuff go. Let it get cheap, you know, let it kind of, show itself, prove itself, let it kind of, because a lot of people that's traded now going to be obviously with us, right? Right. And then a few people who kind of know about it, right? So at this point, see all this over here was OTC. You can clearly see that, right?
Yeah.
You can tell because of the volume, right? The volume is very spotted, ain't it? So how ugly it is over here, all this stuff OTC. Over here, now they got some big money volume into it. Now you start to see the volume looks more normal now.
Yeah.
Right? You see what I'm saying? So now you can tell that it has a whole new different flush of cash getting ready to come into it. Right? So this is what we're talking about now. So let it kind of meander around a little bit. That might kind of scoop a little bit here and there, but this is going to cause them to have that influx of cash at some point by being able to use this different, echelon of shareholder now to build out the platform better. Like you said, all the new features that's coming to it, because they've been doing good over there. David, all the guys over there, Jeff and all the guys, they've been doing good. Again, I would say that not because I've been using it for a long time, but unlike a lot of platforms, they have been really trying to make a lot of enrichments to it, to the platform, the scanner itself. Right, and not just kind of playing off the idea that we got something. They've been moving. They've been doing a lot of things. I'm serious when I say that. They've been going out getting a lot of sponsors, UFC sponsors, fighters. I mean, they're doing a whole lot of stuff, basically. Right. So, but anyway, so now that they kind of publicly traded on our side, it's going to kind of bring about, at some point you're going to get a little bounce here and every now and when they start putting out some good news and upgrading, it's going to help the stock out.
Yeah, I think I'm gonna go ahead and grab some, man.
Yeah, I'm keeping my eye on it and got some levels in mind at it, and easily I say when they get ramping, which is gonna bring more exposure to the platform itself. People gonna find a little value wherever they can see, where they see opportunity.
Right.
So just keeping that in mind, guys. Again, that's why the market is such a treasure chest of opportunity. Given the opportunity where we can just allow, information to meet us, in the middle, and turn some of these stocks that are out there that may, bring about something. So the same way, we're looking at stuff like, because we talked about this earlier, right? Planning for growth, right? Planning for growth. Now, if I was to ask y'all this right now, and you can be honest, of course, that's what this is about, right? We're in training, right? Now, because we know how Peloton has benefited greatly from a stay-at-home environment, right? And it's so much so that they don't have the vertically integrated reality within their model to really accommodate a whole lot of extra accessories that they probably already implemented into the Peloton experience, like with live trainers and all that. They kind of already on at their peak value, unless they can come up with something else, right? Maybe they can come up with a Peloton tricycle for kids. I don't know, something. Right? A Peloton big wheel, old school with it. But till that happens, stay-at-home environments are about that. People going back to what? Gold Gym. They're going back to what? All these little gyms now. Look, Joker want to get out there and try to get fine again, right? Even though it's the Joker how Joker is, they want to be seen, right? Look, I can't see a Joker online all the time. I want to go to the gym. I want to be seen. And so, that's hurting Peloton.
Yeah.
So we talking about growth and value. Now, before it was a growth stock in a short-term interest level. Why? Because it had a use case. to serve. Make sense?
Mhm.
It was still a value play ultimately in the, from the onset, but guess what? It became a growth play with under the rules of engagement. Again, the stock went from $18, well over $170. Dang it. In a short order time frame. Me ended around, kicking around some support, standing at around 200 moving average. And guess what? Guess what it's doing now? Pulling back down now. So I asked y'all, is Peloton a growth stock in essence to that of a good investment going forward into next year? Anybody?
No.
Rich says no. Anybody else?
Well, with Omicron now, it could possibly be.
So you saying yes, Chris? Is that a yes?
I don't want to definitively say that. We got to see how the Omicron do, but if they keep it under control, then no.
So what are you favoring towards right now? Yeah, yes or no, though, as of at this moment?
As of this moment, no.
All right, so you favor towards so no. So we got what, 2 no's, 1 no yeses. Anybody else? So Sneak, you want to jump into that? I'm sure you heard of the bicycle Peloton before, right? Or the company Peloton. You're on mute still.
Am I on mute?
No, you open Brandon. So Shanika's still on mute. What do you think, Oprah Brandon? Why sister get a mute thing together? What you think is yes or no?
When you ask that question, you got to think about like the people's, personalities and are they still afraid of these viruses? Are
Can you
they?
hear me?
Oh, yep.
Yeah, we hear you now. Yeah, give 1 second. Let me get Brandon out. Then we get
Right,
you.
no problem.
Now you good. Now you got your mic. Yeah, go ahead, Brandon.
This is somewhat what Sister Angie was talking about yesterday, personalities and behaviors. So with the new variant coming out, I mean, people are still going to be stuck inside. They're still going to have that fear factor. I want to say, but yet still, I still want to say no. I don't know why.
You stick going so no, you stick with no camp on this?
I mean, if they come out with a vaccine that'll help out with this Omicron stuff, I mean, yeah, I'll say no.
All right, say no. I like that though. Y'all politicking through it. See, that's what it takes it to be, an investor. You have to be able to politic stuff through, right? There's no binary answers to this stuff, right? Because markets are so what? Markets are, man, so enigmatic in some ways, even though the story may be very, straightforward in the perspective of what the company offered, the model, but markets are finicky. And some things are very dependent upon others, obviously. This is one of those things because it helps that people, that person who are more home-centric, right? It's not enough stay-at-home moms to kind of carry Peloton, right? Not alone, right? Right? Stay-at-home mom got about 30 different exercise equipment machines all around the house, in the basement, in the house, in the garage. Like, girl, you buy all this stuff, ain't using this stuff, girl. Look, you still ain't lost that curve yet, girl. I still see. I'm just blowing money on equipment. But again, it depends on, again, like you guys are saying, how much of that, can be quantified, right? In use case, right? So it's interesting. So, so Sanika, you got your mic, right? Yes or no, where you at?
Yes.
So you think yes? You think it still have a growth stock potential?
What? What
No,
have a
you
growth
ain't
stock?
even listening. I thought you were ready to
No,
rock.
no.
Let me
Okay.
get me a belt. Let me get a belt.
All right. No. Wait.
Now, as far as Peloton, like we're talking about
Go.
Peloton, do you still see Peloton as a potential, growth stock going into next year, knowing what we know now as far as, the ideal of, of course, we've been backstopping and stuff by the vaccines, more people being out and about now that as opposed to being home, utilizing their machine, right? They stay at home exercise machine or that service. But do you think they have a potential still to rebound a little bit potentially next year as a growth stock?
Yes.
So you say yes, so why? Why do you think a stay-at-home exercise machine company still has potential to be a good growth play for next year?
Well, all right. I know you probably not going to like this, but spiritually,
there's no such thing as what I'm not going to like. Don't you try to precede us with our thought. I need to use that big brain of yours.
Okay.
Economics out, because keep in mind, y'all know investing in trade is not a what?
it's this ain't got nothing to do with spookism, right? So don't bring
Right.
it in there.
It's
But this
all
is
dealing with, but go ahead. No, go ahead. I'm sorry.
it's some real divine stuff I'm moving with. And I see yes. But I'm gonna explain it now in reality term, why I would agree with what I just got, right? And it literally was download got. So okay, it's a stay-at-home workout machine, correct?
Right.
Which most people don't see the value in. If you're going to be home, what's the point? But a lot of people are having issues with their health that have contracted COVID. So they are needing and not able to get into some of these facilities because the large numbers that need the attention. So they may just come up with having devices that help people be able to deal with some of the ailments that are going to be long term as a mean of contracting COVID. So if it is a device such as one that could help you get your weight down or help with respiratory issues, that just might be something that a lot of insurances may pay for you to have in home because people are maybe we on another lockdown, especially if we're on a lockdown again, or if you can't get into the facilities to get the care because of the large amount of numbers of people that supposedly now will contract even a new variant of COVID. That may just work. So I do, I see them being able to push it one way, and then I'm just trying to make the sense of it that way.
Fair point. But but see, that's what it takes because like I said before, you have to be able to politic your way through, all of that, what we know that's out there. And as you, as an individual investor, when I say, because everybody has an individual perspective, but beyond that, what they have, the herd may look at a stock and say, well, it's up because of this, right? Everybody buying it because of this reason, right? And in the case of where a stock have had a great run like Peloton did because of, again, the stay-home environment, and now starting to kind of reel back that because, again, the idea that people starting to get back out to some kind of form of a halfway normalcy, because halfway, right? With these so-called, jabs being more readily available and implemented. Well, again, we're all still under the idea that, of course, we know that this is here to stay at this point. It's no secret. Everybody knows that this thing is here to stay. So we are now what? We're now 100% what? Endemic now in terms of the virus, meaning that's here to stay. It's kind of like the flu now. It's not going away, right? So that puts a whole new different pressure on the idea that if it has, again, moments where it wake up, crazy, hungover, meaning the virus, and decides to what? Mutate and cause, another problem, of course, like we're dealing with Omicron, but, it may be one that come along, maybe a little bit more what? Stubborn than that of what we dealt with so far with Delta and Omicron, right? And new and all the other ones, right? That's always an overhanging what? Value that we have to start pricing into some of the what? Our, future values when we're looking at markets. Now, Peloton, yeah, it could easily somehow move into such a scenario like that where it can kind of go towards the medical side of things and say, hey, this is a therapeutic use case, right? Can we get some, some underwriters to kind of what? Backstop our scenario in terms of Medicare and Medicaid, obviously, right? And on top of that, for whatever, because there's other companies out there been around doing that for the longest, right? There's a lot of, physical therapy, institutions or buildings that contract a lot of different equipment out there. Some of the best things that's out there, and they may add it into their program, right? But at the level that you're going to do it, at Peloton, well, of course, a couple things have to happen for Peloton. Number one, they're going to have to get their price down, meaning for the bikes. Right now, they're still richly sold at a premium, right? They're very expensive. So that means the only way they can get their price down and the bikes be able to offer it under Medicare, Medicaid reality, if that was the case in terms of physical therapy, well, guess what's also going to have to come down for them to be able to afford this, at a much cheaper price to people. The price of commodities is going to have to come down, right? The price of the material that costs to make these bikes, steel, aluminum, right? All that stuff like that. Well, guess what? Those prices are still up right now because of what? Inflation. See what I'm saying? So even right now, they don't really have much of a price cushion even to lower their prices because of the fact that they still reeling with the idea of what? Inflation kicking there behind. And on top of that, again, there are still more people willing to want to get out at this juncture than they are willing to stay home and exercise in their house, right? Until they can really balance that out over time, like you said, probably get to a point where it can be used as a use case for therapeutic use case, then guess what? They're gonna have to kind of tread water, or they're gonna sink more until that could become a reality. Now, if you look at the stock, it's still richly priced. Depends on where it came from, right? Or I should say, think about where the stock came from, right? When it IPO way back here, right? In terms of where it's at now, yeah, it's still doing really well, right? We're talking about from 20 smart dollars a share, it's still at 40 now, it's still up over 100%, right? In about a year, it went up 100% in 1 year. Up at the top, of course, it was really priced at 170, but it's still up 100% long term. Make sense? Yeah, go ahead. I see you got your hands up, sis. I'm sorry. You muted, sis.
That's okay. Okay, sorry. I just wanted to add something. If they actually do link with insurance companies to purchase a device like that, because I actually have a device that costs like $7,000 to deal with pressure in my legs, and not the physical therapy that they give to people, the hourly rate amount, with some of these definite issues that people are going to have that, have been exposed to COVID that and already had pre-existing issues, for sure, may look into this and find it very attractive, especially for that machinery comes with a certain quality of it. Like I just looked on a site and it shows like it has an app, and it looks like it arranges your workout for you, so it can kind of serve in the purpose or in placement of therapy, that you may go, instead of going in-house, you can have it at your house. And a lot of people, they can play on the fear of them not wanting to go into these places and get sick again. So being at home with a in-home therapeutic solution, and it can be paid for, is actually pretty interesting. And a lot of people are looking at, are complaining about having issues with circulation and respiratory, for sure. It's really high. I know, because I've been in these spaces and looking at some of this information and stuff. And the other thing I wanted to say was, a part of the government shutdown, getting to something like this, if the insurance company pay for it, when the government shuts down, sometimes a lot of these places have to close their doors for so-called safety, especially lockdown. You're going to have to be at home. And how do you still get your medical services or activity for something that may be life-threatening? And they may also throw out you're more at risk if you're over 200 pounds and such. People start getting scared and start going to buy stuff just because. So playing on the fear too can
playing
also.
in the fear, right? And that's very vital in terms of when you look at it too from that perspective. But always know this here, as an investor, it's a numbers game, right? Where you may have, a set that can definitely fall or fold into that value or that idea, that there's a use case there. They're still going to be looking for volume, and you need a heavy amount of people to also, beyond that, what they call the specificity of that kind of value or that need of market, people that will want it. They still have to fold into the commercial market as well, right? Of course, it should be an add-on to it anyway. But if the bulk of their product value has been moved through they're just, everyday use case person that bought it because of the stay-at-home environment, COVID, and not so much for the therapeutic side, they would need a gang of people on that specificity side to equate that, balance out, or overtake that of the commercial use case, because it was just fun to have, being at home when everybody was at home. You know what I'm saying? So you would really have to play into the numbers of it. You have to be really, really cognizant of what their numbers look like in terms of their sales, right? How many units are they moving? Of course, this is, pre-ideal if they can get insurance coverage, to work for them in that perspective, because if they get that, then they still gonna have to go out there and market it, right? Because that's just the beginning. It ain't a done deal just because they can get the coverage, right? Because of course we seen that one of our little stocks now, our little AGRX, right? They got, again, how important is birth control? Birth control more important than a bicycle right now, right? Because you're trying to avoid babies. Like, look at, bro, you done dropped out about 2 or 3 during COVID. How you had 2, 3 kids on the COVID? It's been a year. Like, well, you've been dropping babies. And they can't even really get, and a lot of that's on the management too, of course, like I said that, but it's a great, product from that in terms of birth control because it's a patch, right? And it's less invasive, less estrogen in it. It's a good use case. But again, if the general public does not have the level of exposure to it for some odd reason, to make the numbers equate to, you know, the greatness of it or the ideal of it, then it's still a numbers game, right? You're always going to be under the numbers game, you know, crutch when it comes to markets. Why? Because there's so many players out there in the market that for them to specifically focus on one, if it's a niche market or if it's a standalone, you know, in terms of their concept, then yeah, it's going to have to really be about that life, right? Because Wall Street is so, you know, they're so spoiled. They'll look at that, okay, yeah, it was fun while it was fun, right? It had its run, yeah, so be it. Now, guys, go out there, take all that money that y'all got, that we gave y'all from investing it through the COVID, and now you're going to go out there and really do some real R&D. You got to find new customers now, new ways to keep your product relevant. And so now it can find itself going through what we consider to be what? You know, a consolidation period until it can get to a point where it can become what? You know, relevant in some kind of way again. So it can easily downtrend more. It can easily bounce and kind of play within this area here and just kind of go sideways. It can either try to make another big run back up at least toward 20 moving average here at 93, based upon the idea that you may get one more boom cycle because of holiday spending. People, I want to get one just because the price might have came down a little bit, right? Whatever. But again, on the average, to have everybody run into it like it did, you know, Alpha's doing this time, you know, yeah, they're going to have to really, really change the model, right? Meaning the business model to attract just that, what you probably say, a lot of people on this physical therapy side and, you know, and all other stuff as well, right? Because right now, again, that ship in terms of all the euphoria behind Peloton has sailed, right? It has sailed. In the short term, it's sailed. So now it's up to the company to kind of come back, take all that they got from up here, all that money they made off that, and now R&D their business to be equipped to be able to handle that kind of aspect of business expansion. So using the question that we talked about going into next year, do you see them as a growth company into next year under that mandate, Sister Shanika, or are you still sticking with yes? Because that'll probably still take them about another year or 2 years to get even that implemented if they were to do the insurance stuff. This is my opinion. You see what I'm saying? So into 2022, they would have to do a whole lot. Oh, go ahead. I'm sorry.
No, okay, so I see their rise of success being very unexpected, but they're being a rise. Okay, and I know I can't talk like that on here, but but
it's only because I say that because and I don't want you that you can't, but you got to realize that because this is a numbers game. When you're dealing with money,
right, it's a number.
They don't care about nothing else that we like. I'm feeling your energy, your stock market, like, do you? Let me get all that money out the water.
I mean, when I see some, I'll be on point. I'll be on point, but it's not even me. It's not me. But okay, if I'm making sense of this and on my own without listening to, you know, the intuitive part, I would agree no. I would say no. But
we're just speaking strictly for next year. That's why I want to make it, you know.
Yeah, speaking for next year. I wouldn't all the way say no, but
here and the stock is pulling back into the end of the year. See, that's what makes it great because you have to look at this like, okay, it's pulling back right now into the end of the year, and the end of the year, you know, of course we got the new virus just popped up, but you know, again, what's the likelihood that this could cause people to go back in because now you have to play into the idea of what the government going to say what. Okay, we're not going to do no more lockdowns. Above all things, we're going to make sure that's our last resort, right? If that's the case, people are going to still feel more reluctant, more to want to get out. Now, they may do the travel bans, but travel bans ain't stopping people from still going to gyms in their own little local, you know, towns, you know, nations or whatever, right? Or getting out, I should say, right? There's no need to really pull people from that until they start really hitting that stuff like, okay, well, we're going to shut down the gyms, right? Because it's starting to spread, right? And this thing is more driven stuff, right? Meaning it's more transmissible. That's what you would listen for. See, that's what I'm saying. You have to be very selective in your listening. When I'm saying when you hear like the media talking about this, about Peloton, when you hear them say something about what, okay, we might have to kind of shut down the gyms. If you hear that, guess what's gonna happen to Peloton? Young, right? It's gonna run.
That's what I'm okay. All right. That's what I but that's what I see. Like, and
before you get excited about that, you gotta be confident to know that that is only based upon that one-off value and that alone. You know what I'm saying? It's a binary news piece is my point. You know what I'm saying?
Okay.
That would have to become a reality where you have to hear the government come out and say, CDC or FDA, obviously, and say, okay, because of, if this virus obviously picks up, whatever, if it becomes whatever, you have to wait to hear that news on that, right? Because that whether people bought Pelotons or not, because of that, it instantly gives Peloton a use case mentality to say, well, see, this is why we still have what? Value, because now people forced back into their home, they can't go to gyms. Obviously, by way of that, our stock, will benefit, right? But that's a one. Now, I'm not even call it one-off event. Let me rescind that. It's an event that's driven strictly by that binary aspect right now, only right now, because of the fact that the stock is pulling back, for the fact that people are not getting back out in the general public exercising. All right, so just keep that in mind, and we're gonna come back to that because I want to make sure I get to everybody real quick. So, all right, okay. But we're gonna come back to
this right here. Is that what it is? The second one?
Say again. I'm sorry.
The demand zone, is that's what it looked like it's turning into? The second one, the middle one?
Oh, you talking about the pattern itself? Oh, whoa.
Uh-huh.
Let me remove all the stuff off the chart really 2 seconds. All right. That way you can see it clearer and I can make sure I diagram it here personally. So yeah, if you look at this again, you talk about, like we talked about, support, resistance point, like clearly right here, this little area right here, to the left, we all look to the left to kind of establish what history or the historicity of obviously stocks or whatever. All right. So right here, this area right here where it's kind of hitting right here now, that's this latest area of support that's holding it up. Now, if you margin, or I should say measure that by the idea where it hit in terms of its peak, its high point, right? And now it's coming back down to that point. That's a retracement of a lot, obviously more than 50%, right? Because it was at what, 170, 180, right? Now it's sitting at what, $44, right? That's a big pullback, right? You go from 170 to 44 and under what? How many months is that? 8-9 months, right? Because it hit its peak opposite in the last year. I should say that way.
Liquidation.
Yeah, that's exactly what's happening there. It's a big liquidation moment here. So yeah, at some point, somebody gonna try to find value in the stock. Now there's still a gap that still got to get filled to. That's what's crazy about it. Y'all see that little gap down there? Can y'all see it? Let me blow it up. Let me blow it up. I forgot this. All right, dog it. 1 second. Clear. All right, get this pin off. All right, right here. Y'all see that gap right there? That gap right there is yet to be filled, right? Right there. See this guy right here? Y'all see it? That gap right there is yet to be filled still. And so, yeah, and it's close to it, right? So right here, we just draw a circle here, right?
Oh.
See, that's a gap, right? So that's an air pocket. And guess what that sits at? It's sitting right at, right? It's sitting right at $38 a share, right? Now come over here to fast forward to where we're at now, right? See, the lowest we got was what? 42, 41, 42. So yeah, it could easily, still tap that 30 air pocket. And yeah, you right. From that pattern that you showed, Sister Shanika, that could easily be a new demand zone. If nothing else, for a short-term bounce, it could easily be a demand zone, right? Clearly, because it's right at that air pocket, it's all the way back down to that again, that gap fill. And from there, you still got some major consolidation happening right there before it, right? If it hit that area and hold, then yes, you should be able to get somewhat of a semblance of a bounce. Now, to what degree, that's to be whatever, right? But as you can see, now you're playing that back towards your moving average or any aspects of resistance points that came after it in this point. So if it hits that air pocket of 38, the first level is going to be the area that it just came out of, the 40, 44. If it take that out, then take out these guys at 50, it can easily find itself up in there, 51, 52, chesting the 20-day moving average, right? But again, that's just a speculative technical analysis based upon what the rules of engagement can offer you in that moment, because the stock has already kind of been liquidated quite a lot, right? I mean, it's highly oversold. Technically, it's really oversold on the daily. You see it at RSI 31, right? Before that, it was down here at 19, right? And it's crazy because 19 on the RSI, the stock was sitting at a higher price. Now it's at lower and the RSI come back up to 30, right? It's crazy how markets work on the technical side. But that's how you start looking at it. But you want to start trying to figure out if it can build like we just talked about, around the bottom. If that doesn't complete itself, then yeah, it can easily go down more. If it start to kind of round out here and kind of play in that, and you got some buyers to come up and step in and say, hey, look, we're gonna try to play this thing up for another, maybe 5, 8, 10 points. We'll just play the retrace, maybe back towards 20 moving average. And guess what? That's a goal that people might be trading towards. That's markets, right? So that's why I love it, because there's always opportunity. Even stocks that are highly beaten up and downtrending, they can offer up a good opportunity. So again, I'll say this here. If there, but y'all already know this, if there is any kind of hesitant value coming out of the government about, adding a little bit more layer of protection because of Omicron, then that of what Joe Biden came out and said today with his press conference about the Omicron variant, what they're going to do to implement more safety precautions. If there's extras in play, yeah, that could be possibly bullish for Peloton. Even in the short interim, nothing else, no more, no less, that still could be a bullish scenario. All right, so just make sure y'all keep that in mind. Of course, y'all already know that, but yeah, good read on that. So Shanika, you're spot on. That is definitely back down towards the demand zone, at least on a short-term perspective of a bounce. And that could be very useful for a person to kind of wait it out down to that point to see if there's any kind of, bounce can come from that. If so, yeah, you might can play that, back up to the upside to those points we just talked about, back to those areas there, back to that area of resistance there, back maybe towards your 20 moving average at that point, which would probably be sitting at around 50. Excuse me, at that point anyway. If it goes down an extra $2-3, then it'd probably be sitting right at $50 at that point for the 20 moving average. Right. So something to think about there. All right. So that's it. So yeah, so just using that real quick, and I was gonna get through everybody a little bit, but anybody just want to jump in there for the Peloton scenario for next year, right? But it's good because I love this. I love this because y'all get to get out there and work your Superman and Superwoman powers. You get to it's good. No, but just what it takes, guys. Just what it takes, right? And ain't nothing, odd about this. This is politicking money. This is how you politic money, right? You guys got to be excited for that. I know, y'all know I am anyway, but anyway, so yeah, we'll finish out with everybody since we got it started. So yes count, no count. So we got what? We got 2 no's. So we got what? 3 no's so far and 1 yes with Sister Shanika saying yes, right? All right. So anybody else? Anybody? Yes or no Peloton growth stock for next year? And there's a reason why I'm saying this too. I know y'all like, well, you're making this out of exercise now. Yeah, I'm gonna put you to work a little bit. Where you at, over Jeremy? I don't know if you over your mic or not. You might be busy. Family time. Where you at, over Jermaine? Jeremy Curtis in the building. Where you at, over Jermaine? Yes or no Peloton? If you open up your mic, you might be busy. He's busy. All right. Over David, where you at? See if he's busy or not. Over David, you able to open up your mic? He might be busy too. All right, let's see. We got that's about everybody right there so far. All right. Yeah. So again, just using it as that, again, that understanding. This is also going to be reflective of what I use this use case for one reason only. Everything that has to do with a stay-at-home stock, of course, they're going to be under pressure. They're going to be under pressure unless things get out of hand again with these viruses. That's sad because they're dependent upon making money off what? People being in a chaotic situation, right? But that's the market. That's why I say ain't no emotions in market. Ain't no ethics that you can kind of attach to markets because it don't run off that. It runs strictly off numbers. It runs strictly off numbers and data, right? So in this case, if Peloton pulling back for the most part, I got to say the most part, if Peloton's pulling back, you best believe what else is pulling back too, right? The other what? Stay-at-home plays, right? To a degree, right? Zoom, right? We on Zoom right now. Yeah, it's serving the purpose still because we can use it. But guess what? A lot of people like, man, we don't need it now. Look at the stock. Case in point. Hit an all-time high at near $600 a share. Now it's back down to $191. This thing opened up, IPO literally around about $50-60 a share and went all the way to $600. In under for what? No, not what, it was under what? No, it was about a year. It was about I'll tell you, it was about a year and about a year and 3-4 months, somewhere around there. But I'm saying that because again, as of 2020, when the COVID hit, we were using COVID lows as the pivot point. That's when the stock went crazy, right? Because there was a need for everybody to work from home, through online means and portals like Zoom. So the stock basically went from like $80 a share all the way to like 600 in the beeline. Like couldn't make this stuff up, straight up. So February 2020, okay, until basically October 2020, right? Right? Couldn't make this stuff up. The stock went from $80 to $600. And now it's back down to 191, right? Playing to that same scenario we just talked about with what Peloton, you got air pockets, right? It's an air pocket right there, small one, it's small, but it's there. Down to about 179, 180. It's sitting right there, clear as day, right? It could potentially come down there and close that gap because, again, markets typically have gaps that got to get filled at some point. They typically always fill those gaps at some point, and that's a gap that has to get filled. Clear as day, right there. That small little air pocket right there on Zoom, around about 180, right? 179.66, but we'll just say 180, right? So that's like. Okay, I'm sorry. Somebody say something.
Yeah, that's not the same one that you identified before, right? That's another one.
It's a different company. So anytime, look up in the left-hand corner on my chart here, you'll be able to track us in terms of what stocks we talking about. I got to get y'all on. Well, yeah, I'll do some on TradingView because I want to be able to, really get a lot of us acclimated to TradingView because it's a free, it's free, but you can learn a lot by using it to track your technical analysis through. Like when you just kind of mentioned that about the demand zone, Shanika. TradingView is really good because I know most people like work for their cell phone, they tap it sometime, but especially if you got a desktop, you can see it more richly, obviously, because it's bigger. But still, TradingView is really good to work with if you're learning how to, get, deep into your technical analysis. Not that you have to use it, but it's one that I definitely recommend, right? So I'll do something on that one day where we'll, get everybody together that want to, work with TradingView, and then we'll do like a quick little mini seminar on it, something like that. Like a little class. I guess you can call it class, right? But yeah, so it'll really help. Because I'm using the free version. I used to pay for this. I used to pay for the yearly service with this. I used to pay like $300 every year. They had this. Now that I know what I know now, look, free 99, right? I get everything done with free 99, and it works just fine. Since we've been doing our training on the free version. See how that works? And we still make it. Right, get excited, right? So yeah, we'll keep that in mind. Right. So all our COVID plays, when we call them the COVID stocks, right? We went over this stuff last year. These are the ones who started to get beat up because, again, the idea that their use case is not necessarily as relevant as before, they're starting to pull back. Teladoc, here's another one. And I'm bringing these up for a reason because tonight's discussion is what? Planning for growth, right? Volatility equals what? Expansion. Volatility is also could be a bad thing for certain stocks. This is bad for these stocks because the volatility is already opening up, and these stocks are what? Weak in a moment where the markets are pulling back. So that means they're gonna get what? Hit harder. Right? They're already pulling back. Now they're going to get hit harder. See how that works? This is volatility working against it, right? And some of the other stocks that broke out because of, late, because they were oversold, those are the ones that starting to run a little bit because they were kind of in the oversold. They were kind of, neutral, whatever, right? Depending on their use case, where they were starting getting a new lease of life. But these here are getting taken to the woodshed, right? Roku, right? Roku is another one. Roku used to be our darling stock. We used to love trading Roku. Roku, man, was always a good day trade. Man, we used to kill Roku on doggone TradeNet. Man, we used to love trade because they had always a lot of volume. They used to be very volatile. You make a ton of money trading Roku. Now, of course, this whole idea of what? Opening back up again. The use case of Roku got very rich, right? We was trading Roku down like $40 a share, $30 a share. And the thing just broke out, went crazy. As you see way down here, thing went crazy, right? It went crazy, went from like $26, in the 2019, beginning of 2019, all the way up to near what, 430, 400, near $500 in about 3 years. You couldn't make this stuff up. Competing against so-called Netflix. It became a stay-at-home stock just by default because it was an online streaming service. This is the craziness of markets, right? People just start throwing around crazy valuation. Like Laura Needham, right? She was one of the biggest, she's always been the biggest coverage analyst for Roku. Right? Like she despises Netflix, but loves Roku. So every time she was able to kind of downgrade Netflix, she would do it despite Netflix, only to kind of help what Roku stock. And she would just give Roku, unlimited bullish ratings all the time. I might look her up. She crazy. Lady named Laura Needham, right? Work from Needham. I actually work for that firm. But she's the cause or the reason. She would be like the Kathy Woods of Roku. Let me put it in that reference. That's who Laura Needham is. She was single-handedly the one that caused Roku to go from $30 a share all the way up to like near 500. True story, right? And now the stock obviously finally pulling back some. Of course, she done wrote this train way up here and made a ton of money. Tons of money. Same way, Captain Wood did with Tesla. So it's crazy, but that's why this stuff works. So yeah, competition, now it's expansive in the online movie streaming business. On top of that, again, these stocks are now the one that have that very, very high risk valuations. They were short-term growth plays. They were value plays, but they've turned into short-term growth stocks for the fact that there was the moats to deal with what? A stay-at-home environment under what? A pandemic. And now that is somewhat being what? Shook up a little bit. Now that's not the case. These companies have to learn how to stand on their own. They already got rich valuations. If they can't re-engineer their business to be something great where they can still compete, yeah, they're gonna come down some more. And a lot of these companies got a lot of gaps to fill on the way back down. A lot of gaps still have to get closed for some of them as well. So yeah, this is important because we're talking about planning for growth. Clearly, you're not gonna be running to dump all your money in the Roku right now, unless it gets a lot more cheaper. Down to 150, down here back towards 20, moving that when it comes to consolidating around this point here, around about 111, 110. Yeah, I'd be Huckleberry, right? And around them points. But until then, yeah, you might want to kind of be cautious about these. Right now, they're still in a very downtrending, weakness or slump. So any weakness in the S&P 500 that has nothing to do with the Omicron variant alone, but if it's just more inflation and supply chain and buns, that's going to hurt Roku even more. It's going to bring it down even further. Right? So, hint, hint, wink, wink. You guys are getting it, right? And on and on and on. So that's how you're going to start tailoring your ideal of looking at, what are potential growth stocks going into the next year. Boom, 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 boom. In comes the company that we talked about with the infrastructure bill. Here come Plug. Here come EFSA. Here come ChargePoint. Right? Here come EVgo. Here comes Clean Energy. Here come a lot of other little players like that. We literally would talk about this stock back here, during obviously in the summertime when it was pulling back, right? It kind of got into a consolidation phase, when it broke out, when it hit the all-time high, way up here, pulled back, consolidated. And now the idea of the infrastructure bill is back in play, or it's in play that it could be very vital as far as being implemented, because now the check is about to get cash from the infrastructure bill being passed. You got to just learn how to divvy it out. Right, we already got an idea how much they're going to divvy out. We went over that before, but these companies just now starting to reel in the effect of how they're going to start searching for companies. Companies are going to search them out to help build out this Build Back Better plan in terms of electric vehicles, charging stations, hydrogen use cases. So yeah, they are just now starting to get into what I consider to be a short-term growth perspective. So just like we just showed y'all, companies that's having a lot of outflow because of their stay-at-home armor is being chinked now, and they start getting beat up. These are the companies going to start picking up a little bit, right? They're going to start picking up a little bit. They're not, really hurting through whole lot of other, ancillary, issues like other companies dealing with, because they're already poised to get money from the government, with or without commodity shortage, whatever. Because the government going to cut them a check like they did with Pfizer vaccine to cause it to be up where it's at now in Moderna. So yeah, growth play, potential growth play right here. Hint, hint, wink, wink. Plug. I've been in Plug, $6 a share? Rode it all the way up to hit the top when it was banging out around about 70 plus. Took a little bit out, rode it back, and came down. Of course, I hit some little puts on the way down here and there. And now I'm excited again because we're above the 200-day moving average. We got the Build Back Better plan, right? And people still getting more bullish on what? Electrical vehicles and charging stations that's going to be needed, right? The idea of hydrogen and converting energy, right? Clean energy to the renewable energy. That's what Plug does. So they're just waiting to get a whole lot of contracts knocking on their door. That's all thing they're doing now is waiting to get contracts. People come knock on their door. Hey, we want to use you guys. We know you guys are part of the Build Back Better plan because blah, 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 right? And that's going to be what? Cash flow. So that's how you got to look at that stuff. So that, many others, right? Of course, y'all know we went over this stuff before. Ain't nothing new, but I like to resurface it because today's topic is just that. You got to realize you got to stay up with the signs of the time when it comes to investing. It's like a soap opera. You got to keep up with what show is going, right? Whatever your favorite little show is, if you like Power, right? If you like what them little shows out there, y'all know they out there. Y'all, what's y'all favorite little show? I know everybody got one. Don't front. Don't y'all get our brand new one right now. What's your favorite show, Shanika? I know you got one. What's your little show? I know you probably got. What you like to watch? She ain't. She's studying right there, but she's thinking about the money. Where you at, Chris? You got a favorite show? Anybody got a favorite show? What's your favorite show? Right? What's your favorite show?
Oh yeah, all-time favorite. Okay, let's do a new one. The show Billions.
Billion. All right, not good choice. Darn good choice, right? That didn't get, but that right there connected to the marketable way you can imagine. Right?
Yeah, they do. Facts.
So Billions, right? What you got over Rich? Anybody jump in there over Brandon? What's your favorite show is? What's your favorite show? Everybody watching right now?
FBI.
You watching FBI? All right.
Yeah,
all right.
the series.
Ain't going to throw
that's
Law
the
and Order
NYC.
up there.
Where you at over Rich, Jeremy? Where you at?
Law and Order.
Law and Order, old school, boy. You went old school with it, boy. All right, that's that good there, but they ain't never fell out yet. They still propping them Law and Order too, ain't? All right, Law and Order. Anybody else? What's your favorite show? Anybody? Over Brandon. What you got?
Show.
Yeah, what you watching right now? For keep your attention.
No, Billions.
I don't watch TV, but I do look at all right, I'm just trying to make some up now. I don't watch TV.
Be honest. You gotta make that. No, like what, it could be you might watch stuff on what? Meditation, right? Again, it don't have to be like a show. You know, meaning something that captures your attention. That gets more your attention.
It may be relationship, family stuff. I don't.
I just put that family stuff. Ain't nothing wrong with that at all.
Oh, okay. What's that show? Oh, no, kid. What's that show? It is one show I let them watch. What's that family show? The family show with Tia Tamel, one of the sisters of the twins. The one that you watch with the family on it, the football player. Family reunion.
All right. See, there it is. Right, family reunion. All right, good choice.
I had to do all that.
Good choice to the young man here in the back. So family reunion, right? Anybody else got a favorite show? What's your favorite show? Right.
Also like to watch stuff on the internet and kind of black financial shows.
Anyone specific? Anything specific?
Come Up, EYL, stuff like that.
And
you're on.
All right. So financial.
It's a show called Startup. It was on this website called Crackle, but they put it on Netflix. But it's about cryptocurrency.
All right, so Startup. All right, so we got some good choices here. All right, so again, using these scenarios here. Of course, anybody maybe on the YouTube side, y'all might be typing stuff. Of course, I can't see it now because I'm got the screen up, but guys can follow along. Of course, even though we got the training going, but this is what we're trying to, again, of course, number one, capture your attention. It's something about it that keeps you focused into that reality, right? These opportunities within these stocks here are kind of within that same perspective, right? Because again, we talk about, number one, interest, right? Interest level, right? Interest level matters a lot, meaning your interest into it, or to maybe do the research or something that, offers you something when you do watch it to a degree, right? These stocks, especially these kind of stocks, are now starting to kind of pick up, and they're getting a little lease on life, right? Not a new one, but sometimes they're just still waiting to break out. You start to see that now starting to come to fruition. Again, we was talking about this literally about what, a little bit of last year, well, not last year, last month with Plug, and then into November, and then now coming into December, right? So yeah, sitting richly, above 200 at this point so far at $31 a share, sitting up here at 36, is still in a good position because the chart still looks very good off that point of support that we know it bounced off of going back, down here at this point where we drew that line at, right? And it's what? Growth laden based upon what? Evolution of what? Innovation, right? A need for what? Clean energy, green energy, all that, right? Build back better, right? Even before build back, the idea that we was already headed there anyway. So that's what we're talking about. These are going to be the new cycle plays that money going to rotate out of Roku, right? Some of it, out of Peloton, some of it, out of Zoom, some of it, right? Out of Teladoc, et cetera, all those stocks. And it's going to rotate into stocks like what? Plug, Charge Point, right? Lucid potentially, right? And many others, right? Growth stocks, right? Value at this point, but could potentially become a growth stock because of their technology innovation. See how that works? And some would say they still rarely cheap. It depends, right? Still got to mark it up against the valuation that the markets are, vying for in terms of what these companies might be worth, but future valuation starting to tick up as there's a more of use case or need for these companies to get in the front of what contractors who want to what bid for their business, that's going to cause what price targets to go what go up, which obviously going to cause the valuation to go up. See how that work? So we talking about into 2022, yeah. And these checks are already again about to be cashed because of the infrastructure bill. So you see what I'm saying? So we can show you the stocks that were whatever, the Pelotons and all that, and then we can play, trade that for some other stocks, rediversification, and some of the stocks that now finna get you catching what new lease on life, or just a new lease. I don't even say new lease on life, but just a they getting they ticket punched a little bit here. Finally, they're just due. I'll say that, right? They're just due. Right, y'all with me there? Is it making sense, guys? You guys with me?
Yes, sir.
Make sure we follow along, because again, this is going to be vital. And I'm saying that for a reason, because these are not me giving recommendations, because we're not doing that here. This is just what education, entertainment for our training, right? It's not investment advice, but it's an understanding that when we're looking for yield, alpha, right, opportunity, a rotation of markets that may be under a lot of pressure potentially next year because of all the issues that we know is coming for, increased taper, potential rate hikes, whatever, people gonna have to start finding some real plays out there. They can't just depend on free money just to be a wild beast savage kind of, marketplace any longer. They're gonna have to go out there and fish. They're gonna have to go out there and hunt. Some of the jokers that have just been spoiled by the market, just been riding stuff because they buddy been telling them about this and that. They're gonna be backpedaling a little bit next year. They're gonna be backpedaling, right? They're gonna be like, man, I didn't learn a whole lot. I just was just riding away. Now I gotta, all right, I gotta go out there and fend for myself a little bit. So we want to be prepared. We've been being prepared for a reason. That's why we had these sessions. That's why we've been talking about this ever since last year. We broke most of all this stuff down last year, and we just really mapped out the sine waves of how markets are going to kind of react to all this stuff. And lo and behold, we've been pretty much spot on thus far, from all the way from the economy slowing down to this year because of certain thing, GDP, contraction, then looking at the base effect as a way to say, well, if we at the dead bottom, everything looks bigger from the bottom up. Of course, that's when the numbers look really good, but necessarily ain't really doing it. Usually getting back to neutral, right? But they can play it up in the media, and that causes stocks to run, right? So it's not hard to see what's going on here. The same way dealing with almost peak, we ain't even hit peak media yet with the Omicron virus, right? We're still yet to get peak media with Omicron virus. So guess what? Over the weekend, how many headlines y'all probably think gonna come out about this virus? A lot, right? We just now starting to get cases in America, right? Over the weekend, you're gonna start hearing about it, hitting up certain states now. It's already in New York, right? Obviously, what don't hit New York first, right? It's New York, boy, woo, right? They trying to make New York hot, but it's in Minnesota, right? You got it in Minnesota, right? It's in California. Now, technically, we knew as of yesterday, before this news came out, yesterday, even the weekend, that it was already in America over the past weekend. Stop playing. It was in America during Thanksgiving. But you know how this stuff go. They got to make sure they can put a price tag on it first and make it official before they say it's here. So people are already saying it released about a minimum of 2,000 cases already in America over the weekend. That's what most lead scientists were saying, not speculative people, but lead scientists that deal with virulent outbreaks, stuff like that, whatever. They was already saying at least a minimum of 2,000 cases were probably already in America before we begin to get our first registered through the CDC or FDA or whatever, or whomever, right? So no secret. So over the weekend, you can start hearing about it. Oh, it's in Virginia. Oh, it's in probably New Jersey. It might have popped up in Maine. Oh, okay, it's in Texas, right? And then from there, they're gonna start doing like an outline school, just drawing a scatter plot like this state from the center of it, Omicron in the middle, and they're gonna sensationalize it. Some are gonna play it down, right? But that's what you're gonna have to deal with getting through the weekend. So the markets might be trying to we might want to get all we can right now really quick, because people might try to fear it out over the weekend, FUD it out, right? Fear, uncertainty, doubt, which may cause pressure on the market. Which may cause pressure on the markets. So that's another form of our technical analysis and our fundamental analysis, understanding how the media works and how it plays up certain news points, news pieces, and how it may affect your individual stock or the overall market itself. That's a part of your research, your methodology. Yeah, you can't overlook that. Now you may be more technical technician, a technician, tactician, but you can never overplay FUD, fear, uncertainty, doubt. Human emotion. That's what drives people to make what? Rash decisions, right? It happens all the time. You can't escape that human essence of who you are or your neighbor or your person beside you, right? What did you say back in church back in the old day? Touch your neighbor and say everything gonna be all right. Yeah, try that in the stock market. You're gonna lose a whole lot of money. Hey, bro, you told me everything gonna be all right. My stock down 80% today, boy. I lost everything. Wife, dog, cat, house, job, everything that left. Even the animals, the bugs outside left my grass. They didn't eat my grass no more. That's the market. Markets don't move on emotion. It moves off of emotion, it fuels it, but meaning, when people make bad decisions or capitulate, but technically it doesn't. It's gonna move on numbers. They're trying to price stuff in, put a number on it, right? Because greed begets greed. So we want to make sure we're cognizant of that. So that way we always making what? Very scientific, almost dangerous scientific decision making when we put our money into the market to be able to benefit off of it. So that's why I tell people, man, they be like, well, man, y'all be sitting around and I try to follow, but for the most part, from what I'm seeing, I'll just kind of just buying a lot of stuff. No, we making some strategic calculations here. We're making a strategic conscious decision. We're making an executive decision. That's what you do as an investor. You're making executive decisions over your money. Let that marinate. Executive decision. I don't care if it's $2. I can make an executive decision over a $2 contract. And if I can map out, to turn $2 into 20, guess what? Let go. Let's go. And we do it. We show people how to do it. We didn't done it. We do it a lot. 5 out, 5 into 30, like 5 into 60, $80, turn 10 into 100 plus. And just be like, man, how y'all did that? You just got lucky. Okay, let me show you how we did it. The income, then they got to eat crow a little bit. Like, all right, but still. See, no, it's not all about it. See, this is not a congeniality contest. It's not. Because you're dealing with, data and money. You're dealing with what we've all been kind of, positioned to understand in terms of time over money, right? That's the best mathematical equation ever on the planet, is time over money. And money don't necessarily mean paper currency. It could be, money could be value, any kind of valuable resource in itself. A form of currency is my point. Energy, right? It's all synonymous at the end of the day, but we're using it obviously under the paper money value, right? The fiat, right? But you're still making the decisions, my point. You're making executive decisions over your situation. So don't run from the opportunity to learn more about this. Run to it, right? Understand that you're still trying to plan for growth for your future, are you not? You got kids, you got family, you got retirement in mind. You don't want to be trying to hustle your way through life, for 30, 20 years to see if you can make it every day. Ain't no, man, look, this ain't the Hunger Games, right? The Hunger Games look good on TV, but look, in real life, we ain't trying to play, we ain't about that life. Stop playing. Because by the time, at some point, you're going to get old, you're like, man, I ain't got the energy for this, right? Look, something need to start working for me as opposed to be work for it. Well, that's what your resources are set up in place for. You have to put that money to work at some point. You got to stop playing the timid game and start being what? Let me trap it game. Right? Let me get this market, put up in a box. Let me kill box this market. Let me kill box this stock. Let me get paid, right? Because the government get theirs off the top anyway. They already hitting you across the head. Yeah, you might want to go back and get you some of it too. Especially if they're going to be accommodated in pumping markets and doing all that they do. Because it's obvious that now they're going to start using the stock market as a barometer of their success, whether they say it or they don't. But it's never a reflection of the real true economy, because Main Street is the true value of what your economy is supposed to be, meaning the people, not these stocks. But that's just show you how greedy America has gotten, and to the point they're on a collision or crash course with destruction, because they've left the ethics behind when it comes to building people up. And now they're just in the whole game of building their pockets up. It's like this boomer class is going out, with a bang before they had to turn the reins over to everybody else, all these new people. And they just cash out. But again, these people silly because they can't take it, take it in the grave with them. Yeah, they could pass on to their heirs. But for the most part, yeah, there's a lot of big social changes starting to happen in around this country, believe it or not. So yeah, a lot of these stocks that were big in their heyday time are not going to be as useful as they is in these new kids' time. They already letting it be known. No, we in the ESG, we in the environmental social governance, we in the human rights, so them having stocks like that, emerging market, we in the building nations up. Yeah, those stocks going to be leading the roost. Clean energy, right? That's why Tesla booming the way it is, because young people see it as a what? A play on the what? The old fossil fuel industry, right? It's kicking them in the teeth. See how that works? Whether you for or you against it, but money don't care about your feelings. They only care about what? End goal analysis, period. Roll credits, right? So we ready. So again, planning for growth. Do not be mistaken. So guess what? The same way we talked about this topic of planning for growth, you need to be tearing up the internet. What are some of the better growth stocks for 2022? I mean, you literally can write it in there just like that. Void of, the virus, right? What are some of the stocks that are antivirus? No matter how you query information, the more you keep doing it, the better the research or the machine itself in terms of the internet is going to try to kick back you a lot of stuff that's out there that people might be writing on the same way that you're thinking. It's going to align with somebody else's thought process to a degree. And you just start taking it from that point on. See how deep the rabbit hole goes. That's proper research, guys. People act like you got to have some extenuated knowledge in this, and it's not. It really is everyday stuff. You see these companies, you hear about them, you see the commercials on TV, you hear somebody talk about them in passing, and then we sit there and act like, we just so, lost from the idea that who the companies are. Like, no, it's the same reason why you may be a person that be into something, and you have a favorability to it, but guess what? It might be somebody else out there too. But it's not hard for somebody else to know what that stuff is in passing. They might not know to the extent that you know it, but they've seen it, heard it, read about it before to a degree where they can recollect that. See how that works? So that's why I'm saying, be a sponge, guys. Always be a sponge. This is a game of what? Find your own niche or niche, but steal from everybody game plan. You got to. You have to. Because the markets don't respect one ideology over the other. It only going to respect the money. Inflow and outflow, essentially. Where the money going? Follow the money. That's why we say follow the money. You can't kind of trade the money, working with, a few $100,000 or $1 million. Man, look, it's trillions of dollars moved around the market every day. Trillions with a T. Matter of fact, on the way out the door, I got to show you this, right? Man, look, I love this stuff. Only because of the fact that I just I'm thinking about the time that I know I missed, because when I know I should have been in this when I was 17, 18, 15 years old, all that time I missed not getting this. I'm trying to play the market back for that now, right? Right? Because I know we all should have had this when we was in our teenage years, but it wasn't hidden. It was just that it was not it was not marketed to us in the way that it should have, right? Because that would have been, man, wow, we would have been, look, where would y'all be today? I always ask that sometimes. Where would y'all be today if y'all had got this when y'all 15, 16 years old? I had time to curate this. Everybody will have a yacht in the backyard, literally a yacht in the backyard. Even if you ain't got no water in the backyard, you got to sit there on some blocks back there. I got a boat, but I didn't even use that thing about 3 years back there though. I can afford it, right? Man, look, we got to go. Look, we doing good. We're going to get better. But that's why this stuff is good. When I say that, because you're learning how to now take information and apply it from a financial disposition. I'm going to show you exactly how markets work. This is the beginning of the market today, intraday. See this big bullish and engulfing candle right here? That is the first 5 minutes of the market. Y'all remember I used to tell y'all way back last year before that, all that. I was like, you know what? If some people make more money in the first 5 minutes of the market in a day than a person will make in their entire week. I used to say that to a lot of people back in the day, and they used to be like, yeah, you just joking a little bit, man. You just being hyper right now, brother. Boy, you ain't serious. But these were the circles I was in, so I had a chance to see. I saw people making, $20,000 in the first 5 minutes, $60,000 in 5 minutes of trading. And to me, I was like, I got to be in a position to do that. What are they doing that I ain't got, that I can't do, or I haven't done? That's how my mindset was working. And I do my little thing, maybe 300, 400, whatever, 500, every now and then, catch my little bags. But also, the only thing different is lot size, right? They're bringing more to the table than that at the time than I was willing to want to risk. And I was having probably in some cases, not all, but I was like, let me work within my comfort level till I can get better, because it's easy to get trapped in the human emotion and just jump out the window. When you think somebody else make a lot of money, you feel like I could do it too, and I should be able to do it easy. But the markets aren't always designed to work that into your consciousness until you're ready to deal with that. Make sense? So you got to be able to read this stuff properly and also be able to act on it according to what you're capable of doing. And I'm going to show you exactly what I'm talking about. This is the first 5 minutes of the market, right when everybody thought the market was going to plummet down even further. This one candle right here, that's a bullish engulfing candle. Now I'm going to show you this. This is a 5 minute chart. There is no other candle on this chart at that size over the past how many days. I can scroll back. You're not gonna see a candle that big on this chart. Right? Even though the market may have some major bullish moment. That candle right now, even when it's condensed down there, is standing out above all the other candles. Look at the size of that candle right there. Right. Let me draw an arrow there and lock it so y'all can see it. You see it over, Chris? Y'all see it? See, this y'all see. Go ahead.
Even when you zoom the screen out, those two candles stand out more than any of them.
Don't it?
Yep.
Clear as day, right? Clear as day. Right? That's why I'm gonna draw this little candle, that little arrow right there, so y'all can keep your eyes trained on it, where it's at on the screen at all times. The side of that bullish and go for candle right there, even the one that dumped the day previous before, you don't see nothing else out here like that. And SB known for what? Having manipulated candles. They known for manipulated candles in the day, intraday. That's almost like the candle that we had back during the COVID lows, wanting the March low, that when they pumped that $1 trillion into it, it's to that level. Like the market was like, okay, this is it. We cannot afford to let the market plummet down right now, or we're going to lose the potential value of our Christmas rally. And it still might be over, but Wall Street don't care. It's going to always try to save face. It got to look like it's stronger than what it really is. Y'all know how American politics is. These people are straight what? Straight charlatans, right? They call it what it is. They good at selling something. Well, they keep 100. I know this, joking like this is my side, but I'm like, bro, look, all right, like, hey, I'm independent, right? Y'all want to see my voter card? It says unaffiliated on it. My voter card. I'm unaffiliated, right? I don't even play that game, right? Yeah. Right? Because I'm too old to play that game at this point. But I'm gonna show y'all this. But that's serious. Look at the candle. That candle. So now, yeah, I can go back and back. Y'all see what I'm saying? But you're not gonna find them that big on like the size of that candle, right? That's a sign. That was a sign that they was up against a rock and a hard place. They had to save face, right? Or the market was really gonna pull back. We already had a line mark down here at 446. We were easy going down there. Now, not that it can't go down there tomorrow, right? Anything can happen. But we still know one thing above all things, even on the 5-minute chart, the market is still in a downtrend based upon what? Lower highs that are being printed, right? That's why I tell people, don't panic. It's organic. Don't panic. It's organic. Look at that. What that is right there, Pete. What is it right here? Lower high. What that is right there? Lower high. What this is right here? Lower high. What this is right here? Lower high. Right? Y'all see this? I ain't making this up. People like, man, I don't want to say how you be doing. Yes, you do. You just got to earn your mind. Your mind got to earn this opportunity to not fool itself. When you see it, honor it. Look back at this bigger chart frame. Look at small time frame. Look to the left to establish the future, right? This ain't hard. Guys, we talk about this stuff religiously for a reason. All I see is hard or what? Lower highs, right? That means technically until they break out of this, the market is in an uptrend or a downtrend. I'm asking. It's in a downtrend, right? Asking for a friend, right? It's a downtrend, uptrend. We're in a downtrend until that changes. So that means even though you have wicked snapback candles throughout the intraday, that's just to save face. That's them trying to save their little dollar. They're scrambling like roaches at Wall Street. Somebody cut the lights on at Wall Street down there, and them jokers scrambling around like my dollars, man, my yacht money. That was my wife's plastic surgery for this week, man. God dog it, man. That's the stuff they're dealing with, right? Could make this stuff up. So that's the reality of things when you're dealing with markets from a bigger perspective, micro and macro. We don't get nervous. We get what? We get our mind right? We see it here clear as day. But yeah, going back to that candle real quick, we get ready to close out here in a second here. Going back to that candle, right? This is volatility, guys. This is how you make money. Volatility equals expansion. Expansion is good one way or the other. Now, if you're a long-term portfolio carrier of things, yeah, it could be a little painful watching your balance sheet or your P&L go up and down throughout the intraday, but that's fine because guess what? You're still mapping out potential what? Dollar cost average moments, principal-based investment moment where you can get it marked, get your opportunity in at a discount price, but you got to be patient and wait for it too, because it may not be done yet. Because we still have to abide by the rules of engagement. What does the chart say? What does the money flow say? Until those things change, you stay what? You stay committed to the opportunity unless your scenario is what? Telling you to ring the register. Now, if you already up rich amount, then yeah, you need to be ringing the register. I run the register on Moderna. Over 370 something, then 330, and pulled all the way back down to 200. Now it ran back up because of this old Omicron stuff, right? It gave more people that was up there at them point that was bag holding that bought up that some of them jokers that run the register and pulled it back some more. Now Moderna right back down there, near low 300. But it still has a potential the growth, because I ain't leaving the whole growth story alone, because it's still going got some stuff coming out the pipeline. It got that new super shot coming out. I call it the super vaccine. That's basically what it is. It's gonna be able to kill like 2 or 3 things in one shot. All right. So, however, whenever they get to that point, whatever, right? But we understand, at least for now, I'm not going to be buying Moderna at no 330. I'm not buying Moderna at no 370. It gets cheap, yeah, I'll add then, but no, right? Still rich, the price, right? So that's how the things work. So again, really quick. So that candle, just to show you what I'm talking about, is the intraday. This candle right here accounted for every bit, right? Every bit. Hold up, let me stretch this thing out here. My volume bar here, right? It accounted for every bit of, right, put it over, right? Oh, this ain't, no, that's not the right accurate readout for this one, because it was like 200 and, oh, I got it right. Yeah, right. What does it say 300? So 300, what does it say 340? Matter of fact, let me go to what's that, because I can more accurate readout. I don't know why I'm just sitting there playing around like that. I'm playing around here. Blah, blah, 5 minute. Nope. What are we at? 5 minute. Oh, come on now. Come on, Jebediah. Hold up. Let me get out of this here. Let me go to, oh, the minute chart. That's why. Sorry about this, guys. 1 second. All right, here we go. All right, so 5 minutes. Let me see exactly what I'm talking about here. All right, so yeah, it was a total of 241,000 shares, the first 5 minute candle, right? Open up at 450.73, right? Yeah, it had a low of 450.35. Yeah, so that one candle, that's 241,000 shares of a $450 ticket. Somebody could do the math on that, how much that candle was worth the first 5 minutes of the market. And that's just cute, accounting for that the market can read through actual share being bought. It doesn't account for the dark pool, because that's what also moved that candle. That was dark pool buying, and it was also accounted shares that's coming through order book from basic retail traders that pick up on that side. So we know it was bigger than that, because that candle wouldn't have been that big alone, just on the 241,000 shares in the first 5 minutes alone. It was dark pool mixed into that, right? Again, that's them saving, right? We saving that bacon. They were saving it, right? They were saving it. That's 241,000 times. We'll just use 450, right? Just on GP. That's $108 million in that one candle, in terms of what we know for as market maker stuff. Again, not accounting for dark pool as well. This guy, right? That was, again, that's what they need to spur this the downtrend. Even though it tried to come back and test it here, it bounced again. It was clear as day that 452 was going to be what? They were planning to hold dollar mark pivot points at that point to keep the market from going back lower at that point. And after that, the market just kind of rolled up to the upside. It grinded up. When it hit sideways, grinded up a little bit higher and low. Every time bears got excited, they grinded back a little bit higher. And then right at the end of the day, like they always do, rug pull. That was just enough to kind of keep options, to put buyers at bay. Keep them nervous, a little bit on their heels a little bit. But you know what I mean? Soon we got up into the 200 moving average on the 5 minute, because that's what I was looking at on intraday, because I watched the 5 minute on intraday. I was like, oh, anywhere near the 500, the 200 moving average on on SPY, the 5 minute chart. Oh, I'm definitely gonna be trying to look to buy puts. Clear as day, right here, around about 230, I'm buying puts. Came back to us 20 moving average. I said we might get the pullback. They ran it back up again, tested again, got rejected. Right at the bell, almost staying there, greedy with it. They thought they were gonna really shake a lot of these bears out. Right there again, oh, let me buy me some more puts right there. Because all I'm looking at is looking at 200 moving average. I'm not sitting there, getting my emotions all wrecked up because of people see the market doing this. And I'm looking at major indicators to tell me these are major moments of what? Resistance based upon the moving average. The 200 of all on the 5-minute, on the intraday chart. I'm buying puts. Bam and bam. And the end of the day, what the thing did, look at that big bash and go for counter straight down. Let me collect all that. Let me get that premium. Let me get that, right? Let me get that. So going into tomorrow, guess what? Yep. Yep. Right? So yeah, that's gonna be a nice little bag, right? If the future market check out, which I was, like I said, I was looking at after I was a little bit, I was like, man, what's this thing trending down, trending a little bit? Something must be going on. So apparently, you know, I don't know, it could go either way, but you know, I'm still playing that 200 moving average, right? I'm willing to risk it. But let's see real quick what the future look like right now, GP, right? Before we get ready to get out of here for the evening. Y'all guys follow me so far? Are you guys with me so far? Y'all guys picking up everything I'm putting down?
Ring. Yeah, bloody, baby. It's
yeah,
bloody.
look at that. See? That's that. Everything we just sat there and talked about, this is us mapping all this out. The potentiality of what markets potentially could be, you know, setting up for going into the weekend because of all this news, right? The intraday pump was just no more than them trying to save face and trying to present what? All it did is make another what? Lower high. Think about that. That's how you got to slow the market down. Again, Neo in the Matrix moment. Slow it down, guys. Make it make sense. Right? That way you don't get, you know, overly, too, emotionally compromised into the market at that point. Let it come to you. All right? I'm sitting there locking up, slowing up a little bit. Oh, okay, I got all the screens open. But yeah, so right now, yeah, the market got to fight through all this, all this here tonight, this blood. Now, the last 2 nights in future market, the market was up almost like 200 points plus on every bounce. And the next day it rolled over, right? So now it's pulling back. So they may try to play for a quick bounce in the morning, if that, and then after that, the market only what? Roll over possibly. So anybody that bought puts at the 200-day moving average, discipline value-wise, right now, they eating. So I got, a couple of them out there I'm eating right now, right? Making money right now while I'm talking about this. And I still got, go ahead, sis, I'm sorry.
If they bought puts with who?
On the S&P 500, I was using that as I was breaking down that early on the trading view chart, like that candle I was telling you about that 200-day moving. Well, I didn't specify, but I guess it should have just colored it. This is the 200-day moving average here. That's obviously as a major indicator that we always look for as a demarcation line for markets, whether it be bullish or bearish, underneath it or over it. Now, intraday, of course, 5-minute chart is more based upon the intraday trader, right? On the S&P 500. Now, on a bigger investment perspective, you more so want to look at the daily chart, right? We always look at the daily chart to do a lot of assessing where markets at from day to day, right? On the bigger picture. But on the micro picture, you look at what? 5 minutes. Some people use 30 minutes. Everybody's different flavor. But I'm just using what they call the universal standard. The universal standard, if you're intraday trading the market, especially the SPY, long, short, or common shares or options, a lot of people always have the 5-minute chart up too, right? And they may still have a 15 up a 30, but the 5 is very universal for intraday, right? It's pretty much very universal for intraday. But that 200-day moving average is a major indicator where markets always respect it, right? As a bullish signal or a bearish signal. Anything above it is bullish. Anything below it is bearish. Make sense? That's on the intraday 5-minute chart. I'm gonna repeat that if I could be very clear. On the intraday chart, anything below it is bearish, anything above it is bullish. So if it's trending at or around it and can't break above it, that's a problem, right? That's how that little song go with the rapper Young Jeezy. They don't want them problems. How I be saying, y'all don't want them problems. Look, you get long too, little too excited right there, think you finna break out, and guess what? This right here happens to you. That candle right there, that big old red bearish candle right there, lights out. Because somebody bought calls literally, and they had a reason to probably feel good about the market, probably trending up on the news potential of the what, government shutdown averted and all that stuff. And they probably bought right at the 200 moving average going into the close. Like I feel good about this, right? And then guess what that candle right there did to it? It pulled their heart out. It pulled their heart out from the back of their chest, right? From the back. So that's markets, right? So yeah, that's why we wait for that last 5-10 minutes for a reason. I always tell people that sometimes. For me, that's what I do. Of course, that's just me, right? But clearly, I was explaining 200 moving average. That's all I need to see. I need to see that, and I needed to see this. Even if it tapped it there, that wick, but that's all I was waiting to see that right there. When I saw that happen, I said, okay, I'm gonna buy me a couple swing puts here. Yeah, that's resistance, buddy. All day, every day, clearly. And it's again a favorable what moving average. So that's technical. That's not a guess. That's a technical assessment, executive technical assessment, right? And the market was already kind of hitting some weakness here because it went sideways for the longest and couldn't break any higher after making this big egregious move off the lows. It was already had got expended of most of all this energy getting this move here off the lows, right? So Wall Street ain't crazy. Don't let them fool you, right? Don't let them fool you, right? Or even try to school you. Don't let them do it, guys. Because Wall Street, the algos are very sharp, right? They're programmed to play into your emotion. They're waiting for people to set stop losses and all that stuff so they can see it and trigger it. I'm just using good old-fashioned indicators, which we've been trained to do. We've been trained to look at them too in the same breath. So that's why the 200 moving average is golden. Everybody needs to learn it. The 50-day moving average, golden. That's why everybody needs to learn it. The 20-day is golden. That's why everybody needs to learn it.
No,
And even down to 5 minutes, and definitely the 9. Right. Right. Let me get that 9. That 9 moving average, definitely. That's definitely intraday. Right now, you talking about language here because that's go old school. I used to trade them tick charts. Man, that tick chart, that 9 moving average on that tick chart, that 133 tick, bruh. Y'all want to get your eyes right? See if you got some good eyesight, trade that tick chart, that 133 tick. That thing be moving like right there. You be like, God, dog, bro, what? Right? I literally came up trading that tick chart. And Mr. Lord was like, bro, I don't see how you do it. He's like, I don't see how you do it, brother. I said, man, I want to catch it every moment of this. I want to see the market at its, intricate level. It really helped train my eyes, though. It did. I'm not gonna lie. It helped me train my eyes to be able to, spot movement, volatility, quick, pivots, all that stuff, whatever. But that's just me. Everybody different, But no, seriously, those right there, study them. 20 moving average, 50-day moving average, 20 moving average, and 9 moving average. Definitely study those. And in relation to how important they are when it comes to a technical, breakdown of a chart assessment, inflow, outflow of money, right? Clearly how important is that, and then how it plays into the pattern game after that, because clearly right there, y'all see what happened once it got off the lows here on that. Hold up, what is this thing at? Hold up, what is it? Okay, once it got off the lows down here and got above 20 moving average, it fought to get way back above 20 moving average right here. And then it got rejected a little bit. It got above, there's your cup and handle off that 20, got back above 20 moving average again and end up turning the 20 moving average into a level of support. Clear as day right there, as you see right there. That was your exalting of the stock higher at that point. Old school textbook. Look at the pattern. What is it? Cup and handle. Equal or greater value of the move coming off the pattern of the cup. Here's your top of the cup. Here's the bowl of the cup, right? The move was equal to that of potential on the breakout to the upside to equal that move of the top of the lid. I didn't make this stuff. I don't make the rule. I just trade by it, right? Or I just, I'm, subjected to it like everybody else is my point. Make sense? Right? So that's how we stay, we stay within the confinements and understand how this stuff works so we don't get beyond ourselves, right? Clear as day there. There's your breakout for the same value of the move, or the depth of the cup became the depth of the breakout. That's a little too big there. All right, the depth of the breakout. Make sense? All right, so Shanika, go ahead.
So where you put those white circles, that was bearish. Anything below that was bullish. And
hold on,
the top,
you be specific because you got to point to the screen. You can write on the screen too, just in case, but if not, show me where. The ones I put over here, one's here.
Right here. Can you see my arrow?
Oh, let me take all my stuff off. I'm sorry. Let me get all my scrap off. Now go ahead. You got it. Y'all like when y'all play right on the chart too. See, y'all make me all excited. You're joking working now. Go ahead. No, go ahead. Put it up there. No, go ahead. You got to do it. Go ahead.
Can you see what I'm doing?
Not yet, and showed up yet. You should be able to write on the chart though, because you got privilege to do.
I need to click on something to write, like on the chart.
It's in the go to the God, I forgot what it looks like. It's down there in the menu bar. It's probably the drop down button next to, God, is it share screen? I think that's where that button at for the bit to annotate on the
Okay.
chart. It's say annotate. You'll see it's gonna say annotate.
Oh, share screen. You cannot start share screen.
Not
while
share,
the
not
other-
share. It's not that. It's called annotate. It's called annotate. It's a little pen or a pencil looking little icon. Or if it don't show the icon, it's just gonna be written in the word icon. It's one of them on. It's near one of those drop down arrows that you may have to hit. That's in that menu bar where you have start video, mute, all that stuff in that. Hit one of the little drop down arrows so you see the word annotate. Then click on it.
Let me see. All right. Let me see.
And you should be able to find it because it's there. Everybody has access to it.
All right. Let me see. Maybe.
It's right in that bar. Don't stay right when it inside of that, because if not, it'll definitely throw you off. I remember one day I was doing that with a training session, and boy,
Yeah.
since I was doing it at the time, she thought it was like in a whole different box. I said, no, it's in the menu bar. She was all up and down the screen, like the screen I was on. She thought it was on there. I was like, no, you can't screen
right?
on my screen yet. Like we ain't got that good. But we're getting there with virtual reality. We definitely going there. Take that back. But at that time, boy, she was trying to make that thing come up, boy. She would hit my screen. I'm like, no, it's on your.
Yeah. You know, I'm not even gonna hold y'all up.
It's right there. Why I have to come back and show you how to do it? It's right there though. But you know, if you ain't used to it, it's probably like, okay, I gotta search for it. But
You know what? No, on my other computer and my phone, I don't have no problem. I think maybe this one, and I updated it too. Maybe it's
you can
another.
do it from a cell phone. Keep in mind, it's universal. It's not like it's like you get it from you have one device or another. It's a universal macro button on Zoom, so it's all a Zoom. It's not even have to do with the phone or the tablet.
Annotate. It was at the very, very top of the screen.
I see.
Okay, there you go. All right. I'm about to do some doodling.
Yeah, go ahead, get on that chart.
Okay. Where's the pencil at? No pencil at. Mouse. All right. The mousey. Can you see me now?
Yeah, you should be able to draw on there.
All right, I'm gonna draw.
Yeah, you got to draw.
I'm just gonna draw.
I'm not gonna see it until you draw it. That's how it's set up with you at the actual.
Okay.
All right, now you just popped up on the screen. So you got to make sure you draw it big. Right, draw your circles, or if you're gonna draw a circle or whatever. All right, make sure you put it right over where you're talking about.
Okay. So, all right. Can you open it back where you drew those white where you drew
where? That's what I'm saying, because I don't know where you got to draw on the screen exactly where you saw me drawing it at.
Can I open the screen out like wider? Can I make the screen wider while you can I make it like wider? Because I don't see the circles no more.
No, that's what I'm saying. I took them off for you can draw exactly where you thought I had them. Was it near that yellow line right here?
Oh,
Was it near this line?
You want to see if I'm listening? Okay.
No, it's
not
that. I cleared the screen off so that way, if you go to draw it, you'll be able to see it. Oh, you know, because I had all my stuff, but all kind of calligraphy. I had my hieroglyphics up there. I want to make sure you guys have. See, there it is. See, I figured that's what you're talking about too. I wasn't sure, but I was like, she must be talking about them circles I had right there. So yeah, boom. So yeah, so you're right. So everything below that on the 5-minute intraday in terms of SPY, below that is bearish. Everything above that, especially if you can get above it to a moving average on an intraday, especially have to stop being below it for a good way that this was, right? Everything above it is bullish, right? We have this saying, right, that we all know very well, right? Because we've been very, cognizant of that. That moving averages act like, somebody fill in the blank. Moving averages act like what? Magnets. See right there? I'm going to show you something here, sis. See that right there? The further this thing move away from that moving average right there, that big moving 200 moving average. See how it worked hard to work itself back towards it? It acted like a magnet. See right there? It worked itself all the way back towards that 200 moving average there on the intraday session. Why? Because throughout the day, well, let's say just so far in the week, the market had not experienced that level of a pullback. Hold on, let me clear this. Why is this thing acting up? Okay. Okay, here we go. All right. The market had not pulled back. Hold on. Now I got to click this off the screen. Sorry, guys. 1 second.
So
hold on 1 second. Let me complete this last, because I want you to see this, because this is a good lesson. This is what they call hint, hint, wink, wink moment. you want to catch this, right? Moving averages act like magnets. See right there? The further it moves away from moving average, at that point or peak point of expansion, we talk about expansion today for a reason, right? That's what we're talking about volatility today, right? This is volatility. You saw the volatility in real time coming out of what? Yesterday, right? And I'm gonna draw it here so you can see it. See that right there? That's expansion. This is at the peak of it because they've obviously somehow made this a support. They refused to let it go below that point there. Tested it the day before. There's your confirmation. I mean your initial candle. Here's your confirmation in the middle, and then right after that, during the intraday today, that was your confirmation candle. That was your support point for that moment, or the support or the floor, right? Those three candles, right? I know I got it written out a little, but you can see clearly right there. That point right there was the point of control or the support, right? It didn't break below it. Make sense? But your expansion point is all the way from here, right? Let me change the color of the marker so that way we can see it firsthand. The top was here. Here's your bottom. All this in between was what? Wall Street looked at it as what? Money. And we can get the market anywhere close back to that 200-day moving average, that's a win for them. Now, even though the 200 moving average was downtrending into today, because guess what? It was still trying to move. It's moving along with what? Price action. That's what price action does. The moving average trails the price action, right? Or the price action some people say the price action trails the moving average. Either way you look at it, it's trading in relation to how much inflow is coming in, and it's trying to respect the value of this. It's going to be any kind of what? Retracement of the market back towards it, right? And that's what it did. It retraced all the way back to it, but couldn't break above it, right? So even though it felt throughout the intraday like, oh man, this thing just up, it's down, it's up, it's down. I don't know what they want to do. Well, that's just because the market's trying to also what? Play into the options market too, right? Because people buying contract, people closing out contract. It's hurting people a little bit through theta a little bit. They delta offers again, spazzed out a little bit. We're talking about Greeks on that perspective, but outside of that, if you just stayed patient, for the most part, if you bought calls, let's say at the bottom of that point when it kind of was airing apparent that was going to be the pivot for the morning, well, you did pretty well, right? That was an easy $800, right? It's $800 to $700 if you bought somewhere near in the money per contract. And I think the contracts were at that point in the money. The 450 strikes were like maybe got 170, 180, near 200, probably if that, somewhere around there, give or take, right? They end up printing out around about $700-800 a contract off that trade. If they just stayed patient and played it all the way back towards 20 moving average. Now, using this, I don't want to lose focus here. That moving average acted like a magnet off the lows because now it gave the market makers, people who were making bullish directional trades for a retracement off the lows, it gave them something to trade for, which in this case was to get back to the what? That moving average, that 200-day moving average. Because it's a demarcation line, it's a pinnacle point that everybody trades at or around to kind of establish what? Supremacy. Kind of like the same way people use a VWAP, volume weighted average price line, to kind of show you this is the line that most people want to kind of stay at or around if you trade a neutral trade, like a butterfly iron condor or something like that, right? But it also shows you whether or not the bulls win it or the bears win it. In this case, clearly the bulls they won off the low to get back to the moving average, but at the end of the day, the bears are still in control. Why? Because look what the market fell from. It fell way from up here, right? That means if anybody holding puts from yesterday and today, that then still puts down here, they're still up slightly, but they still up because the market's still lower than what their entry point is at that 200-day moving average. And it has a propensity at this point, if it can't blow above that 200 moving average and show strength, it's going to roll over. Basically, what's happening right now in the future market is an example of that. It's rolling over. It did all it could do. It went up. Oh, we're gonna win. It's like, you ever seen on the movie where people try to make it over a hill and they get close and they can make it, they roll back over like, dang, well, we tried. That's basically what's happening right now. So everything above that 200 moving average, again, is bullish for that reason, because it shows that we was able to establish supremacy. Anything below it is bearish because they could not break that major marquee point. Does that make sense? That's why we look at 200 moving average for that reason as a massive point. And we use the ideal of what? Moving averages act like magnets, right? Let me do this here. If I do this here, clear drawing, right? Annotate. Let's go, use yellow, right? I'm going to show you what I'm talking about. It's going to be in the oval form, but you can get my point. At every peak to trough moment, you're going to see this thing tightening down. All this is just the magnet aspect of the market playing towards that 200-day moving average. See right here? It's getting smaller and smaller. This one here was kind of a little bit more expanded, but it's still within the same context. See right there? Y'all see those circles there? That's the magnification of markets happening, right? In a way where the market makers, option traders, and hedge fund managers, all of them, right, are playing towards that goal because it's easier goal to attain or try to attain once you already know, the importance or the significance of money flowing at or around it, or contract that you can buy at or around it. I guarantee when we got above 454, 455, people start buying a ton of those 458 contract strikes. Why? Because the 200-day moving average is sitting right there. Matter of fact, let's go test that theory a little bit. It should be still sitting nicely right now because at the end of the day, contracts are sedentary until the next day. Let's go see how many people bought that 458 strike, right? Let's go take it to trials here. Take that thing to trial. Let's go take it to trial, right? Let's go see what I'm talking about, right? I'm gonna show you how this stuff works, right? I'm gonna show you how we do this, right? Let's go straight
See,
to
you
the
had
S&P
zoomies up there. I see you had zoomies up there.
Yeah, that shoot, right? In that shoe industry. So I was like, hey, I was assessing a lot of little stocks going into the close. Because DocuSign was the breadwinner of the day. But yeah, I'm definitely looking at zoomies, right? Because they deal with what we call, they especially the retail, especially the shoe company too. Other stuff as well. But yeah, man. Matter of fact, we got see what they're gonna do tomorrow because they look at that earnings night quarter. They beat on earnings per share really good. They missed on revenue though, but it's all based upon guidance, because they are subjected to what? The supply chain issues just like other companies too. And they might have figured out how they can, rewrite that program by watching everybody else fall out the sky, right? Like Nike, right. That's all it is. You get smarter after everybody get thrown in the bus. You like, oh look, we ain't gonna say that. We ain't gonna talk about that. We're gonna be very careful.
Yeah.
Maybe what happened. Right. So yeah, we'll see what people do tomorrow. You keep an eye on it. So just in case. Yep. So right there. See right there, sneak, right? Anybody else that's watching? See, that's how the market work. But look, that 458. I'm finna show you. Look at that. 68,000 that was intraday. 68,000. Right? Look at the 457, less than 457.50, less than the 456, less than the 455, less than the 454, even in the money at that point, less than. You see what I'm saying? The only one that had the most is more than that was what? The 460. See? Come
they
through.
always go for that whole dollar mark.
And they go for them whole dollar mark. See, people, I would tell people we back test our information. We ain't making this stuff up. I already know everybody playing for that 458 because that was the 200-day moving average. Look at that. The open interest sitting in 9,000. Could make this stuff up. It's more than everything else on this screen besides that, again, the ones that were a little bit more higher up because that's people just playing lottos at that point. Obviously, right? Right? Go ahead, sis.
Definitely lotto.
What does the 68,000 represent on that chart? What
How
is
many
that,
people bought these contracts? Like 68,000 contracts were bought for that strike price. And this is option trade. This is just an option flow chart. So
all right, so wait, $458 is what does that represent?
That's the price of the stock at that point of a contract price. Let me say it this way. That's a target price that the market was trading at or towards at a point like I was just in there describing all that stuff I was just talking about, as far as how the markets act like moving averages. That was that 200-day moving average. If you see clearly on that 200 moving average, or on that chart again, I should say, where I was showing you right at that line, right there. See right there to the left of that? Excuse me, to the right. To the right of that, what does that thing say right there? That EM?
Yes.
Holding, MA. What's that price right there?
$451.8 and 0.4478%.
That's 200 moving average. That's telling you where it's at, right? So if they traded at or towards that price, because that was a major price to kind of trade towards, right? A magnet, right? That was going to possibly be a great contract worth buying on the option side, right? Because obviously when momentum start picking up, they start seeing the market bouncing towards that, bouncing a little bit, right? The volume's coming in. They said, okay, that'd be a great place to trade, or trade to it. Buy in terms of a contract to equate that to what the bullish sentiment that was coming into the market. Because if they could have got over that line, then the market would have been what? Extra bullish, right? Because you overtook overtook the gun line. All right, tell about the gun line, boss. You seen the movie Life?
Also, top is bullish, bottom is bearish.
I said that like a million times. You better keep up to the I
No,
wrote on the chart and everything. I wrote out there above it is bullet, below it is
I
bearish.
thought I heard it wrong. Oh my gosh.
All right, you probably got your head full. I get it, but that's why we
Oh,
You ain't got no problem. You ain't no problem. Oh, you get it.
Look.
But no, but seriously, but that's how you always look at that's why I say study those moving average 200, 50, 20, and the 9, right? And the 200 is the king. 200 is king. 200 moving average is king. I repeat, it is king. Everybody watches the 200 moving average. Everybody. Right? Because that's the major one that denotes, again, that sentiment aspect of, okay, we got something to play off of, or we got something to kind of play off of, right? Because it's that importance of a signal of money inflow. Go ahead, sister. You about to say something?
Okay, where's 200 moving average at? Or is that the difference between two numbers you're looking at?
No, that's what I just showed you on the screen. Remember the numbers you read off?
Okay, the difference between the amounts of money.
No, that's the line. That line is see right there. It's showing you highlighted in yellow. It's representing that line, that yellow line right there. That is the line. It's an indicator. It's a 200-day trailing aspect of how money flows at or around, given on a 200-day trailing basis of a market. So most times, if the markets are showing strength, they will trade at or above it. And this is intraday though. That's why I have to specify that intraday. This is on a 5-minute chart. It's trading like that on the intraday chart, meaning what happened during the day, not day for day, but that day. Now on a daily chart, it's going to look totally different. Why? Because it's now showing you what, in essence, to what everything else has been doing, right? On a daily basis, of just showing you how strong the stock is traded within its 200-day period, not within a shorter micro picture of that, right? So clearly you can see right here, right? If you remove all that, you see clearly there what's going on here, right? It's below it, right? I mean, it's below this move because the market has been in a bullish uptrend ever since the Fed has been printing money, right? And the same could be said for how the moving average act like a magnet, even for what? Even for a bigger time frame. See right there? It rolled back just a little bit slightly, right? Slightly, you're gonna see that ebb and flow, right? Like sine waves. We talked about sine waves for a reason. Every time you see a little arching moments like that, at some points you'll kind of roll back a little bit over, not a whole lot, but just a little bit, because it's still a daily chart that's bullish. Even right here at the all-time high. See that right there? It's starting to tighten back down closer to that 200 moving average. Even though it was kind of already, hitting resistance here, it began to be airing apparent that you was double topping. So now clearly that was a reason for the market to kind of move or trail back down towards the 200-day moving average. And it was tightening down from here to, to where that moving average, as opposed to all this here, that just airing opportunity, right? Just pumping, right? This is them just pumping here. Ain't nothing you can do with that. Just ride the wave. Here, you starting to see exhaustion. Why? Also look at the squeeze momentum down here. This green thing down here at the very bottom, right? That squeeze momentum was obviously hitting what? Peak momentum. It was hitting peak squeeze momentum right here. I'm gonna draw on the screen down at the very bottom down here. Wait, follow my track with a pen. That's peak squeeze momentum. Peak, as you see clearly, that's the peak. And now starting to what? Squeeze momentum started to roll over. And therefore, there goes the market too, right? So there's a lot of different factors that make up how you look at the market and assess it. Looking at all this stuff when I'm intraday trade for a reason, right? When I'm catching little plays, when I'm catching the momentum, I'm trading out the momentum much as possible because I don't want to get caught up in I think it is or my emotions. I got to see what the money flow is doing. If the money flow is showing me different, I got to respect that. If the moving average is showing me, supremacy, I got to respect that, either which side, bullish or bearish. That's just, rules of understanding how markets work. And also, I'm not the only one trading, right? There's millions of other people looking at the same thing. And they're trying to assess the same thing or something. They may see something different. Make sense? That's what makes this stuff great. But ultimately, in the end, who's going to win? Those who are more on the side of what the money look like, right? Where the money really flowing. They're going to follow the money. or they're gonna win out in the end, regardless wherever the money flow. Meaning they got to get behind the banks because that's who really control all the big money in the market is banks, hedge fund institutions, right? Again, retail only make up 11% of the entire market. 11% of all these trillions of dollars that's moving around it every day. So that's why it looks like that. Say again.
Could you go back to that chart, that one that you had on the bar chart, where you were showing S&P and for 458? Because I wanted to write down extra.
Of the bar chart. Yeah, you need to get these websites too. Now, keep in mind, anytime I go to one of these websites, y'all make sure y'all steal this stuff. Don't y'all be y'all be like, you can always follow along is my point. You know what I'm saying?
No, I got it. You said 458 though.
That was the strike price of the 200 moving average that everybody was trading back towards, because again, at that point, it showed to be a point of a point of control, right? That was where the go ahead.
I just wanted to know what the numbers represented. The negative 0.13% represented what?
You said oh, you talking about like the percentage value.
I want to know that.
Well, hold on, because options is a little bit more deep depth of conversation. Because again, like I said, I told you before, it's good because I will still explain it to you fast as I can, but this right here is a little bit more complicated, right?
No,
not that you can't learn it, but all that is. So if you follow along on your chart, you should be on bar chart right now with me, right? So go to the very top of that lane. I guess I said lane, right? Go to the very top of this page here, and it'll detail exactly what that covers, right? Now this is just a little readout of what they call moneyness, right? Let me get my sorry about that, my little stuff off screen here.
Okay, when you put your thing on it, it'll highlight what it is.
So I want you to start playing with these websites, because guess what? You're never gonna be able to master it just by from an optic perspective only, right? So get into some of them and play with them, but you hover over them, it'll tell you bar chart they'll tell you exactly what it is, right? I mean, what's the value of what it's trying to give you false readout. So in this case, the moneyness basically means the relative position of the last underlying price to the strike price. So at any point where it turned over from one position to the next, it's trying to read that, I guess from the opening price or where it opened from, and then where it closed at in some cases. But it's basically saying from how it flipped from one point to the next. Now it was higher probably at some point, and then it backed off at the end of the day because it sold off a little bit at the back end of the day. So at some point, this 458 was green, and then at the end you had that big bearish engulfing candle at the very back end of the day, that one back before the bell, and that's what probably caused it to go red. All right, but it still made money on the day because again, you see right here. Now this is another part about this. There's change right here. Difference between the current price and the previous day's settlement. That means what it was yesterday opposed to what it was today. So 458 made money today, right? Clearly. And then it made more than this at the peak. So it changed 48 cents today. So this was 48 cents cheaper than what it is right now at 189. So if it was, 48 cents cheaper than what? 189 was 189, 48 minus 189. Anybody?
48 minus 189.
Mm-hmm. How much is that?
That's 41 cents, $1.41 cheaper.
So that means this contract cost you $1.41 in the very beginning, right? Meaning from yesterday. And it gained 48 cents on the day, right? Per contract, right? So roughly you would say to yourself, if the market obviously bounced hard from the 450 up towards 458, basically, that's basically what it had happened. And you time that times what? 100, right? So what's 48 times 100?
That's
$48 times 100. I'm sorry. Yeah. Go ahead.
$48. Right.
So it's $48. Is that what you got? Go ahead. I'm sorry.
$48.
$48. And now you move your decimal over. How many places? How much? Now you're gonna move it over one place because you got 48 then 100. So that's just one other integer that you have to move it over to. So move the decimal over one place to the right. That gives you what?
Oh, to the right, 4,800.
No, one place. Move the decimal over one place from the right of $48. One place to the right. So just add another zero to 48. That gives you what?
That gives me 48.
No, one
$480.
extra zero to $48.
400.
Yeah,
$480.
Yeah, 480. So that's all it is. So that contract today, granted, it was more than that at the top, at the peak. Obviously, it was because again, it sold off at the back of the day. But even at the close today, it ended up making $480. So essentially, 141 turned into 480 in profit.
If I would have bought one contract for $1.41,
and you didn't sell it to the very, very end of the last minute of the market because it pulled back, it was worth more at the peak, right? But if you held it all the way into like 359, it would have been worth $480.
You mean in literally minutes? When it rose up, I gained that amount of money.
No, that's how much it was in the entire day. Look, keep in mind the entire day. This is the opening to close. Remember, it says the relative claims from what?
Oh, okay.
The relative change or the change from the beginning of the day until where it closed at. So that's just the entire day. If you held it, now it was worth more at some point because it was a lot higher, right? Meaning the stock before where it closed at. Make sense? Because it's trading in real time. But if you held it all the way into the bell, is my point. So it'd have been worth $480, but you only still paid 140 to get into it. At its peak, it was worth around about $700. That's why I was telling you earlier, it was around about $700-$800. Remember I told you that earlier? If you bought it at the bottom of the day and you held it all the way into the peak of that 458 resistance that the market was kind of pinging up against, right? At that point, it was worth about $700-$800. And you had to do it early too, because again, you're still up against theta. Again, that's another part of option where you can learn it. It's just a little bit more complicated to talk about it now because it's let the conversation to get you through it, but you can learn it, right? That's why I talk about
that was pretty simple.
And I try to make sure I keep it, as applicable as possible, because there's other stuff to it, beyond just, the usual course, it's more to it. Oh, let me get my bar back up here. Okay, there we go. All right, so let me stretch this out here. So at this attempt here, when it made it from the bottom to here, the first chance, that was your time to close out. At that, when it first hit here, it's supposed to waiting to get back over here. That was your moment to close out. Because if you close it out here, that was your beeline. That was your beeline straight to the moving average that you played for a false contract, and you have to worry about any kind of theta degradation going forward anywhere from this point on. You hit your target here, you closed out, right? Because it obviously didn't close above it. It didn't bring above it. So you say, okay, well, I got to see. All right, let me go and cash out here. At that point, you made what? How many points? Basically around about what? 8 points, right? So at that point, that contract was worth, again, easily about $700 to $800 a contract. So that 141 would have turned into 700 or 800. You follow me there?
Are you doing all that?
All right. No. I think the mic open. He handling business probably. So does that make sense? You see what I'm saying? Are you with me there, Shanika? Don't worry about it.
I'm trying to open up. No, I got it. But you know what it is?
Good.
I was trying to open up the bar chart so I can see what you're talking about.
See, that's why I want y'all to get used in the habit of doing that, because that's what the workshop training is for. That's what training is for. You got to follow. Because look, if y'all was in school, y'all know that teacher like open up the tables and laptop, y'all have been right there. Like, I'm just saying. Now, I may not be Miss Meanie, right? Who are your favorite teachers? But this is actionable information that you want to be able to follow along with and learn it. Why? Because this is about getting money. Make sense? So everything we talk about is, of course, you can always go back and rewatch it, but you get my point. It's better to follow along. Hands-on learning is always better than what? Having to go back and recon learn, right? Just from a lesson you heard throughout the day. You can do it in unison. You pick up on it more, right? Your mind's gonna retain it more because you're going through the steps the same way you maybe see a person doing it, right? But that's just an extension of that, like I said. So that's why you saw, from that contract, when I was saying a lot of people probably gonna buy that 458, and we went over there and confirmed it. We went right over there and confirmed it, right? So we ain't just talking. We showing you exactly what we know, right? And lo and behold, that's why you had a lot of people buying in at that point. They were planning right towards that 200-day moving average, clear as day, clearly. And so for me, it's the same thing on the reverse side, right? I was like, okay, if they don't break above it, guess what? I'm bearish, right? If they do not break above it, I'm taking a bearish stand because that's ping there, ping there, ping there. All that became, resistance at a major moving average, not no weak one, but a major moving average on the intraday 5-minute chart. That's resistance to me. I'm buying puts there because the market overall is still in a what? Like we looked at earlier, it's still in what? In a downtrend, right? Until they break that and turn it bullish, I'm still playing for what? Lower highs. Lower highs just tell me the market's kind of ramping up to a certain point, here resistance, and then rolling back over. Until they change that direction of bias, I'm more put centric. Now I'll play pivots all day. I'll play them bull pivot points all day because that's good retracement money back to the upside. Again, we just looked at $141 turned into $800 today, right? That could have paid a couple bills, right? For whatever. Got you some lobster, right? Y'all know me. I'm going to the lobster get some biscuits, some Cheddar Bay biscuit, right? Don't do it. Get them vegan one. But no, that was a good moment where you could have made you a quick little amount of money based upon what, people playing the retracement of markets back towards that moving average. Again, acting like a magnet, it ran that thing all the way back up there to it. So that's why I be saying some of the stuff, you look at it like, you may be still learning, depends on where you're at in your training, but these like the moment I say, these are given moments in the market where you can just make you a lot of money. If you're already trained and disciplined to be able to deal with it, these are the moments where you get paid. Why? Because the markets are volatile. They're going to give you that level of movement where you can benefit off of it. That's why I like volatile market, because you get a lot of people trying to trade. I mean, they really try to open up their little game plan. All I'm doing is using the moving average at this point. I already know what's happening. I see expansion. I see divergence, convergence coming back. And then I see divergence again at some point, either up or down. But more in case this is a resistance hit, this coming back down. Until they can prove me different, it's coming down. And sure enough, on the back end of the day, it came down, right? That's why it lost a lot of premium in that contract in the last 5 minutes of the trade, because it pulled back off that 200 moving average. That candle right here, this guy right here, that was that candle right there was worth about near $200-300 right there in itself. That's different. You having $800 in your pocketbook to $480. That one candle right there. That guy right there, right? That pulled back off the 200 moving average, right? 800 to 480. Yep. Go ahead.
That bar chart is explaining one day from the morning till the end of the day, and those prices are those amounts are representative of when it started to when it ended, and the percentage changes and the volumes at how much people purchased it for that whole day. I'm not sure what the open intent is because it don't let me see it when I swipe over it. And that last one.
No, it does. It tell you what it is. So you hang it, hover it over the open INT. That means open interest. That means those people that had it the previous day and they held it until the next day.
Sorry,
that's why I
yes,
say
you
learn. No, you learn it. But now when you go back and play with this, that's why I say hit everything. Go, hover over stuff. In this case, it's like a macro, you can hover over it and it'll tell you what it is. But again, this is you kind of learning and go ahead.
All right. I'm so sorry because now I got a theory, right?
And I got to go eat dinner because I'm already over out.
Okay. So for some wait, I think I opened up the whole screen in the thing. Oh my God.
What happened? What do you mean you opened up the whole screen?
How do I? All right. Can you see what I'm doing on the screen?
No. You have to be sharing your screen for me to see.
Oh my goodness.
No, you don't have to share.
I thought I opened up the bar chart, but I didn't. I think I made it bigger from your thing. So
Oh, you might
I can't
just,
see that.
yeah, no, just close. No, you got to go to your actual web browser. Your web browser, open it. Because the Zoom class is just, you'll see it because it's in one screen, from what I'm sharing. But no, just go to your web browser, open up bar chart, and then plug it in the
Yeah.
same way.
Yeah, I thought I was in bar chart, but I'm trying to get back to the Zoom, and the Zoom is showing the bar chart. So I think that's
'cause
your bar chart.
Yeah, I'm on it now. So no, just don't click on the bar chart. Let's give it the bar chart. The Zoom icon, which is to show you my chart, just go to
Okay.
your web browser and you'll see it.
You're back. You're back. Okay, so I'm so sorry. All right. So for tomorrow's supposed to be the shutdown, right? Come on.
Paper trade it.
Hopefully
You
not.
better paper trade it. You better paper trade. Ain't no using no real money around here. You better paper trade that thing.
Stop it. No, wait. Okay. Wait.
Nope. Don't even think about it. Over don't give a nothing.
Get it, Brandon.
That's horrible.
Ain't no theory.
Look
Ain't
at Mo
nothing.
talking about get a Brandon.
Well, wait a minute. But
No
dang.
theory. See, culture. So you about to spend some
You
real
always trying to
money.
rank up. I got your back, Brandon. I ain't finna let Mo do that to you, bro.
Wait.
I'm not gonna let her do it. I'm not, and then Sister Shanika, I'm not gonna let her do that to you either. Because Mo been sleeping in class for like the last 8 months.
Oh, snap. Well, okay, wait. All right. If I make sense, could y'all at least like give me one time to say, okay, you know what? That's a good break right there.
Paper trade. Paper trade it.
Yeah.
There's nothing wrong with paper trading.
It really is.
All right. I don't want to miss real money here.
You
got Weibo, Sister Shanika?
Well,
see, look, hell no.
See, don't look at it. Missing money.
Take you out the class now.
Missing money is a gambling approach. You're not missing money. The market's not going nowhere.
Okay. So
you're creating your strategy. You're practicing your strategy.
Oh, okay. So tomorrow I'll practice my strategy. But if
discipline in that word.
I will take heed to what you all are saying. But tomorrow, if the trend in some of the most important sectors of the government that depend on the government to stay open have to shut down, and I look at some of these trusts that people invested in, would it be smart to
trade against the trust or trade the trust?
Yeah.
No. You're gonna have to paper trade that. Okay, you're gonna have to paper trade first and foremost. Okay. I ain't mean to hit you cold like that, but honestly, like if it
was that easy, everybody be winning.
Right. How much is the trust?
It don't work like that, sister.
All right. Well, what if it's EFT trust? What if it's EFT? EFT.
You know what an EFT is?
Sorry, ETF.
Trade that, sis.
No, we're doing this because
you're going too fast. You're just thinking too fast. That's all it is.
We doing this because we've been there before. Like we don't want you to lose money at all.
$2.
She hype.
No, it's not $2. It's not $2. Are you gonna do an option trade on it?
Yes.
Okay, so Oba just said if it's an option trade, every option lot represents 100 shares. So if you get one lot, that's 100 shares. So is it really $2?
I don't know. Somebody tell me.
Oba just told you.
All right, so because I'm going to be
attention in class.
Somebody don't get it in class.
Somebody ain't paying attention in class.
Come on. So what? Okay, what is it in layman's term?
You could take that trade in the paper side of the house and you win.
Dang, y'all cold.
No, we ain't cold. You just gotta watch your pockets.
You want to be able to do this by yourself one day. You're gonna have to do it like that.
I'm gonna videotape this because I want somebody to I want y'all to see what's going on here. This is a mess. Tomorrow, what's like or dang.
You
All
gotta
right.
relax.
Tomorrow, I'm just gonna videotape myself, I guess. Oh, I can't in the AM. No, yes, I can. What time open? 4 o'clock, 5 o'clock?
You said what?
It opens 5 o'clock in the morning, 4, 5.
You talk about pre-market or the regular market?
Oh my God, what's she about to do?
Yeah,
See, we watching your pockets. We helping you out.
Ain't no answer. Ain't no answer.
I'm gonna get no.
What's she about to
Yeah, you
do?
got to look it up. You got to look
And
it up.
you plan
ain't
on? You can't buy an options. You can't buy no options at no 4 o'clock in the morning.
Oh, that's crazy. So what would I be buying?
I don't know what you're doing.
buying shares. You just
Exactly.
be buying shares
I tried
outright.
to tell Chris I don't know what I was doing the last time. All right, maybe I should stick to the paper. So what would I be doing at 5, 4 in the morning? What's going on there?
So
You could possibly.
It's called pre-market. That is when the market is open for people to buy and sell. The official market time is at 9:30 a.m. East Coast time. But you can buy shares and sell shares from 4 to market close at 4 p.m. And then you have after that, you have aftermarket, which is futures or post market.
And that lasts from 4 to 6, which none of the retail investors can get to. So don't even jot that down. But when you wake up in the morning, you need to
4 to 7.
what I do is
Central Standard Time here.
So 9:30.
You on the East Coast?
Yeah.
Okay, so it'll be 7 p.m. your time is when the market closes officially.
Market. That's New York, right?
Post market closes at 7. So from 4 to 7 is post market. Pre-market is 4 to 9. Or 4 to 9, 29, 4 to 9:30, whatever.
4 p.m. to 7 p.m. East Market opens and then closes at 7.
I don't know what you just said. You confused.
Dang. Okay, 4 p.m. to 7
Pre-market is 4 a.m. to 9:30. Regular market hours is 9:30 a.m. to 4 p.m. And then from 4 p.m. to 7 p.m. is aftermarket or post-market.
Okay.
Which you can't trade. Like you don't have.
Yeah, you can buy and sell shares, but you cannot buy option contracts.
Can't buy option, but I could trade.
Yeah, you can buy and sell shares. But the only thing you need to be buying and selling is the paper trade account.
It's it. Dang. Okay. So 4 a.m. to 9:30 a.m. is pre-market, which I cannot participate in.
You can participate. You just can't buy options.
You know how you can participate? My fault, Chris. Go ahead.
No, you good, brother. Tell her how she can participate.
You can open up that TD Ameritrade, get that paper trading thing ready. You know, you can scan, you can search for your stocks that you think that you want to pick. Okay, do some due diligence early in the morning where everybody else do. You know, read some articles, get you a game plan together. Like when AE was talking about that the Palantir, that's what you need to do. You know how you gave a great good synopsis on your theory? Write that down, jot it out. And sometimes you don't even have to trade. Just think of an idea of which way the market might move for that particular stock, and just see if it follows your theory for that day.
Okay.
We telling on you.
I know y'all cold-blooded. Not 9:30 to 4 p.m. is regular market, and I need to be on a tutorial paper trail website doing my trades and not playing with real money. Correct?
Correct. So while you smile, all right, go ahead and trade if you want to. Blow your whole account. You'll be coming after.
What account? Look, I was trying to play with I was trying to trade with $5 Cash App money. I'm not putting my account. They don't even got my bank account on yet. So I don't know how. That's what
Do you have
he was like, "What are you doing?" He was like, "So how are you trading?"
Do you have Webull?
No, at least I don't.
Okay.
I don't have
Somebody
any.
need to send their sister the link to get a Webull account. That way you can trade money that's not real, and you can practice that.
You can go
do not use your real money, because you think you're using $5 or $10 when inflation is really like $2 to $4. So you got to, protect every penny you got. You got to be a penny pincher when it comes to this. This is a brother named Stock God. Stock God don't like giving up money for nothing, and you like giving up money for nothing. When you want to just hand them your paycheck, basically.
And no.
You want to pay the oppressor. Okay, I got you.
Pay the oppressor.
Yeah, I tripping. That's the whole. I went to create the account. When I seen bank account, I was like, oh no, hold up, slow down. Whose bank account? I didn't connect nobody's bank account. So not me. I don't know how that trade was getting done, but it wasn't through my bank account. So I'm trying to find out how these trades get done. And when I get on the site, that's what I'm gonna find out.
Miss Shanika. I got kicked off for a reason. The ancestors mother kicked me off for a reason, right? I heard Sister Monica in there giving me some good game. I said, they in there helping the sister out. They're in there trying to right the sistership. Ancestors kicked me off for a reason. They're like, hold up, brother. Take your deep breath, get some water in your system, right? Right, sipping candle, stone up. Had it just up with the oracles. No, but they're right. I guess when I came back, I kind of heard, the family, of course, kind of telling you a little bit of passion. And ain't nothing new to this, because again, you ain't new to this as well. The only issue is that retention, right? That's why I say this is a perspective of retention, right? It's like school. Again, y'all know this stuff go like, if you studying for a test, even if you cramming, you know exactly where to go hit those keywords, those key notes, and say, okay, they might cover this, they cover that. Well, in the markets, right, there's no shortcut, right? They're getting a full understanding, because this is what they call, you want to have full understanding of this. Why? Because this is a future value that you're finna put into the practice of play that's going to benefit you personally, right? This is not like school where you learn a subject and you're like, I may not even use that ever again, in the real world, right? No, this is real money, right? Real life, real money, right? So yeah, you want to be very thorough. You want to be conscious, and anything you do in this and learning it. So when you resurface it again, you hear it again, or, however, optically you run into it again, you're like, okay, this is nothing new to me, right? So that's why I always take the approach that I take, right? I try to go very, even though I talk fast when it comes to, because my mind's like dumping all this data on me, and it's like trying to come out. And I'm like, I want to make sure the family knows this. I want to make sure the family knows that. I want to be very clear in terms of when I break this down, that this is a moment of repetition, right? That's why I say that a lot of my live stream. And I do that for a reason, because it's a moment they have what they call like a mic check. I say repetition is repertoire, right? Repetition, repertoire. You have to go over this over and over. It's like training yourself how to ride a bicycle for the first time, right? It's repetition, it's muscle memory, and it's also mental memory and vision too, right? You got to be seeing it, your body, acclimating. So the markets are the same way. All this, I call it the ancillary data, right? The things that make up the market, the moving averages, technical analysis, fundamentals, right? The investor sentiment. If you're thinking about it and you're excited about it, if everybody else think about it too, then that's a net positive. But if you're the only one excited about it and nobody else is excited about it, what's going to happen, right? It's not going to get bought, right? A lot of people, money ain't going to probably fold into it, right? So that's why I said earlier, the markets move in terms of what? Numbers, right? It's a numbers game. You ever heard that? I'm sure y'all heard that before, the numbers game, right? It's come out of marketing, right? So we used to definitely have to be trained to understand the numbers game, right? More equals more, right? In essence to that, when you take one essence and pile on to it, of course it grows, right? Again, the eighth wonder of the world is what? Compound interest, right? That's what they dubbed the eighth wonder of the world, compound interest. Albert Einstein, right? The only thing that whooped them was compound interest. You could not understand how money, turns over on itself really fast when you begin to principal invest into it and then allow interest to attach itself to it. So an investment thesis that, the ideal of what we're trying to do here is that we're trying to bridge that disconnect in terms of the over verbose jargon of this stuff that makes it all grandiose. Like, you don't have to go to MIT to learn this, is my point, right? Because you're an average everyday consumer like I do. Like, when the last time you went to the grocery store just on GP?
Hour ago. It's like 2 hours ago.
So in there, you saw a lot of what? Publicly traded companies, product placement, right? Everything jockeying for what? Shelf space, right? Exposure, right? Who gets more shelf space? Who got more product? Who got more name brand throughout that store? That means they got ability to attract more what? Volume and through sales. Make sense? It's the same mentality with some of these stocks. If markets are excited about XYZ stock over that of another stock, and it may be a season where this company obviously does better business because this is what they call their peak season, right? Like, you think about going to Disney World. When do you go to Disney World? In the winter or the summer?
Dead of summer.
You go in the summertime, right? Because it's hot, right? Kids, right? Anybody going to get on the Ferris wheel in negative 30-degree weather, right? Unless you're the part of the polar bear club. Make sense? Markets are just that layman term. You see what I'm saying? It really is that layman term. What happens is we'll try to overthink the market, and the market be like, whoa, look, we're very simplistic, even though we're greedy. We just tell you to what? Follow the money, right? If the institutions are more excited about a scenario, and the retail traders, again, we only make up 11% of the entire market. Let that marinate. 11%, right? So that means we're a small fraction of a bigger what? Juggernaut of what? Cash, money that's moved daily, right? So the saying or the ideal of money that's moved around the market on a daily basis is around about $5.3 trillion a day. What's 11% of that? Let that marinate. 11% of 5.3 trillion, right? And that's not even what we are, but I'm just saying we just use that basic number. That's what we constitute as far as retail money and towards the market. We're not moving the needle like institution money does, right? We have moments when we have win moments, but for the most part, we're just being smart anyway, right? Because we're going to take money out of their pocket. That's what we're doing. We're taking money out of the institution pocket, right? Because they're the ones sitting on all this cash, right? And they're just moving around, they plugging and playing. And I'm speaking to the day trader energy now, not the long-term investment trader, because the long-term thesis saying, I want to stay invested in this company because I like the growth story, right? Eventually I make a pass the stock on to my children or whatever, right? If it can, last the test of time. And if not, I'll just benefit out the profit now, move on and re-diversify, go to something else. Make sense? So you're not limited, is my point. Unlike a lot of opportunities in life where you're limited because whatever that entity serves in terms of the model that you have to adhere to, that's it. You can't touch it unless they open the doors and punch the clock. Again, a job. You can't access the job until they open the doors, right? You can't punch the clock until they tell you can, right? It's limited. It's a finite value you can get out of that. That's that. This unlimited. Like right now, money is being made, which we saw in the future market, right? Money is being made right now, right? You can be enjoying your life and that money you still counting dollars. You're like, yeah, child, wake up in the morning, boy, look here, I'm going to get me some all kinds of whatever, right? Because you're trading into the ideal of everybody else kind of moving in that same value of trying to find value, right? Or we call it alpha, seeking alpha. That is tech terminology in the investment world, right? Seeking alpha. Alpha is just synonymous with what? Profit or gains, right? Which is part of the the Greek phonetic value of the market that they use as a part of their schematics of trading it, right? Neither here nor there. You'll learn that stuff in due time. So the essence of this that you want to crawl before you walk. You don't want to get FOMO, right? Because I didn't get a chance to go over the acronyms with some of y'all, but I have actually a printout of this stuff. Like FOMO basically means what? Fear of what? It's acronym. What does FOMO mean? Fear of missing out.
Fear of making what?
Missing out.
Oh, missing out.
Right. So think about that. So when you excited about learning this, a lot of that is what that FOMO. I'm just going to make it money. I want to make me so too. Right. I got my $5 off and do my thing. Right. But there's rules to this. There's rules to this. Right. And so I
But
never want to put y'all in a position where y'all get ahead of y'allself, because the one thing I'm very responsible for, well, that, again, I'm just a service like anybody else, but I'm more y'all family than it is just because, I provide a little service, right? A little training service, but I'm very cautious about you guys because I want y'all to win, right? It ain't about, the money for me, right? That's why it's $1 a day to get all this information, right? Which if you had learned it on, which you can, of course you can, but you still want somebody to help you unpack it that really has your best interest in mind, right? I'm not just thinking about you, I'm thinking about your children. See how that work?
Appreciate that, and thank y'all for.
That's the reality of the thing, because most people act like it's a real service, right? You go to a service outside of me, they ain't gonna wait on you. They're like, hey, this is our information. If you don't keep up, hey, you already cut. You already cut the check, right? They got a million other people that's, or 1,000 other people that's getting in. They don't have access, most cases, to these people individually, right? Because they're like, hey, this on my block time, I can come on and give y'all this. After that, I got a life, right? I got to go out there and drive this Rari. I got to go, take my wife to Louis Vuitton. Y'all get my point. For us, it's personal, right? And I say that us because it's a village mentality, right? Everybody that's on this live here, that's even watching on the backside of YouTube, or just in the group, because you're in there, it's personal for us, right? That's why we make it a family environment, right? Because we want to learn the places that's comfortable for us. Make sense? Where there's no pressure, there's no ego, it's nobody trying to overtalk you, it's nobody trying to make it seem like you don't know nothing. That's not how you learn. No one learns under that environment anyway. But when you learn something like this, I'm not going to really say it's complex. I just say it has a lot of moving parts to it. That's what the market is. It's a lot of moving parts. It is. But once you learn how to dumb it all down, you're like, oh, it all makes sense, right? That's why I go the approach that I do to try to make a lot of little analogies and stuff. And I try to really be very layman with it as possible. But here's the thing. It's not one setting where you're going to get all this down in one setting. That's why we have to go over and over. I used to have this thing I used to tell people, before they commit, to the service or getting training, I said, you have to at least submit at least for 3 months, right? It's not going to be no one money done, right? Because you're not going to learn all this stuff in just, 4 sessions, right? Even if I do extra stuff on YouTube, you need to be, understand that there's, a lot of wheels that have to be kind of, analyzed, right? How this works, right? Why this works this way? Why this one work clockwise? And so it's supposed to kind of all this stuff is just synonymous to you being able to know this stuff. When you shut down your computer at night, after you go through a session, or when the session's over, you got a little extra free time steady, then that's when you start doing all your research. Like, let me go back, let me go look up the definite, let me go look up what this is. Okay, he did say 200 moving average. Let me go dig a little deeper and see what this 200 moving average is. And guess what? You're gonna see videos on it, diagram, all this stuff, right? You're like, oh man, it's gonna start opening up. That's Neo in the Matrix moment. Because when you learn it, you're like, oh, this is good. I got a little extra something under my belt. Now I can go to war. Now let them give me about another good 2, 3, 4 months, 5. And that's how you start thinking, right? I'm gonna be ready, right? That's what, again, I keep using our sister Camille because that was her story, right? I took that sister from a raw state. This sister was all out the country doing shows, right? She, world-renowned drummer, right? Hanging out with these celebrities, doing other stuff on the road, but she needed another source of income that she could depend on, right? And especially it happened at a great time because even before COVID came, she was already kind of planning for that, for the future at some point where she might slow down a little bit, right? She could still break money in. So she was ready to jump right out the gate and jump out there because she was seeing me, like in my peer, like Robert Chris Street, like him, like Stock God, all you guys, we came up together. He's like no nonsense kind of guy. Like if they was on this right here trading right now, half of y'all probably been logged off because they'll be like, I ain't finna go over that again. You better keep up. That's how they thinking, right? They mild, they ain't gonna come at you too crazy, but if they feel like they go out their way to give it to you, you're very slow methodical and you don't get it, they're like, man, look, all right, man, you just ain't ready right now, right? They'll come at you like that, right? They know nonsense, but that shows you the extent of their discipline. Make sense? And ain't nothing wrong with that because some people are serious about their work. You know what I'm saying? Like that, like me coming in over there, you're like, look, let me show you how to, do you. And you be like, hold up, Joker, you ain't about that life. You ain't about that life. But in essence, but you'll be willing to want to share, because again, that's just your energy, right? Yeah. But my thing is just that I want to be able to reach people where they are, because again, to me, I feel like all of us, not just me, but all of us are being charged by the ancestors to take this information and go get their money. That's how I use. This is my motivation. I'm saying this is the form of me getting some of that reparation back because they can't bar me from it. They can discriminate, against me for race, color, creed, sex, gender, orientation. Right? None of that stuff. You have just as much opportunity as the next person do, right? They can't look at you like, Now she ain't got no business doing this. Now a bar, no, they can't stop you. And just the way we just mapped out that $141 turned into 800, guess what? Mm-hmm. Now imagine you can get consistent at doing stuff like that. Not that you can make 800 a day, because again, it comes with knowing how to make money, period, right? This is a game of base hits, because if not, you're gonna get FOMO. You're gonna say, well, I need to make $800 every day. That's what your mind gonna tell you, because you may see somebody else do it, right? You may see me, dang, your brother made $1,000 a day. He made $1,200, $1,300 a day. Hey, I could do it too. Yeah, you could, but it's gonna come with what? Preparation, right? Right? They say, what the saying goes, preparation beats a pound of flesh, something like that, right? Meaning you got to be prepared, or you're gonna lose a pound of flesh, being unprepared, right? You don't want to lose a pound of flesh, right? Like Brandon was saying, you don't want to lose money until you understand the value of what you're doing with your money. Make sense? So it's better to practice. Allen Iverson, practice. We talking about practice. Yeah, we talking about practice. You're gonna have to practice, right? You can't escape that. And you're not gonna be able to get around it, because all of us went through it. All of us. Make sense? Because it's to protect your scenario. So, and I'm not speaking to everybody. It's not just you, but we all know that, because that's the rules of engagement we all had to endure, right? And once you get that down, guess what? You're gonna start picking this stuff up like a sponge. You already got a good niche for information. Now what's happening is you get a little bit of FOMO in the mix of it. It's all jumbled up. You're like, oh, there's a lot of information, but I'm gonna get this money. Like, that's how I know I go. I was saying, I just watched, a lot of them guys that were day trading like that time, and I was like, man, I can't wait if I can get out there. But I was patient. I was very patient. I said, you know what? I'm transitioning from corporate America into doing my own thing on this level, because I had my own business stuff, but I want to do this too, right? Because a lot of my buddies come to me like, and matter of fact, my previous boss, I know I'm going on a tangent. I'm getting ready to get off. I gotta go eat. But my previous business partner, because that's how we was trained to talk to him, right? He was a billionaire. He worked like 12 billion. A guy named Mr. Larry Tenenbaum. He was my business partner. I worked with this company called Smart Circle, right? And all of us were business partners, even though he had more money than everybody, but he opened up the model where we all could receive equal value of the business, right? So I was able to get a third of everything that I brought in. Third go to him as the controller, right? Third go to supplier, and then the third go to me. So I was running the business inside of his business. And he's always make sure he registered that in our head. Like, guess what? This is just as much your business as it is mine. Don't look at the fact that you think I got billions, right? And I could bring y'all to my homes and all this stuff. That he'll just bring us out, y'all us out the stuff, go to this little, $1 million plans and all this stuff. But he was just trying to show you, hey, this is the exposure stuff that you already destined for, because you got the mindset to be here. You wouldn't be here if you didn't put in the work to get here, right? You had to perform. Well, guess what the market's showing you? In order for you to get there, you're gonna have to what? Perform, right? And you ain't gonna be able to skip the steps to get there. And it's worth the journey. Why? Because you're learning about what? The economy, the stuff that they didn't teach in school. You're getting a crash course on all this stuff. Because keep in mind, they paying for this stuff at the universities, right? Like tuitions, right? Like tuition, like tens of thousands of dollars. And they're getting good information, but they're getting baseline stuff because it's still application. We're getting application because we're doing it in real time. We're showing you, and we cross-referencing basic stock investment to options. We're mixing all that up into one. So you're getting a little bit of both. Make sense? And it's on our time, meaning we're here to what? Help each other. All right. That's what makes it great. You're gonna get it. So just be patient, and you'll see eventually it's gonna keep making, it's gonna connect the dots. Right. Matter of fact, Oba Jeremy, you on here. Oba Jeremy, in his very, very beginning, he was very inquisitive too, in a good way. That's good. And then, no, this is good. And then it began to start making sense to him. It started clicking. Right? It started making sense a little bit. Like, okay, I see what this is now. Right? I see what this means now. Okay, yeah, this makes sense. Right? Okay, I see what this is. That's how this stuff works. Right? It literally is that way. You have to be around it at least enough to where you can see it, for what it is. And it don't seem like it's rocket science, at the point where, you may hear CNBC talk about it, and then we come over and hang up with us, like we talk about it, it's like a whole new different language. All they doing is using all them grandiose terms and verbal. It means the same thing. And then they either somebody making money or somebody losing money. Either this product or this service is what, has a growth potential, or it's not. It's a short-term, staycation, or it's a long-term vacation. Make sense? Every investment is not what worthy to hold on forever, right? It's like a old school flame. Like that joker ain't laugh because that joker ain't want to clean his toes or something. I got to get rid of that joker again. But you get my point. Things that have what they call longevity or stickativity, or a good case, it's gonna last the test of time. Again, look back at the stuff that was in place when you was a little kid. What some of the companies that you remember as a little kid that's publicly traded?
Pepsi Cola.
Publicly traded. Still around, like Coca-Cola, right?
Mm-hmm.
When we were kids, again, the technology back in our time, what was the stuff that we was using back in our time? I know it might be a little older, but let's say the last 30, 40 years, what was some of the technology that was like to us that was still large in life? Obviously computers, right?
Yep.
It wasn't as many as they are today to that level of commercial use. We know about the most name brand ones, did we not? That was it. So look where they stocks at today. Look at Apple. Look at the Microsoft. Right?
Oh, yeah.
Now they way up here. When back then they were like, $5, $10, 10, 70 cents, and now them stocks way up there.
Disney.
What's the difference? Disney,
Yeah.
right? Disney World, right? Disney just actually broke out. Literally 2.5 years ago, Disney was in a consolidation just going nowhere. Then all of a sudden they got a new lease on life, streaming business, right? Because the Netflix forced them to get put a lot of their catalog onto the general public, because people got away from cable and started watching streaming television and come to use case of Disney. Why? Because they own everything on the planet that everybody want to watch. Star Wars, Marvel, you see what I'm saying? They had a catalog unrivaled. Like, how you gonna compete with that? You can't. And they own all the rights to it. They'll just license it out to people. Now they just bring it back in-house. We're gonna make money on it, 100%. Make sense? So that's how business work. That's how commerce work. That's how business reinvent themselves, right? They got to figure out how to stay relevant, because that's investment dollars they're saying to say, well, hey, good job, guys. Y'all figure out how to, make another mousetrap, right? A better mousetrap, and keep the money still rolling in, right? Look at Ford. Ford was left for dead. The stock was basically in its heyday, but look how Ford been around for over 100 years. And the stock was kind of like, okay, we just pay out a big dividend. We still, trading off old face, old $100 skinny one. And then they got a new lease on life because of what? Electrical vehicles. Look at the catalog of stock, cars that they can turn into electric vehicles. They got a stable of cars they can turn into electric vehicles, don't they? Think about the Bronco truck, right? Think about all these cars that, as kids, like that old Ford Taurus. Now that could be an electric vehicle one day. Let that marinate. Make sense? So that's reinvention. That's commerce. That's innovation. And that's them having a leg up because they've already established a portfolio or a legacy for themselves, or a name brand. And here they go. Our brother Andre, right? He do a lot of dividend-based investing, right? He just playing and living off dividend. Man, he want to grow his dividend account, right? He can live off dividend for the rest of life when he get older, right? Retirement, right? General Mills is one of his favorite stocks. What do General Mills sell? You know the company General Mills, ring a bell as soon as I say it. What do they sell?
Cereal.
See? Not
Cereal.
rocket science. Not rocket science. Make sense? So you connecting dots just by going inside your house, looking in your cupboard. Like, let me see if the company public traded. You plug it in. Oh, they publicly traded. Interesting. This medicine I got in my cabinet. Let's see if who the mother company is company. If they have this company owned by Janssen. Oh, they owned by Johnson & Johnson. Roche. Oh, this is a publicly traded company. Eli Lilly. Oh man, this stuff. See how that works? So you got a plethora of things around you that can keep you engaged. And the ideal is trying to figure out, where are people finding value at, right? That's what the stock is. You're trying to find value, if it's valuable or not. Nike, not rocket science. You've been wearing Nike since forever, right? Most people have. Yeah. Nike been around since forever, right? Old school Nike, right? Yeah. And look what the stock at today. Back then the stock was basically, whatever. And now it's sitting up here dang in $200 a share. See, it's like that kind of stuff, right? That's a younger person would understand that instantly. Okay, this a stock of my generation. Like everybody been wearing Nike forever. Like even my mom and dad wore Nike, and we just make it just as much popular it is today than it was back then. Guess what? I want to invest in Nike. I like the stock. I like the shoes, right? They're investing it on the strength of just that alone. Nike's still going to be innovating well into the future. Are they not? I mean, actually, who's the truest competitor to Nike? At one point it was Adidas, but it that kind of society, then Nike came back, right? So that's how this stuff works. So it ain't rocket science. Just take your time, be patient with it, learn it methodically. to the point where you don't have what they call aha moments. You want to have less aha moments as much as possible. You know what we call that in the market? Paying tuition. You don't want to pay tuition, right? If that's the case, go to university and you pay them $20,000, $10,000. You don't want to pay tuition. That just means, you know, that's a bad trade that you could have probably made better by being a little bit more patient, right? But it's a learning moment, right? It's like, okay, I get a little, they got a little $10 from me. They got a little 100 from me, right? Again, my biggest loss in the stock market was like 28,000 in one day trade.
What?
That marinade, yeah. It was $28,000 trade, a day trade. I lost 28 grand in one trade, and it was a day trade, not a swing trade, but a day. It was some error in it on terms of the company too, but it was a 28,000, yeah, 28,000, right? But I've made, you know, more than that in day trade too, right? My biggest was like 53, I think about 53,000 in one day in a day trade. And so once you get in the habit of understanding how this stuff works, you know, you say to yourself, okay, well, if I did it once, I could do it again, right? That's what every human mind sets when we've been through something, right? I could do it once. If I lost a little bit, I can get it back, right? In this case, we're just trying to establish consistency, right? How can I be consistent at being able to hit my goals? Understand what I'm doing, number one, right? Be cognizant of it, right? Not just jumping out the window, because you got to know what you're doing. This is your money, right? I make this synopsis right here that I'm really finna go. I got to go eat. I keep saying it.
Yes.
This is a game of bread and meat, right? They said, you heard that saying before. It's a game of bread and meat. If you don't move your feet, you don't eat. Imagine if the whole world ran on that thesis. How many people would be out of a job right now? A lot. And we had to depend on performance-based industry as opposed to just ride the clock industry. A lot of people be out of a job because they ain't gonna perform. They ain't built for it, right? They ain't built for the kills. They say, as they old school, they say you keep what you kill. They just riding the clock, right? They doing just enough to keep the money coming in, but they ain't built to do nothing extraordinary outside of that, right? That's why I salute the entrepreneurs. You're an entrepreneur. You know how this stuff go, right? A lot of people only hear entrepreneur. You know what it's like. You got to get up and make it happen every day. Avoid somebody that's cutting you a little check. Which one is better, right? Entrepreneur energy is always better because you have freedom, right? You got to be responsible too, but you still got freedom. That's worth more than a pound of flesh. Right? I wouldn't trade that for the world. So yeah, I'm getting better like everybody else. It's a journey. That's why we say it's a marathon, not a sprint. Take your time, be patient. Patience pays in this. Because look, you just getting started. But guess what? You the Oracle, right? You seen the movie The Matrix? When Neo and them had to go see who?
Mm-hmm.
The Oracle. And she had to have her game tight before she gave instructions. Did she not?
That's right.
Well, guess what? You got them babies back there. You got to give good instruction. You can't get them half information and excitement, and they don't want to hear all that because they jump out the window too soon. They can be like, this joker just set me up. Well, look at her. Well, wait, I'm gonna push out and rush out traffic one day in that wheelchair. Get on out there. Right. That's how you set me. I lost all my no, that's it. You want to give good instruction. So that's why this stuff matters. Make sense? So let's learn it at the pace we can get it. And it's good. Ask questions because I want you to ask questions. I want you to be interactive, but I want you to learn this stuff too. But that's why I say it's a workshop for a reason. Get interactive. Get on the charts when I'm watching them, doing them in the same time. Follow along with me. So while I'm opening up, you open it up too. You seeing exactly what I'm doing, right? You're hitting it just like I'm hitting it. You seeing it. You getting your hands and your mind entertaining together. So it's what? It's soaking in all that that memory, right? That's memory, right? You're building it up, right? And then eventually you'll see it's going to start to evolve. Make sense?
Of course. And thank you. I appreciate very, very much.
Anytime, because we're going to make sure we get this all together. That's why I say it's a village. That's why we say Ubuntu, right? Which mean what?
Yeah, Ubuntu for real.
I am because we are. Stop playing, right? I ain't just wearing this shirt because it look good. I ain't trying to look. I ain't faking the front. I'm trying to get all this. I want all this here, right? I want all of this here, right? And I want all of us to take that serious because we've been, we get money, but we don't know how to retain money. Black people got spending power, but we ain't got no investment power. That's a problem. Got all these trillions out to spend, but ain't nobody trying to figure out how to put that money to work. We got some kind of block in our head to make us try to feel like we got to keep trying to convince white people that we got it. Like, them people don't care about you, your little penny doll. These people working with wealth they didn't stole from everybody. 4 corners of the earth, they didn't pillage everything. I'm just keeping 100, right? I got white constituents that follow my channel. That's fine, but they know I'm no nonsense. I keep it real because it's still all about the data. This ain't gonna do it. No culture, personality, bump all that. People learn how to either they're gonna get down and lay down and take it, or they're gonna have to get it some other way. That's just the history things, right? I'm not gonna overlook history. That's just facts. So for us, we trying to play catch up, right? Some of us keep it 100. We don't have a luxury to have luck, so that's why this information is important. When you can get it, learn it, right? Retain it, take your notes, go back and rewatch it, and then hop on YouTube and just go to exploring. Let me put in with this stuff I'm like 2 in the movie. Let me see what, how to day trade, right? Let me go read psychology, and understand how psychology works in markets. Again, the rabbit hole goes deep in this. And I love it because, again, it really overtakes your free time. That's why I asked y'all that earlier. What some of the things that you watch or your favorite show?
Mm-hmm.
Get what your favorite show going to start becoming over time. This. Because you're going to start, find a way to get profitable in this. You like, man, look, I didn't make me $800 a day. I didn't make me $1,000 a day. I didn't make me $3,000. Look, I ain't got time. Because I'm trying to figure out how I can get, see what I'm saying? That's what's going to make you get initiated. I'm not going to get you initiated. What you're going to be able to do in the market, what's going to really initiate you in this.
That's right.
Make sense? Because that's what do it. You get it. All right, I'm gone, guys. But no, enjoyed it, guys. Again, it's recorded. Good. Go back and watch it on YouTube. Again, today's topic was what? Planning for growth, right? What better topic? We talked about it, and now y'all see this is planning for growth. Right? It's weird how this. Hold up. Where my things at? Let me get my crystal, man. Thank you, ancestor. Right? And I'm gonna get spook on y'all now. Thank you, ancestor. That's the reason why.
About it. You about to get energetic, electrifying, energetic on us.
Right? That's why we tied it planning for growth, right? And then understand the volatility because our lives are volatile as well. We're trying to subdue all that volatility and get what, get paid, get ourselves under control, our emotions under control, our life under control, so we can start looking at life a little bit more loose and not feel like we ripping and running. Good point today. So happy y'all enjoyed it. So thank y'all for tuning in. It's recorded. Our sister Angie, I know she came in a little late. I saw her pop in. But you can go back and watch it, guys, if need be, and just look for our next one because we go live every Thursday when we do our session. And of course, like I say, don't hesitate. You got questions, hit me up. Again, I'm approachable for a reason, right? I'm not them people that's saying, speaking from up here, up high, and then you can't connect to them, right? They hidden somewhere. I'm not that kind of guy, right? Hit me up. All right. So that's it. So I'm gonna get out of here, guys. Go eat me, my little late dinner here.
Thank you, guys.
All right, go look at investing.com. So if nothing else, if y'all before y'all close y'all out tonight, right, go look at investing.com, see what that future market looking like, because the market is what? They all excited because this whole, all this other stuff that's going on. So that might give you something to look forward to tomorrow, right? Just kind of track what's going on with the markets. All right. Any last words, guys, before we get out of here? We always do it the right way. So
sorry for beating you up a little bit early.
Go ahead, Oba.
Huh?
I said I was sorry for beating you up a little bit early because we actually do care. Instead of buying a program where you don't even get a chance to speak to a person, you just gotta follow videos or videos. We're here to help you out. So
you talking to me?
Yeah. No. Yes. I'm talking to you. Yes.
So they'll give him some good game earlier, right? He's just saying that he care, I guess so he can speak for himself, but that's what he was saying.
Oh, thank you, Brother Brandon. Thank you very much. I can be very sensitive, but in this aspect, I am not at all, and I'm very determined, and I do catch on quick. But I think education is way more important before you go being hasty, and I definitely don't want to share misinformation. So I'm just anxious to have certain experiences and gain information, but information gained first will make those experiences better. So thank y'all for staying on top of me with that.
What I'm finna hit it with, y'all. This is why I keep saying this for a reason, right? This is one of our monikers over here. Not that you have to use it, but we use it, right? And I coined it that way for a reason. Knowledge brings power. Power equals profit. You cannot establish power or profit without proper knowledge. You know this, right? All of us know this too. We know this. Right. That's how we've been getting pencil whipped and, culturally whipped and socially whipped for a long time because we want to skip the knowledge part and go straight to what? I got power. I need to get the profit. Right. That's not how this stuff works. Right. These people got to lid on your growth for a reason because you're dangerous with it. That's why they're trying to keep your kids from getting it and they're trying to miseducate them. So guess what? We're not going to do that over here. Knowledge brings power. Power equals profit. Get in the habit of reciting that, because guess what? When you say that, you got to be responsible for that knowledge part, because that's the first step to get to the power. Once you get the knowledge, you got the power, you can make moves. Then you'll start the dots get connected, right? So y'all get it. So that's one of our saying. We're gonna get the t-shirt coming. We've been putting it off for long. I got to get on the main line with Sister Kiana. I need to go and do. I've been putting it off for years now, but we're finna get these t-shirts out. Everybody got their t-shirts out for whatever, but these are things that we actually hold true to, because it's a part of our existence of what we're trying to accomplish here. So I think that's gonna be great. But I'm on that. But thank you. Anybody last word? I'm sorry. Any other last word before we get out of here, guys? Anybody else? Anybody else?
No, just thank you. Just thank you. I'll catch up.
No worries. No worries. You already know it's recorded, sis.
Asante Sana.
You know the reason why DocuSign dropped like that? What caused that? Because it fell like almost $70. DocuSign.
Oh, Brent, that was you over Jeremy. Yeah. So again, you know why I failed. The same thing with this, right? So I got to say that for that reason, because we just talked about that for a reason. Well, you came in late. That's why you came in late. But this title, this discussion was planning for growth, right? So stay-at-home stocks, well, basically was kind of premise to that, right? As opposed to stocks that are now, where we're kind of coming out of this ideal of the virus being a hindrance to our, to be able to get back out in society, right? Well, DocuSign was clearly what? A stay-at-home stock, wasn't it?
Yeah.
Like Peloton, right? Like Zoom, right?
Cool.
Now, yep, their use case is what? It's been pared back now.
Yeah, because I think the president, when he spoke earlier, he said it wasn't going to be no lockdowns or shutdowns.
That too. See, that's probably telling me. See, that's why I say what makes us great about it, because there's so many different moving parts of it, but that's why we kind of stay close to that aspect of information too, because that's a part of us being able to read the tea leaves, right? They control a lot of their movement, or the movement in some of these assets, because a lot of their policies are dictated whether or not these companies can make money substantially or not. That's one of the scenarios that was just made for what? It's online documentation. Keyword online. If everybody offline now back into the cubicles at the job, the use case of DocuSign is not going to be as exorbitant as it was when everybody was at the house quarantine. It makes sense. That's a quick base case understanding. See what I'm saying? And now it just starting to kind of pare back all that with extra premium, right? The stock was based at what? $30-$40 about a couple years ago, and it went all the way up to like what, 400, they ain't there, 300 some odd dollar.
Yeah.
Right. So now it's pulling back, and it's gonna pull back egregious more so now, because guess what? Now there's a case where people rotating out of the high premium based stock that have high PE, and they're trying to find those stocks that were more left for dead that had low PEs that they can ride back up. Remember we talked about sine wave, the waters of noon? Guess what? That's synonymous. So yeah, that's why they got taken to the outhouse today. The out shit. Crowd before that, Salesforce CRM before that, right? Okta had a little boost today. They're gonna be hit or miss, but for the most part, them companies in trouble because they got rich valuations before what? All this became a scenario where now the vaccines are starting to come out. People feel like they can get back in the real world, and they don't want to go back to lockdown. Y'all think these people are going to go back to lockdown?
No, they ain't.
Y'all keep thinking that January 6th ride on Washington was a one-off event. Try to put these jokers back in lockdown. When they already kind of pushing back against this vac stuff anyway, boil again. They ready to turn up. Right? Y'all know, y'all live in the country like I do. Act like y'all know what's going on for real. You think little Kyle Rittenhouse and these little, remember I got the little kid that shot up Michigan at school the other day, a little white kid in Michigan. Went up there blasting.
3 people wounded, like 8 of them.
Yeah. He's sitting up in court today, straight on like he Jeffrey Dahmer, like it ain't like this is the everyday for him. This is the country, man. This country's turning up. Y'all get it though. I ain't gotta be one to tell you that, but that's why you got to be cognizant of what's going on too, because that in itself affect policy, right? They've been trying to push gun stuff anyway. But oddly so, right? Guess who had earnings tonight with all this gun shooting that happened? Smith and Wesson. Go figure.
All right, give it to
Go look that stock up this evening and see what they did on their earnings, right? They had earnings tonight. Smith and Wesson, the gun company, gun maker. But even stuff like that, you see what I'm saying? When a shooting happening, when a shooting happens, what kind of pressure do you think that does to gun stock? So I'm saying it could be pressure, right? It could be. But see, everything is tied at some point, is what I'm saying. geopolitically, social, whatever. We get it. So that's how you want to look at it over Jeremy too. Everything has this, its moment, a cyclicality value, a seasonal value. We know that company's model is what? Online documentation. And we know they got a rich premium because of everybody was at home online. That's not the case now. Make sense?
Yeah.
So they're gonna have to pare back some of that premium. They still worth a good little amount. Right now, they still rich. But guess what? That's a good thing, because if you still like the business model, you want it to get a little cheaper, because guess what? You can always ride the dip back up. That's how the investment has, that's the ultimate thesis of this, right? We want stuff at a discount, right? And we want stocks that have good, moats or good business models too, right? DocuSign has been trying to prove itself. It's a good use case. It really is, but it's still rich. Let it come down a little cheaper. Then it might be a good buy, right? And so, yeah, guess what? Them contracts that DocuSign, that's why I posted that before the bell. You said I posted that. Did you see that thing I posted in the group?
Yeah, I seen it.
You seen what did that thing say for put the call ratio? I don't know. You probably ain't remember it. Yeah, but the put the call. I ain't gonna even try to click on my screen. Already locked up once. If I try it again, boy, I'm gonna be out of here for real. But let me get out of here easily, man. They're trying to lock up. I'm gonna show y'all, but you can pull up. It's in the group. But again, it's stuff like that. Following it, bar chart it, take it to earnings whisper, take it to tip ranks. Go through the whole gauntlet. They're trying to accessorize that stuff, and you'll see. But a lot of the stuff are just rich premiums, right? And it's end of the year, tax loss harvesting season coming up. You finna ring the register, right? For tax incentives, right? They finna ring the register. They've been riding good. They finna take profit. Even with earnings beats, they'll still take profit, right? So we got to be conscious of that. But again, the 190 contracts, I got to say this for the family. The 190 contract for the for DocuSign, I think they were like what, 50, 60 bucks, 70 bucks. Guess how much they're gonna be worth tomorrow morning? Anybody want to take a guess?
At least $1,500, $2,000.
About $2,000 to $3,000.
Huh?
Yeah, $70 going to be worth about $3,000 tomorrow.
Yeah, because it fell. It's at like 160 something right now.
Yep. So that's already about what 20 30. That's about what 2,500 right there, $2,400 right there.
And then with it being Friday, it probably ain't gonna help it. So it probably sell off a little more.
Hello, because there's a gap down there that got to get filled. We talked about it earlier before you came on. It's a gap down there got to get filled. So $70 going to be worth about $3,000 tomorrow.
On a put? On a put?
On a put buy.
Now, see, that's not cool.
See, you're gonna catch from all over again. I'll figure it out. Good night, everybody. Y'all have a good day. Good night, see y'all. Everybody,
all right, good night.
Y'all
peace. No, peace.
Peace, everybody.
I'm going.
We'll see y'all in the group. I may get a chance to go live tomorrow on YouTube. So if y'all around the market tomorrow during the daytime hour, if you see my go live, hop on. We'll talk about it again. Right.
All right. That's a bet. All right, you too, y'all. Peace, power, and profit.
Salute, family. Salute, family. Peace, everybody. Good night. Good night.